Oncologists, or ASCO's annual meeting. Angelica Peebles joins us now with what to watch for in this very, very big industry conference. Angelica.
Morning, Dom. That's right. ASCO was the largest cancer meeting of the year with major developments on the latest advances in cancer care. Now, this weekend will be a big one for breast cancer. AstraZeneca and Gilead are each expected to make the case for using their respective drugs earlier in the course of treatment. AstraZeneca will also share new data on the company's immunotherapy, Imfinzi, for gastric cancer. Merck is another one to keep an eye on. The company yesterday announcing that it's withdrawing its FDA application for a lung cancer drug after the drug didn't significantly increase survival. Now, the drug was a key piece of a multi-billion-dollar deal that Merck struck just last year with Daiichi Sankyo. Excuse me, I think it was 2023, getting my years mixed up, for a next-generation target cancer drug. And so we'll keep an eye on shares as they explain what exactly went wrong there. And Johnson & Johnson and its partner Legend will present data showing their CAR T therapy keeps 1/3 of multiple myeloma patients in remission for 5 years after this one-time treatment. And J&J will also be sharing some early results from another multiple myeloma drug, an area that they've been investing heavily in. And J&J CEO Joaquin Duada will be joining us on Squawk Box a little bit later this morning to discuss all of these advancements and how he's navigating policy this year. And on Monday, don't miss our interview with AstraZeneca CEO Pascal Soriot about the company's biggest advances in breast cancer and much more, Dom.
All right, Angelica, with ASCO, there's always a lot of focus, obviously, on the cancer side of things, but you mentioned myeloma quite a bit. Is this a situation where blood-related cancers are going to get a lot more of this kind of attention from investors in the coming quarters and years?
Well, there has been a big focus on multiple myeloma and actually other blood cancers as well, because you can use some of these newer therapies there. So the one I mentioned from J&J and Legend, that's what's called a CAR T, where you actually take someone's cells out, you sort of rejigger them a little bit so they can actually go and attack the cancer, put them back in. And that's been a really promising area. It's something that you can do with blood cancers that we haven't been able to crack with solid tumors yet. And so that's one reason why you've seen so much investment there. And I'm sure you'll hear from J&J today that there's much more to come in that space, Dom. All
right, Angelica Peebles with the latest on a very big cancer industry conference there. Thank you very much for that. Coming up on the show, the Trump administration pulling the plug on legal action against one of the crypto industry's biggest platforms. What the move will mean around the White House's softening stance on cryptocurrencies. That story coming up. Welcome back to Worldwide Exchange. In another victory for the crypto industry under President Trump, the SEC is formally dropping its lawsuit against Binance and its founder that accused the crypto exchange of illegally serving U.S. users, inflating trading volumes, and commingling customer funds with their own and others. CNBC's own Mackenzie Sagalos is in Las Vegas and has been tracking the fallout from this story. Fallout's an interesting word to use there because it isn't just fallout, it's just the ripple effects of what could happen behind this. Does it feel as though this is one less overhang for crypto prices going forward?
Well, this was certainly the last big case that the SEC had against the crypto industry, and the agency filed this dismissal with prejudice, meaning that those same charges can't be brought again. Now, Dom, I sat down with SEC Commissioner Hester Peirce here in Las Vegas about an hour after that news broke, and she's been really helping to lead the agency's crypto reset. She told me that this dismissal reflects a broader shift away from sweeping crackdowns and toward clear case-by-case rulemaking after years of regulatory ambiguity.
We didn't have a clear set of rules. There were a lot of questions about how this particular activities in the crypto space intersected with our existing securities laws. And so we're trying to take a step back, use our regulatory tools to write those rules, and then enforce those rules.
But Dom, what's striking here is just how many cases are being tossed. The SEC, the country's top securities regulator, has now moved to dismiss or drop more than a dozen lawsuits or investigations against crypto firms, including Coinbase, Kraken, and Ripple. And Binance was really the whale here. So, you know, this was the final regulator that needed to settle with Binance after that $4.3 billion settlement that we saw between the DOJ and other regulators and Binance in November of 2023.
Mac, this is also, as we very well know, an administration that values deals, deal-making, kind of success along those lines. Does the Binance group, do they have ties to the Trump administration? Is there a reason why it would be good for the administration and Binance to be on solid terms and footing?
It's been fascinating to watch this reversal of the relationship between Binance and the U.S. government. It goes from settling over AML charges to the tune of $4.3 billion to now forging ties with World Liberty Financial, which is a crypto project tied to the Trump family, where 75% of profits flow to Trump-related entities. And what we've seen is, a couple of weeks before Binance listed USD1, a U.S. dollar-pegged stablecoin launched by World Liberty, you've got Changpeng Zhao, who is the founder of Binance, filing for a pardon. And then you've got an Emirati state fund called MGX investing $2 billion in Binance in USD1, which is that Trump-linked stablecoin. At the same time, they're both coming together in Pakistan. You've got CZ now on the advisory board of Pakistan's newly formed crypto council, at the same time that World Liberty Financial is signing a deal with the government to help them with their inroads into blockchain. So a lot of overthought there in the last few months.
All right, eventful for sure in the world of cryptocurrencies. Mackenzie Sagalos, Matt, thank you very much. Well, have a nice weekend.
Thanks, Tom.
All right, well, coming up ahead, the one word that every investor needs to hear today and the stock pick that every investor needs to know, plus Gap, Costco, American Eagle, Ulta Beauty, all, as you can see, they're on the move, closing out a very big week of retail earnings results. The sector names that our next guest says are her big winners from the season. We'll be right back after this.
what's ahead.
Welcome back. Time now for your big money movers, retail edition. Shares of Ulta Beauty popping on an upbeat outlook despite warning of shifting consumer demand around tariffs and inflation. On the flip side, shares of Gap and American Eagle are sinking. American Eagle out with earnings that missed estimates thanks in part to a $75 million inventory write-down. It's also pulling its full-year guidance, citing what else? Macroeconomic uncertainty. For its part, Gap delivering an earnings beat, but says without mitigation, tariffs could cost the company as much as $300 million. Their CEO speaking on Mad Money just last night, telling our own Jim Cramer that his company is working to diversify.
We've already mitigated over half of the anticipated impact of tariffs. We've done it through adjustments in sourcing, manufacturing, assortments, and we remain absolutely committed to achieving additional mitigation over time. We diversified our sourcing footprint. I mean, the last time we chatted, Jim, I told you, China was less than 10% of our sourcing. Today, I'm telling you, it's less than 3%.
All right, joining me now is Stacy Widlitz, SW Retail Advisors President. The commentary that we got out of Gap is interesting because in some ways they're trying to add some more color to the overall tariff narrative, but it's one where it seems to impact certain companies way more than others. So as a retail analyst, how are things shaking out in your mind?
Yeah, Dom, Gap has absolutely been on a tear, and you saw positive comps at the Gap brand and positive comps at Old Navy. That's been almost 8 quarters for both of that turnaround, but of course impacted by tariffs here that could potentially hit their bottom line by 10%. So that's pretty significant, and investors reacted to that. Again, you've heard from all the retailers. They're doing what they can. They've already moved largely out of China. They're trying to mitigate and cut costs elsewhere. But, there's little you can do. You've got the 30% tariff from China. You've got 10% from elsewhere. So second half of the year, most retailers are warning, we're going to get hit here. Clearly, they're performing. They're selling at full price, while American Eagle had a big fashion miss and an inventory write-down, completely different situation.
What exactly then do retailers have to do to tell investors that their company is going to be all right, that their companies are going to be okay? Do the CEOs have to address things specifically, even though the uncertainty cannot really be resolved until we have certainty out of the administration with regard to tariff policy?
Yeah, Donna, absolutely. I think it's I think the right thing to do. Gap came out and said, here are the cards. Here's how it lays out for the year here. Here's the impact. Here's what we're doing about it. We've already mitigated half of the impact, and spell it out, and also tell us about what is plan B in terms of changing your sourcing. Can you change your sourcing? So the more information, the better. And, they certainly took a hit yesterday, and expectations were incredibly high for Gap. So, they're talking about Q2 kind of flattish sales. So that wasn't overwhelming compared to how strong their business has been.
We've talked a little about the idea that you're trying to tag winners and potential losers in this kind of tariff regime. Let's stick to the winners for right now. In the coming quarters, who comes out on top?
Right, let's be positive on Friday morning. You saw Ulta last night. Their comps were up almost 3%, well above expectations. And, it was interesting because we know that the beauty market has slowed from its super high growth COVID rates. And I think there was also a lot of concern in the market about were they promoting, were margins going to be impacted? And the answer was no. They actually are promoting in a smarter way. There's tons of newness. They're doing a lot of exclusive brands in the store, and their traffic and their ticket was up, and there was nothing to complain about in terms of their earnings and the stock's reacting. So, and that's really continues to be one of my top picks.
All right, and then before we let you go really quickly, Stacy, is there anything to glean about the health of the consumer based upon what you've seen this earnings season?
Yes, I think, you've looked at the winners and you call out Urban, you call out Hollister, you call it TJX, you call out Walmart, Costco's numbers were amazing. The consumer is about value at the moment. And clearly we've heard from the likes of Kohl's saying the middle to low income consumer is trading down. They are under pressure. So Kohl's is going to offer more coupons. You never want to hear that. But again, it's like the names that are winning in terms of brand turnarounds, Gap, Urban, and of course value, Costco, Walmart, in this inflationary environment will continue.
All right, the focus on value is going to be a big one in the coming months. Thank you very much, Stacey Woodlitz. Have a nice weekend.
You too.
All right, coming up on the show, closing out what's been a magnificent May, markets are continuing their post-tariff bounce back. The sector our next guest says could be hot heading into summer. That story when we come right back.
Now,
Hour, a check on a few of the stories we're tracking this morning. A federal appeals court granting the Trump administration's request to temporarily pause a lower court ruling, striking down most of the president's tariffs. That means the tariffs will stay in place for now until at least June 9th, when both sides have to submit legal arguments. The president is calling on the Supreme Court to weigh in while slamming the trade court's ruling as horrible and political. The European Union's trade commissioner revealing on X this morning that he had another call with Commerce Secretary Howard Lutnick, adding that the two are staying in permanent contact. The Justice Department formally moving to dismiss a criminal fraud charge against Boeing over 2 plane crashes that killed 346 people. The DOJ also asking that an upcoming trial connected to the matter be canceled as part of a deal announced last week with the aerospace giant. And Dell shares climbing higher despite mixed first quarter results. Earnings missed expectations, revenues beat. The company offered a stronger than expected forecast for the current quarter thanks to artificial intelligence demand. Now we are ready to wrap up the month of May. The Dow and the S&P are on pace to break their 3-month losing streaks. The Nasdaq looking at its second straight month of gains. Futures right now under some marginal pressure this morning. Let's bring in Mark Malik, the Chief Investment Officer at Siebert Financial. Mark, this is a story that has been just crazy for investors if you Rip Van Winkled it and just took a nap for the entire month of April into May. You're doing okay right now, but investors, can they treat it that way? Can they still be buy, hold, long term, or do they have to be more attuned to what's happening with headlines?
It's a great question. I think the answer has to start with it depends, right? Because not all stocks are created equally. Not all sectors are created equally. But if you're talking about certain sectors, namely the ones that have driven the NASDAQ this month, like the tech sector and communications, I believe certainly those sectors are the ones that you can sort of Rip Van Winkle, because if you think about it, the opportunity in the mid to long term will transcend a lot of these sort of news items that will give us these ups and downs. In fact, if anything, the news cycles will provide opportunities for investors who are later to the game to get involved in these sectors.
Does it make you concerned at all that we feel as though this AI trade is one that the entire market has put its chips on, right? It's the one bet that everybody seems to want to make. You're not the first guest to mention it. You certainly won't be the last. Sentiment has to be a factor at some point.
Certainly. I think if you look back 25, 30 years, we rarely get this confluence of sentiment and actually strong fundamentals and expanding markets and new markets and blue ocean opportunities. I could think of maybe 2 or 3 other times in history where we had these types of opportunities, like the PC revolution, the software revolutions. You had these things where you have these historical moments that have these huge opportunities going forward and the sentiment there to drive it.
What's your word of the day?
My word of the day is primacy. Primacy is a description of a company that not just dominates an industry, but creates an industry, designs every bit of the moves in the industry, and it's kind of, I guess it kind of fits in with our discussion today and what has happened this week with NVIDIA's earnings, where they've proven to be anti-fragile, another one of these words of the day that we're talking a lot about. You rarely see something like that, but a company like NVIDIA, where they literally dominate the entire stack of AI, which is a growing and expanding total addressable market, you see that they're able to continue despite inventory write-downs, despite regulations, they're able to still dominate. And it bodes well for the entire industry and the ecosystem around it. So that's primacy. We look for companies with primacy.
All right, we've just got a few moments left here. Primacy with regard to sectors or industries. Where is primacy now?
Well, I hate to be boring and give you the boring answer. It's going to be tech and communications. There's just so much opportunity there, and it's very real. And the fundamentals are there to support the thesis.
All right, so this is going to be interesting here for sure. Mark, thank you very much. Have a great weekend. Thanks for being with us this morning.
Thank you, you too.
All right, a quick check on the futures right now. We are seeing, again, slight offers here. The Dow's implied lower by 58 points, the S&P down by 13, the NASDAQ down by 50. So keep an eye here. Squawk Box picks up the market coverage coming up next. Have a great weekend.
Good morning. President Trump's tariffs reinstated now by an appeals court. At least for now, White House officials are considering alternative strategies to impose those tariffs if their appeal fails. Meantime, several retailers are detailing their efforts to mitigate the impact of tariffs. We'll have details on that straight ahead. Plus, key inflation data due today. Core PCE, that's the Fed's favorite inflation gauge. It hits the tape at 8:30 a.m. Eastern. We just missed the jobs Friday because it's Friday, May 30th, so it'll be next Friday. It's 2025, Squawk Box begins right now.
Good morning and welcome to Squawk Box right here on CNBC. We are live at the NASDAQ market site in Times Square. I'm Andrew Ross, working along with Joe Kernan. Becky's on assignment this morning. And U.S. equity futures, though, giving back a little bit, about 58 points down if we opened up right now. I always say opened up down.
Yeah, that's not a necessary word.
NASDAQ would open off. How about open off?
That's
about
fine.
57 points, 58
Or open
points.
down.
Or open down, but it confuses people. The S&P 500 looks like it would open off 15 points. It's the final trading day of May. For the month so far, the Dow up 3.8%. The S&P 500 is up more than 6%. The NASDAQ up nearly 10%. Take a look at Treasury yields, which have been a real barometer for just about everything these days. We're now under 4 on the 2-year, so we're looking at 3.939. The 10-year standing just about 4.426, Mr. Kernan.
And looking at the S&P, did finally close down a little yesterday, but it was a weird session yesterday, was it not? Now to the latest, and it has to do with this relatively small moves though. We were up 400. That sounds like a lot, but not so much. And it was weird because it was during the session that they were back on, and I admitted to myself that I wasn't just ecstatic that the court had said, you know, I don't like tariffs, but we've come this far and we're negotiating with all these trading partners, and if you just take away any impetus or motivation for them to come to the table after doing all this.
Yep.
So I almost felt like
So you were happy that the court put it back in place?
Kind of. And then I saw, and I didn't realize, there are, and I was watching Scott Besson, I was watching, and we'll have Jameson Greer on today. If this doesn't work, there are other
There's 100 other ways to do it.
There are other ways to do it.
Well, that was a little bit what Michael Froman was telling us yesterday.
Yeah,
which was,
it was.
There are other methods.
And in the past, executive power has been respected, I think, a little bit more. This is Trump, so he's like a one-off for a lot of people. And you know, you look at how many, and he's a one-off for other reasons too.
No, but I was going to say,
people that like a lot of these court injunctions say, well, he's so crazy, the stuff that he's doing. Of course, there's many more than in previous presidencies. But then again, in the past, you have seen some deferral to the chief executive, to the president, on tariff matters. I was
going to say, yesterday we discussed how presidents often, Democrats too, push things beyond the limits.
Beyond the limits.
And who's there?
Tariffs.
Hold on, but who's there to stop them? The courts.
Right.
And that happened, by the way, with the student loan issue, which I think we all, I mean, I don't know if everyone agreed, but you and I actually agreed on that together.
Immigration issues, sanctuary city, there's a lot of it, but tariff issues, that's something that was left, if the chief executive of the country wants to do some of these things, they've gotten a lot more leeway in the past. And, you know, whether Congress needs to actually legislate for this to happen, it's unclear. There's been some legislation in the past that they're going to rely on now to say, hey, there's a 1974 rarely used provision that they're going to use. The IIPE, whatever that was, the emergency one, that might have been a bridge too far, but there's other ones to fall back on that we'll ask.
And that's what I think Froman was talking about, and we'll talk to Greer about that too.
But the latest court ruling, it blocked the reciprocal tariffs, sweeping reciprocal tariffs. It didn't block all of them, though. There was some that was still in effect. The Federal Appeals Court temporarily put that ruling on hold while it considers the administration's challenge to that lower court decision. The order didn't rule on the merits of the case, just gives the Trump administration time to make its case so it could still come down on the side of no tariffs. The White House had asked the appeals court to step in on an emergency basis. They were also said that they were prepared to ask the Supreme Court to intervene to avoid irreparable national security and economic harms that are at stake. In a long post on Truth Social yesterday, President Trump blasted the Court of International Trade and asked whether their ruling was purely a hatred of Trump. Talking in the third person, or in the third person again. Do you ever do that? Sorkin says this, or Sorkin? I know someone who does that.
My Instagram account.
Yeah.
The name of it.
Yeah.
Not chosen by myself, is Sorkin Says.
What Sorkin says.
Like I said, anyway.
Yeah. Well, I would see. Kernan doesn't go for that.
Kernan did.
Yeah. Wait a minute. Just did it. He also slammed the Federalist Society for recommending one of the judges he appointed during his first term, who ruled against him in the tariff case. So I didn't see that part. The Federalist recommended, so he said, okay, so he did it, and now he's mad that it's like a David Souter type situation.
Meantime, Treasury Secretary Scott Besson saying that U.S.-China trade talks are, quote, a bit stalled and will require President Trump and China's President Xi to speak directly. He made those comments in an interview with Fox News. Now, Secretary Besson saying he expects more talks with China in the next few weeks and said there may be a call between the two leaders, quote, at some point. We're going to get a lot more on the latest on these trade negotiations. As Joe was mentioning earlier, we've got U.S. Trade Rep Jameson Greer. He's going to join us. It's an important conversation. You do not want to miss this in the 8 o'clock hour.
I watched that entire interview, and I guess if someone had to get it besides us, I was glad it was Brett there on his show. But I was a little bit shocked because he said, when Brett asked him about China, he said those talks are stalled.
Yep,
currently, and that's not. You asked one of the other people in the administration, even like the press secretary or something, what's going on with China? Our talks stalled. They would never, ever tell you the truth and actually admit it's something that doesn't sound good for the administration. They usually have a way of getting around it and saying it in a way where they don't. He just came out and said it. Yeah.
Unless you think Scott wants the
Maybe.
public to know that and wants Chinese to know that.
Remember when he got back,
Yep.
we were all excited about what he and Jameson Greer said
Yep.
about what went on in China.
Mhm.
So I figured things were moving along.
Yeah.
So for him, you
Okay.
said it's not happening. But I know.
But by the way, not because I don't want
position. I
but
know,
not because
you're
I don't
in a
want it
fault
to, or
position.
just that, just because I'm
You're
trying to
in a
read the
fault-
tea leaves of what's
I
actually
know.
happening here.
Tea leaves. Your default position is skepticism. That's fine. And it should be as a journalist. If I ever become a journalist, I might employ the same. I don't see that happening, though. But I just thought it was just watching him, and I still like when he talks because his words are calming, and I think you always want the truth, even though I don't think you can handle the truth.
That's true.
But even though you want the truth, we rarely get it, and I think we get it.
Oh man, that I
Really sucking up him to get him back on the show. That's not why. President Trump said he's going to hold a press conference today at 1:30 p.m. With Elon Musk in the Oval Office. He said this will be his last day, but not really, because he will always be with us, helping all the way. Elon is terrific. And this goes into probably what you were saying yesterday, that the people that were giddy about the big rift. There's no rift. The rift between Elon and
everybody wanted to say that this was the end of the bromance, not just the end of a bromance, that there's a divorce here.
Right.
I think there might be a little bit of the end of the bromance in that obviously he's going home,
Right.
but I don't think there's a divorce here, and I think the truth is that Elon, to the extent that he probably feels either both compelled to, will continue to support the president in different ways. Will he spend the $100 million on Republicans in the next midterms that he promised earlier? That I think is still up in the air. What his involvement in politics in the future is going to be is still a real question.
Will he wear the hats anymore? Make America great. I'm not sure. Or Trump was right about everything.
Well, if you saw it, by the way, interestingly, a little daylight in that CBS Sunday morning piece. So little drips and drabs of that piece have started to come out again.
Right.
Since that one comment about
What was the
beautiful bill.
Yeah.
The newest one is his look. I never agreed with everything the administration did.
Yeah.
I agreed with a lot of it.
Right.
But I'm like a person, and we disagree, and I didn't always want to feel responsible for everything that these people were doing.
Right.
So that was interesting. He was very honest.
Right.
Talking about being honest, that's now.
Do you think that it's easy for me? No. I mean, I have the same issue, and I said that actually to members of my family. It's like sometimes it's really hard not to just trash everything. It's hard to always. You can't always back everything that this administration is going to do. You just can't. You can't. And don't come to me for that. I'm at if I back 55% of it, it's probably good. But in your case, I think you might be quite a bit lower.
No, look, there's things I like.
You back 55%.
I'm not here, but my job's not to back one side.
I know it's not. As I said, I've always been a Reagan sort of.
I know.
Okay, so I'm hoping for the best, but there are times where this is not. This is not even close.
I'm hoping for the best too.
Right. Okay. Yeah, that's where we differ.
Well,
I was more McConnell.
I think
I was more McConnell.
What is the best?
I was more like Mitch
No,
McConnell.
that's what it is. Look, we're always having debates about ideas. It's you're hoping for the best. I'm hoping for the best. I think a lot of the folks who are watching this show are hoping for the best. It's a question of how people define what the best is.
Oh, I can define that, but then we start arguing. The two other people left Doge too. And what I was going to say was I saw someone said that Elon Musk left the job of trying to make the government more efficient for the much easier job of putting people on Mars.
This guy just runs to fires.
You get it though.
I get it.
It's much easier to put a man on Mars than it would be to shrink the size of this Leviathan called the government.
He may get there first.
Yeah, we'll get there first. No, we'll be at 30 trillion in debt before we get there. Probably be at 100 trillion.
Maybe why we have to get to Mars.
Right. Coming up,
Leave our debt behind.
just leave it here. You're on your own, debtors. We'll get you ready for key inflation data due at 8:30 a.m. Eastern. Squawk Planners next, and then later the CEO of Johnson & Johnson. That's pretty good. He's going to join us right here on the Squawk set. We'll be right back.
Now.
On today's Squawk Planner, economic data coming up. Personal income and spending for April. That's due at 8:30 Eastern time this morning. That includes Fed favorites, includes inflation, the real inflation gauge, core PCE. It's expected to rise by 0.1% from the prior month, and holds steady at 2.6% year over year. Now, a number of Fed presidents have planned speeches today that we're going to have to keep our eyes on, including Atlanta Fed's Raphael Bostic. Also, San Francisco's Mary Daly is going to be speaking, and Chicago's Austin Goolsbee. So maybe a little bit of a ping pong match in terms of who's going to be making headlines, what those headlines really mean, how you decipher them.
You saw the visit yesterday.
Saw the visit yesterday.
Jay Powell personally hearing an earful probably from President Trump, but standing his ground again.
I'd like to be in that room.
Yeah.
And then closing arguments begin today on the DOJ's antitrust case against Google. This is a biggie over search dominance. The judge has previously said he expects to make a final decision in August on remedies that Google would be required to make. Of course, we've discussed this many a time, though, given the questions about the blue link economy and search overall at a time when you're using Perplexity and ChatGPT and others are using Anthropic and this and that.
Impressive.
It's a little bit of an old, old issue.
It's impressive and getting better when I ask something. I don't even think about Google anymore. But then I was just thinking about one other thing before we get to Sylvia. Just like with you,
Yeah.
I will bet you they had a very cordial, almost gregarious meeting. Yes, I bet you when Trump welcomes Jay Powell,
we've discussed it.
Yeah, but he calls him, you know, on through social, he'll call him a fool or too late. I bet when he meets him, they're like,
I think the president would agree, even publicly, when he's saying stuff publicly, there's one version of the Donald.
Yeah.
And when he talks to you privately, he could be the most charming person in the world.
Exactly, and I bet it happens.
Even if he says the nastiest thing about you publicly.
Jay Powell, I'm sure, understands the game and how it's played as well. So it would have been interesting to be there, but I bet it was a totally, cordial, not confrontational meeting. Might have been a little confrontational.
There was a little it could be a little uncomfortable.
But I probably think Jay Powell the president probably needs to hear about the dual mandate. He's a single mandate guy, really, full employment, right? And there really hasn't. We'll see today.
We're still doing pretty well.
We'll see. I know. We'll see with PCE today, but it looks like there's no inflation right now, or much lower. And the administration keeps bragging about that there's no inflation, so lower rates. Let's find out. Joining us now ahead of today's inflation data, Sylvia Jablonski.
There was no inflation, by the way. Interest rates should be a lot lower than that.
It fell again, but we're below all of our levels again. Remember the ones I'm looking at? We're below all of them again. CEO and Chief Investment Officer of Defiance ETFs. Sylvia, I mean, interest rates are pretty low anyway on an absolute basis, or a historic basis at least, are they not?
Good morning, Joe. They are pretty low on a historic basis, and inflation has certainly come down. But to the point that I just heard Andrew make, I mean, if you don't have inflation, perhaps it could be time to cut, or at least it gives Jerome Powell a lot of legroom to act here with the markets.
Right, I agree, and it's bad to let inflation come back if you've got it almost handled. That would be very bad. But if it were handled, why not put the pedal to the metal and ease up on some credit concerns we have for consumers, mortgages, loans, whatever you want to talk about. It's always nice to have lower rates. I think a real estate guy like President Trump certainly thinks about that. So you watched yesterday for all the tariff drama yesterday. They're not big moves at all either way in the markets, and I think the S&P's up 6% for May, even with the tariff backdrop still being in effect at this point.
Yeah, and I think that we're just going to live with this. I think it's going to be a level of uncertainty going forward until we get answers here. So we saw what happened in the courts, and now we hear, President Trump coming out and Peter Navarro coming out. There is no plan B. This is plan A. Section 122, we're going to find a way around it, whether it's, 15% instead of 10, although that's lower than 50, but that's, the negotiations would have got us hopefully lower to 10 anyway. So it seems like something will happen with tariffs. We don't know what, but the caveat here is what sends the market the other way. What would send the market the other way is this potential, stalled talks with China. Like, what does that mean, right? I think that's where everybody is really looking for color. I think that most of us expect that there will be some sort of normalcy, reversion to the mean, perhaps equalization of tariffs with Europe and other countries. It's really China that's the wild card there.
No. For all of that movement yesterday, it was weird watching the market. When the tariffs were off and it looked like traders were excited, up 400 points, it traded below. The Dow at one point was down before the court came in and put a hold on what was construed as bullish earlier. And then the market, even though the tariffs are back on, that happened during the session, and the market still closed up yesterday. That was surprising, wasn't it?
Well, I think the other thing that happened though was Nvidia, right? And I think every year you have this market darling. I mean, it's been Nvidia for a couple of years now, but prior to that, it was Tesla. Prior to that, I think it was Apple. I think when you have a stock like this that everyone on the planet is investing in, and they come out with these stellar earnings, 69% year-over-year revenue growth, and this bright outlook, and Jensen Huang and all the positive talk about demand, and something that can really move the markets forward in the future with AI and technology and quantum and all this type of thing, and tech and communications rally. I think overall that's good for the market, because those are the sectors that everyone watches. We all love breadth and things like this, but at the end of the day, everyone watches Nvidia and the mega caps.
People have said that we may have hit new lows depending on what happens with tariffs. Do you see any scenario that maybe something with China, I don't know, that could happen, something really negative that could send us down another 1,000 points or something on a day on the trade front? Or it almost seems like, we've been hit with a lot of different, what would be seen as negative tariff news, and the market's up it's almost back to 6,000 on the S&P. So is it possible to retest the lows based on trade disappointment for traders?
I think we've seen the worst in trade talk disappointment, and we've seen this, we've talked about this before together, actually, this art of the deal, right? Like going hot and kind of, uh-oh, no, let's dial back, the market's crashing for whatever reason, whether it's bond market or equity market. So I think a lot of it is priced in. The uncertainty is now par for the course within the market. That being said, I think if we ever get to a situation where we're talking about 100% plus tariffs with the US and China, that is problematic, and that would actually pull the market back. But at this point, I don't see us going there, because I think we already started there. So it would be a strange, kind of head fake to go back and pull it back again. So I think we've seen the worst of it. But do I think the market can correct? I do. I think the summer's coming, even for the sake of June being a soft month, we might get a small pullback here, but probably not going to retest those lows.
Okay, Sylvia, we'll leave it there. Defined ETFs.
Have a great weekend.
Happy Friday. Yeah, you too. Happy Friday. That was one other thing that Bessent said yesterday, was that for anything to happen good with China, it's going to come from Trump talking to Xi directly, which he expects to happen within the next couple of weeks. And they have a great relationship, he says, and it's going to be one-on-one, and that's how we're going to make headway.
Let's see.
It's just weird that...
I'll make you a bet that one of the chess pieces that we end up talking about in the next couple of weeks is TikTok.
TikTok, really?
Yeah. That's part and parcel of all this. Cool. Coming up on the other side of this, several retailers providing some insights on the impact of tariffs and their efforts to mitigate them. That's next. Squawk Box. Right back.
apply.
Time now for the Executive Edge, and today's theme, tariff commentary from retailers. We're going to start with the Gap right now. Shares are plunging, earnings and revenue beat estimates, but the company warning that new tariffs could impact its business by $100 to $150 million. That's if they remain in effect. It said that the impact would have been double that figure without mitigation efforts. CEO Richard Dixon spoke about those efforts last night on Mad Money.
We've already mitigated over half of the anticipated impact of tariffs. We've done it through adjustments in sourcing, manufacturing, assortments, and we remain absolutely committed to achieving additional mitigation over time. We diversified our sourcing footprint. I mean, the last time we chatted, Jim, I told you China was less than 10% of our sourcing. Today, I'm telling you, it's less than 3%.
Today's decline, shares of Gap are roughly flat now year to date. There was a nice little period where it felt like the Gap was on the move.
It is, at least the stock.
Yep.
I mean, remember Ray Washburn was on the other day. He said, if it's 10%, 15%, 20%, people are going to figure that out. Remember he said that?
Yeah.
I'm not impressed with Hyundai's, I just did the math, 1% price increase. It's a $35,000 car. Hyundai, it's about right for a Hyundai. It's $350. I mean, it's not down 1%, but that's it. That doesn't seem like it's going to strangle the economy, does it?
The 1%, no.
1%. That's what their price hike was that they announced based on tariffs.
Right, but they can hang on to this. So it depends on what the price of some of these vehicles are. That's sort of the problem. And that's a lower end car. A lot of the high end cars, the prices are now so high they can't pass it on to the customer at all. And 1%.
And it depends on where it's coming from, where it's assembled, and everything else. But a 1%, I don't know. We're watching Costco as well. The retailer's earnings and revenue also above expectations. Comp store sales grew 8% year over year, and e-commerce sales up 16%. Company doesn't provide annual guidance, but the CEO said that they too have been working to mitigate the impact of tariffs. They've rerouted goods from countries with higher tariffs to non-U.S. markets, and they said buyers pulled forward some purchases to beat the tariff deadline. So we probably aren't seeing, that's another thing, we're not seeing the full effects yet.
Right. Meantime, shares of Ulta Beauty higher, earnings and comp sales beating estimates. The company raising its full year guidance. The company's CEO saying many consumers indicate that they are leaning into beauty as a comfort and escape, Joe, from the stress of macro uncertainty. So folks are going to Ulta Beauty and escaping from all the travails.
I think you should spend
tariffs.
more time I
makeup.
I relax in there. It's like almost like a facial massage.
Right, so I do it like on like an
You
F1
do it
car.
here.
I do like an
I know.
F1 car going into the thing. Yeah,
As time passes,
yeah.
you'll be more concerned with that. You don't need it. It's like building a lily.
Thanks.
You're welcome. Coming up, the Senate returns to work next week with President Trump's sweeping tax cut and spending bill on the docket. We're going to take you live to Washington coming up next.
AI meeting agent.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Checking the futures, they have paired their losses to some extent now, almost at the flat line for the NASDAQ, or the Dow and the S&P. NASDAQ a little weak.
Okay. The Senate back in session next week, and it's going to be taking up President Trump's broad tax cut and spending bill that was passed by the House. Emily Wilkins is with us this morning from Washington, D.C. Give us a little bit of the latest play-by-play on where we really stand as the Senate gets engaged in all this.
Morning, Andrew. Well, yeah, look, we know that the Senate's going to be making changes to the bill, and we know that one major issue that the Senate is really going to have to grapple with is the overall cost. It's set to add roughly $3 trillion to the debt at this point. But some organizations are now warning that the real cost of the bill could be as high as $5 trillion. That's because while some of the tax cuts in the bill are meant to expire by 2029, they're politically popular. And as we've seen in the past, there's a really good chance that lawmakers are going to try to extend those cuts. So if the temporary provisions are extended, the total cost of the bill could come to $5.2 trillion over the next decade. That's according to the Committee for a Responsible Federal Budget. Penn Wharton also did a calculation just on the tax portion, and they found that if it was extended, it could add $5.8 trillion to the debt if the cuts are extended. Wharton professor Kent Smetters said once tax cuts are implemented, they tend to be very difficult to get rid of.
We know a lot of these temporary tax cuts will get revisited in just a few years as they expire, and we want to show what is the cost of continuing this problem of constantly renewing these tax cuts over time. And it's going to be much more expensive to do that than just to look at the current House bill on its own.
Several Republican senators have already said that they're not going to be able to support the House bill because they're concerned about how much it adds to the debt. Of course, if you start cutting things, you're going to run into other senators who are opposed to that, and the Senate's going to have to deal with some of the same dynamics that we saw in the House. Guys?
Emily, what is your timeline? I mean, I feel like you're in the middle of all this. We've now had we've had people like Bill Daley say there is no way that this is getting done before July 4th. Maybe we're talking about, all the way past Labor Day. We're having conversation about this in September. You do have the tariff piece of this, which is an overlay that I think must complicate things to some degree. Mm-hmm. And then there are other folks who say, you know what, July 4th is a completely reasonable time to think that we will have a big, beautiful bill of some sort completed. What do you think?
No, it's a great question, Andrew. I mean, we know there are going to be some tensions here. Some of the stuff we saw play out in the House between the fiscal hawks and Republicans who really want to protect programs like Medicaid and SNAP. We know there are going to be some issues there. We already know they want to make changes, and we know that those things tend to cause tension when lawmakers try to figure it out. I do think that July 4th is pretty ambitious, considering that this doesn't just have to get through the Senate, but then any changes that the Senate makes has to be approved by the House. But really, again, for lawmakers, the true deadline here is because this bill increases the debt limit, they are going to have to get it passed before whenever that next date is, be it mid-July, late July. They're usually not in session during August, so that still puts them in July. So they don't have to get it done by July 4th, but they are going to have to get it done by that next date.
Emily, I don't know if you saw Scott Bessent, the Treasury Secretary, on last night for a fairly long interview, and he addressed the CBO estimates, and he referenced back to the CBO estimates on the 2017 bill prior to what actually happened afterwards. And, I hear a lot, we get a lot of smoke. Everybody blows smoke, depending on whether, Democrat administrations, Republican administrations. But Scott Bessent has some credibility. He says that absolutely the projections for GDP are way too low given what some of the pro-growth policies are going to be in terms of energy and deregulation. He still insists this year's deficit is going to be below last year. Next year's will be below this year. He insists they're going to get to 3% from 7% deficits to GDP. He says GDP will be 3%, which will totally, and also, even though you can't use the tariff income on a CBO calculation, says a lot of these things are underestimated by projections, and that these $5 trillion numbers are ludicrous. So that's the spin that you're hearing from Scott Bessent in Treasury.
And that's the spin you're hearing up on Capitol Hill. I mean, I feel like for years and years and years, I've heard this criticism continually of the CBO and of their numbers. But the fact of the matter is that the process that Republicans are using here, because they don't have to work with Democrats, they're able to overcome the Senate filibuster, there are other rules that they have to follow. And when they set up and pass that framework, they set in place floors and ceilings for how much they had to spend, how much they had to cut. And the fact of the matter is that the official scorekeeper is indeed the CBO. And I'm not really surprised that Republicans are working to address concerns of their fiscal hawks by pointing to things like GDP, potential revenue from tariffs. But I think at the same point, some of the things that you're seeing lately, some of the concerns with the bond market, that tweet from Elon Musk, it does seem like there is some momentum building behind the fiscal hawks to make the case that there needs to be further spending cuts in this bill.
Yeah, well, yeah. The more the merrier, obviously, but what you'd like to do and what you can do are two different things. It'd be very interesting to see what the Senate comes up with, and especially with you would think Trump, the president, knows that it's tough to do the House, and for him to be almost egging the Senate on, yeah, do what you got to do, is a little weird. That puts a lot of pressure on Mike Johnson when it goes back there, right?
It absolutely does. It's going to be a very interesting couple months.
Thanks, Emily.
Okay. Coming up, the CEO of AG1 is going to join us next on the booming business for dietary supplements. Squawk Box, coming right back. Welcome back to Squawk Box. We're going to talk about our health, everybody. The global market for digestive health products is booming. Our next guest is the chief executive of AG1, formerly known as Athletic Greens, which is a supplement used by business executives, professional athletes, how they start their day. And yes,
You, personally.
me, I was going to say, so here I am. Joining us in an exclusive interview is AG1's CEO, Kat Cole. So people don't see this next to me. So in the morning, I do this. So I have the Fiji water. First thing I do is I mix, this is not your product, this element,
Yep,
just a little salt, and I do half of it in the water. And then, God bless you, you now have these. So AG1, for those people who don't drink this stuff, used to come in these packets, and they'd spill everywhere. And then she finally gets the job, and she comes in and she makes it so you can take it and you do it like this into the water. I don't know if they can see this into the thing. And then yes, you see me do this sometimes. And then I mean, it doesn't look great, guys, but you know, like this.
Look at that.
I do like that during the commercials, and then I go like this.
Check it out.
And then I go like this, and you guys all think this looks gross. And then I drink
pretty
it.
bad, right?
Nutrients and gut health.
This is what's going on.
Gut health.
Right. Gut
tastes
health
pretty
market
bad.
is
Yeah.
exploding. People have nutrient gaps. They need support. AG1 covers those gaps.
So okay, so here's I'm going to channel Becky for a second.
Oh, yes,
you're sitting in her chair.
Aw, miss you, Becky.
She was very excited because when you came to the company, you said you were going to start testing this stuff. And there have been these questions online and everywhere else about what's actually in this.
Totally.
You tested it and then you created a new product. So something has happened to the products. It's actually different.
Yeah.
So then she said to me, does that mean you've thrown out all your old AG1?
No.
And I said, I hadn't. And then she said, well, you should ask and you need to find out what did you put in the new one and what did you take out of the one that I still have?
Oh, it's still great. So when I was here last, what was that, 9 months ago, stepped into the CEO role, said we were going to project to do 600 million, be profitable, and begin this innovation and increasing research rigor that you just described. We did it all. We closed our fiscal year recently, did 600 million, profitable, and began this journey of investing in far more clinical research. So we did a few things. One, we upgraded AG1 to AG1 Next Gen because the research said many of us benefit from more robust probiotics. So we put in the most clinically studied 5-strain blend of probiotics.
Did you take anything out? Was there anything in there that you said, you know what, people shouldn't have this, or they shouldn't have this amount of something?
No, there were a few grasses and vegetables that we just changed and upgraded because the science said it would improve beneficial bacteria to the gut.
Okay.
So AG1 Classic, which is what is in Costco now, we just launched.
So can we discuss this?
Costco.
So I buy this stuff, which dare I say is kind of criminally expensive, because I buy
$2.80 a pack.
That's not cheap.
Nope.
And now you're selling it at Costco.
Now
Is
we're
it
selling
any cheaper at Costco?
It's an incredible value at Costco, but it's still a premium product. Costco
No, but is it the same
strange-
price
Yeah,
as what I'm getting online?
Very similar. So it's a 40 count for $72.99.
Okay.
For the classic formula, AG1 Next Gen is $79 for a 30 count, but more clinically backed, more in every scoop. So AG1 Next Gen online has more and is more clinically studied.
Joe's the scientist here.
Costco's classic.
Joe
You're
thinks
the
all of this
scientist.
is phony. He thinks that
Joe?
Joe thinks I'm a quack.
I think it's
all of these things.
Dr. Feelgood's medicine truck is parked out. No, I don't think that. There is a cable network where you can't watch it for 1 second without seeing this balance of nature crap, which all they say is we just grind up vegetables and fruits, so you never have to eat another vegetable or fruit. All you got to do is just take this powder.
Yeah.
This is different. It's better.
This is different. Well, it's different in a few ways. Yes, there's whole foods in here that help support nutrient gaps, but there's an incredible multivitamin, multi-mineral, pro and prebiotics. So me and you don't get enough fermented foods in our diet. Are you eating kimchi every meal?
Who?
Probably not. Fermented
That's not a
foods.
person?
Yes, not a food.
Kim?
So look, the research we did for gold standard human trials, we tested healthy individuals, standard American diet, athletes, non-athletes, people with GI issues, and all across the board it showed we have nutrient gaps. Our food is not as nutrient dense as it once was. We're pushing our bodies hard, so support helps. Whole food should be first, you're right. But we still need
But you do
support.
get a lot of vitamins with
I will say, so I don't take any other vitamins, but if I'm feeling like, because this show is on a crazy hour, let's be honest.
Yeah.
There are times when I'm tired and I find both not that I get, it's not like energy, like a coffee
no
energy.
caffeine in AG1.
It's like something else, and sometimes like I'm feeling sick or I'm about to get sick.
You have a lot
and
of
I'll do 2 packs, by the way, not at one time. But
Yeah.
and that sort of seems to help.
And you have
keep me
a lot of indefensible positions that you take, which is exhausting.
exhausting. Well, that's why you should be taking it, Joe. You need it for that
You know what I
reason.
take? And you probably
What do you
think this is 4,000 years of history. I take ghee, which is clarified butter.
Good for you.
A teaspoon.
Great source of fat.
And
Maybe you just need more fat.
It's warm. It's coats. And that's all I do. And it's not expensive.
This industry, one, it's booming, right? Health is
Right.
the center of so much conversation at the government level, socially, in many communities.
Why
And
is it
it's-
so expensive? That's Andrew's question.
Do you know how expensive it is to source the highest quality ingredients and
No, I
actually
don't.
have, it is incredibly expensive. To have third-party testing that certifies what's on the label is in the box, to invest.
But the margins are not crazy. I'm assuming the margins are insane.
The margins are fantastic on the business.
Okay, so
And look, we're doing 600 million in profitable, but it
Yeah.
is expensive to do it well. This industry has good actors who invest in research and high standards like us and third-party certifications, and it has not so great
Like that
actors.
other one I was talking
And
about?
maybe. And they're, the customer is a bit confused as they navigate the supplement aisle. So what they need to look for is third-party certifications like
Right.
NSF for Sport, published research, and documented human clinical trials, not just
Okay,
ingredient
I got a question for you. So there's a guy, Brian Johnson. This is the guy who claims he's going to live forever. You know what I'm
Longevity.
talking about? Don't die. You know what I'm talking.
Yeah.
You know exactly right. He thinks this is like a joke, and you're right.
He's got his own supplement line.
He's got his own line, and he's out there saying that this is overpriced, doesn't have all the stuff in it, all the
Yeah.
things,
You know,
right?
as the leader in the industry, there's always going to be critics, and I welcome people who push and challenge us. It makes us better. But the reality is, AG1 is the best in the
Okay, what about David Beckham out? He's got a new one too.
all the
You know what I'm talking about?
There are many celebrities that have supplement brands.
Are there any
now.
others that you like? Are there any that actually? Here's a question.
Yeah.
Is there any that you actually go? That's clever. We looked at that and we're like, we like that.
There are a few brands, not just one, that are really pushing the frontiers of science and research on probiotics. They have very high count, high quality probiotics. There are some people who are doing very interesting things with proteins, immunoglobulin, IgG for colostrum, things like that. Fantastic.
Oh, the
To add to the
colostrum.
stack.
I see that on colostrum. I see it constantly on my Instagram feed, and I'm like, should I be getting this
Right,
stuff?
where there's opportunity, but AG1 is the most comprehensive.
This is why you get it at 6. You got so much crap going on.
The biggest sucker for all this
No, but
stuff.
you got the X Clear.
I love
Yeah.
X Clear.
I love X Clear, but not like you, Joe, because you're not doing a lot of these things. But I started out, as many customers do on this health journey, with a million pills and powders. Like going to Whole Foods, getting it, and then they just expire, and you can't take them
You
consistently.
have a sleep thing too.
And
Yeah, now she's doing sleep, into sleep.
You know, one.
Because you don't take that in the
One
morning.
out of 3. No, you don't take it in the morning. 1 out of 3 Americans have issues with sleep, and we've done one thing. That's
I
600
can tell you,
million.
3 out of 3 on Squawk Box have an issue with
Probably.
sleep. Actually, the entire
we
staff.
don't, a different type of
we don't have enough.
We don't have enough.
Well,
we can
what's
sleep
wild
just
is
fine.
This beautiful business is 600 million, profitable business, one product, one channel. We've only sold
Right.
one thing for 15 years. And now today we're announcing stepping nationally into retail for the first time
first
ever
time.
at Costco. You've been covering Costco.
Yep.
An incredible partner, high household income, known to carry premium products. They have a limited SKU set in each category. They lean into sampling, which is so good for us. People get freaked out when they see
I'm
a green
feeling
drink.
pressure here to try.
Well,
should
now
try
you
it.
can go to drinkag1.com or Costco to get it.
I mean, I
one
can
final
grab this
question.
right.
The producers are going to kill us because we're running over time.
And we have a sleep product now.
So I drink this stuff
Yeah.
sometimes in the morning, but always before I go to bed at
You
night.
told me that last time.
Right. So the question is now, what am I going to do if I'm supposed to take that thing?
Oh, we have to experiment with your routine. That's a really
Take
good
both.
question. So
Just
AG1,
like you
now
had
next
with me.
gen, much
He
more
has 8
upgraded.
Krispy Kremes. Does that
It's not
offset?
balanced. I
No,
mean,
it
it
doesn't
helps,
balance
but
it
it's
out.
not going to erase it. So AG1 now in Costco,
Okay.
AG1 next gen on the
What's
site.
going? Okay, and I'm assuming this is all. We're going to see you at the Nasdaq like in a couple years, trying to go public. Is that where this is all
Certainly being
headed?
multi-channel and multi-product makes us very attractive to customers and to the market. So we'll see.
It's great to see you. Thank you for coming in this morning.
Thanks for having me.
Thanks. We're coming right back. Just before 7 a.m. on the East Coast, you're watching Squawk Box on CNBC. It is a Friday morning, and we're rolling. We're rolling. I'm Andrew Ross Sorkin along with Joe Kernan. Becky is on assignment today. Among today's top stories, a federal appeals court temporarily putting a hold on a ruling that blocked President Trump's reciprocal tariffs. Lawyers for the White House have asked the appeals court to step in on an emergency basis. They also said they were prepared to ask the Supreme Court to intervene. Meantime, Treasury Secretary Scott Bessent saying trade talks with China, mark this down, he says they have, quote, stalled a bit, or a bit stalled. Bessent telling Fox News this could require President Trump and Chinese President Xi Jinping to speak directly to each other and move things forward. We're going to talk to U.S. Trade Representative Jameson Greer at 8:15 a.m. Eastern Time. That's an important conversation you do not want to miss. And Elon Musk's time as special government employee coming to an end. President Trump saying he's going to hold a press conference with Musk today at 1:30 p.m. To thank him.
Well, it's good to talk to him because, okay, we want to talk to Xi. Does he want to talk to President Trump? Why haven't they talked up to this point? Why has that call not been made up to this point? And how do we know it's going to be in the next 2 weeks and it's going to be agreeable to both sides to do that? I don't know. Or we can ask him. But saying it's, hoping that it happens and actually having it happen. Maybe this guy knows.
Maybe this guy knows.
Jibber jabber.
Joining us right now on the latest tariff news, CNBC contributor Jonathan Cantor.
Oh, not this guy.
He's not. A
What happened to Eamon? I thought we were going
to go to Eamon, but right now I think we're going to Cantor. He's right there. Mr. Cantor served as Assistant Attorney General in the Biden administration. Good morning to you. I think we really should talk Google here because we got the end of this case here and what you think is going on there, and then maybe we'll get into some of the other things going on in Washington.
Sure. Good to be with you this morning and enjoying good gut health like all of you. Let me say, that this is the end of a very long process, and I think the likelihood here is very high that Google's going to come out of this with some pretty strong remedies. We'll get a good signal probably today from the court. The judge holds his cards close to the vest, but tends to signal where he's going to come out in closing arguments. So I expect we'll get some at least hints today about where things are going to go. And my expectation is, at a very minimum, Google's not going to be able to pay Apple lots of money for search distribution, and Google will have to open up its platform and untangle some of its AI products from its search products.
Before we go further, since we have it on the screen, we said push to block tariff ruling. Do you have a take on what the judge has just done here?
Yeah, so this is one big beautiful mess, I think is the way to think about it. This is going to take a long time to play out in the courts. The court essentially said that the administration overreached by using this method to impose tariffs, and that it was not sufficiently tethered to the national emergency, and that the administration failed to follow procedural steps. There are other mechanisms to impose tariffs, but those mechanisms have their own limitations, either in terms of how long those tariffs can last or the process necessary to do an assessment of the degree of that national emergency and the extent to which the tariffs are necessary. So what I would be worried about if I were the administration is that the countries we are negotiating with are going to try to run the clock and delay any concessions.
But I thought they can go do it now. I mean, we had Michael Froman on. We're going to have Greer on later. Apparently there are other ways to do this, even if the court really did officially block this going forward. But now I thought, given what just happened in the last 24 hours, it sounds like game back on.
No, not necessarily. So the stay is pretty procedural for this mechanism, but the other ways to impose tariffs are not clean necessarily for the administration. One of the mechanisms would, for example, limit the tariff to 150 days, which would undermine the administration's negotiating position. The other tariff would require an assessment of the national emergency, and then that assessment and its reliance on that assessment will then be subjected to litigation about whether it was sufficiently tethered to the national emergency. So I think there's a great deal of uncertainty, which is why, again, I think the administration needs to be thoughtful about the extent to which countries are just going to try to stay out of the line of fire, delay the game, and then see if this really comes to fruition.
I got a different one for you. What'd you make of the decision with Wilmer Hale? And what do you think that portends for the law firms that already settled those cases?
It was a no-brainer, right? The executive order targeting the law firms was blatantly illegal on its face, and I think any decent lawyer would have told you that right out of the gate, which is why it's dumbfounding to me that law firms who are supposed to protect clients from government overreach would settle with the federal government. How are they supposed to protect their own clients if they can't protect themselves?
And what do you make of the corporate lawyers inside, Paul Weiss and Skadden, who said, "Oh my goodness, everybody's going to leave us if we don't settle immediately"?
I don't think that's realistic because the firm Trump was targeting all sorts of law firms, and the fact of the matter is these executive orders, while they might have caused some temporary confusion and pain, were never going to stick. They were just illegal, and so the outcome here is not at all surprising. I don't see any pathway where the administration is going to succeed at the Supreme Court. And I think law firms have an obligation to enforce the law and stand up for the rule of law, and they should have done better.
Okay, talking about going to the Supreme Court, what do you think of Harvard? What do you think about that case? Do you think that ends up in the Supreme Court?
I do, and I think it has a very similar flavor of law firms. It's overreach. It's clearly targeting a university because the administration has some beef. Now, yes, there are legitimate concerns, but if you want to address anti-Semitism, the way to do that is not to strangle the grants for medical research. I think one is way out of sync with the other.
Jonathan, I want to thank you for your perspective this morning. Really appreciate it.
You bet. Take care.
Thanks.
All right, now let's get to Dom Shields, jumping the gun a little with a look at this morning's pre-market movers. Hey, Dom.
Hey, happy Friday. Good morning to you both, Joe and Andrew. We're going to keep an eye on some of the big earnings reports coming out over the last couple of days here. Costco shares are relatively flat this morning, down about 1/3% after a narrow beat for the third quarter on both the profit side and the revenue side. Sales growth at existing store locations also rose 8%. And e-commerce sales rose 16% for the quarter, but on balance, we've got about a fractional decline in shares of Costco. Gap, meanwhile, is tumbling despite a first quarter beat across the board, saying that tariffs could create an impact of between $100 to $150 million on the business. CEO Richard Dixon saying on the earnings call that they expect to buy more American cotton to help mitigate some of the impacts of tariffs. He also said in an interview with our own Jim Cramer last night that he does not expect there to be quote-unquote meaningful price increases to our consumers, so Gap shares down about 16%. Dell is higher after a mixed first quarter, missing on its earnings, but beating on revenues. It also gave strong second quarter guidance that's kind of boosting the stock. It came in well above estimates. The computer maker and tech services company also raised its full-year earnings guidance, and of course, artificial intelligence is a big revenue driver for the quarter. Dell COO Jeff Clark saying that the company was receiving, quote, unprecedented demand for its AI systems. Dell up about 1/3%. And away from earnings to Regeneron shares, the pre-market laggard in the S&P so far after its drug treating chronic obstructive pulmonary disease, one of its experimental ones, a lung disease commonly caused by things like smoking and pollutants, had mixed late-stage trial results. That stock is now down more than 50% lower than its all-time high that it hit back in August. So Regeneron shares, it already has a drug for COPD on the market. Its new one didn't get as much positivity, I guess, in its trial results. So we'll keep an eye on Regeneron down 10%. Joe, I'll send things back over to you guys.
We really haven't screwed around recently, have we, Dom, about golf and stuff like that? I mean, we've been good, right?
No, we've been very good. We've kept things moving along. My boss told me that I needed to keep things moving along as well. So I've been trying to play ball.
You have a boss?
I do. I have many bosses.
You know who the boss is? The viewers.
Yes.
The viewers. But no, Rory, I was just going to mention that Rory not playing and supposedly didn't call Jack, and this Jack talked to him about at Augusta and gave him some tips, and I just saw that was sort of, people were looking at that kind of like, you know, what's the story, Rory? You know,
I think it's interesting only because you put that paired with the whole idea that he didn't really give interviews right during one of his recent golf events. I mean, so there's a lot going on, I'm sure, but I think Jack Nicklaus and Rory McIlroy have a close relationship. I see them down in Jupiter every once in a while.
Jack, in the interview, Jack said I didn't take a front that Rory didn't You have a boss. Let's get back to this.
I've got lots of them here. I got lots
We
of them.
do. They're called thousands of viewers, our boss. That's the only people, really, that...
We want to give the people what they want, Joe, for sure.
We do. Thanks. Coming up, the CEO of Johnson & Johnson will join us for a special interview right here on the Squawk set.
Why?
The SEC has formally dropped its lawsuit against Binance and its founder. It brings an end to one of the last remaining crypto enforcement actions brought by the agency. The original complaint accused the crypto exchange of violations, including illegally serving U.S. Users when it wasn't allowed to do that, also inflating trade volumes and commingling customer funds. Coming up, an exclusive interview with Johnson & Johnson's CEO ahead of the ASCO Cancer Conference will give us an update on this company's latest cancer treatments and more. The Spark Box comes right back. Welcome back to Squawk Box. As the most impactful cancer conference in pharma kicks off, Angelica Peebles is here with a special guest that we're glad to see. Angelica.
Morning, Joe. That's right. We have Joaquin Duwada, the CEO of Johnson & Johnson, joining us this morning. Joaquin, thanks so much for being here in studio. So I want to start with this 5-year CARVYKTI data that you're presenting. You and Legend have this data showing that CARVYKTI can keep people with multiple myeloma in remission for 5 years after this one-time treatment. So tell us a little bit about those results and what it means for the use of CARVYKTI going forward.
Thank you, Angelica. It's always great to be able to attend ASCO. I love it because it gives hope in cancer care, and that's an area in which we have done a lot, but we should be doing even more. We have a full core press as Johnson & Johnson in this conference. We aim to be the #1 company in oncology, reaching $50 billion in sales by 2030. And importantly, as you have described with CARVYKTI, alleviating suffering and saving lives. We are presenting more than 70 studies in different tumor types, different stages. One of them is related to CARVYKTI. CARVYKTI is our cell therapy, and we have been able to demonstrate that after 5 years of a single administration of CARVYKTI, more than a third of the patients remain disease-free. So that's really, really very important. In this ASCO, as Johnson & Johnson, we are having a full core press.
And at the same time, though, you also have this really early data in a tri-specific antibody. Joe, I know you'll love to hear about that. Mm-hmm. And there's this talk that maybe some of those newer technologies could actually replace CAR-T and the more complicated technologies. So tell us about that tri-specific and where you see it fitting in.
Absolutely. We have been, as Johnson & Johnson, developing multiple myeloma therapies for 2 decades. As a matter of fact, 50% of the multiple myeloma drugs approved in the last 2 decades come from Johnson & Johnson. But our aim as Johnson & Johnson is not only to extend lives, but to cure multiple myeloma. We are presenting data here in this Congress of one of our latest immunotherapies, a tri-specific antibody showing very promising results in very pre-treated patients. So again, our goal here is not only to get the patients disease-free, but get the patients in multiple myeloma to a cure.
And do you think that some of those newer technologies could replace CAR-T and the need for these more complex, both logistically, but also for the patient therapies?
Our view is that there's going to be always a best therapy for each patient. So what we are going in cancer is to be more individualized, more precise with the type of therapy. So there's room both for cell therapy and multi-specific antibodies.
And one of the things that people always look for out of this conference is sort of the latest and greatest in some of those acquisition targets. So tell us about your appetite for doing deals right now, both in cancer and outside of it, especially given all of the macroeconomic uncertainty out there.
We are always looking for the long term, and we're always looking for therapies that are going to improve the standard of care. We're looking for the best science. In 2024, in the last year or so, we have invested $50 billion in M&A in R&D. Our goal is always to be able to look outside. Not all the best science is going to be inside of Johnson & Johnson, and we are looking forward to bring the best technologies to address cancer care. One of these examples is TAR-200, a new therapy for localized bladder cancer. It's a great example of what Johnson & Johnson can do. It brings together a medical device and a drug for the treatment of localized bladder cancer. About 500,000 people a year has localized bladder cancer. We have shown very impressive results with 83% response in bladder cancer, and patients remaining, half of them remaining disease-free after a year of treatment. So those are the type of things that we are looking in the outside, things that are going to improve the standard of care in this area in which we need to continue to work looking for cures.
And you did a big deal recently, just in January. So how much more capacity do you have this year and the next few years? And really, what size are you looking for?
One of the advantages of Johnson & Johnson is our size and scale. We are a AAA rated company, and we have a strong financial position that enables us to have the right optionality. We have a unique business model. We are highly diversified. We have 26 platforms with more than $1 billion, and that enables us to be able to reinvent ourselves at every cycle. It's been 63 consecutive years that we have developed, that we have offered dividend increases, and 28 consecutive quarters in which we have met or exceed analyst expectations, top and bottom line. So our capacity is ample. Our focus, however, it's in early stage deals in which we can improve the standard of care and add value, and that's the majority of the deals that we did. Last year we did 40 deals of less than $5 billion in this category of early stage in which Johnson & Johnson can add its scale, its critical mass to bring medicines to patients.
I mean, we're the envy of the world, obviously in innovation. This most favored, and I've talked to the president about this, and I got nowhere on the most favored nation proposal to, I don't know how we got in this mess where Europe has basically price controls, and now we're essentially going to be importing price controls, which does not solve the issue. You expect 3-4 years from now, if this goes through, will you have the same innovation that you're talking about right now if this proposal goes through?
We are engaging with this administration and sharing the same goal, which is how can we make healthcare and the patient experience better and more affordable in the US, while at the same time maintaining the capacity of life science companies, medical innovation companies to continue to bring new therapies and medical technologies for patients which are badly needed, as we are discussing here in ASCO.
How did it happen where Europe has, it could be 1/10 of the price in the United States?
We have to work on reforming the system. When you look at the net prices, the prices of Europe and the US are more aligned. American patients, for example, in cancer, are able to get therapies 2 or 3 years earlier than European patients. And in the US, we have a system in which the intermediaries, the middlemen, are capturing, in our case, 58% of the value
always the
value chain.
Isn't it? Yeah.
It's important. That's where we should focus on how we can pass that
to the patient. Focusing on that? Is this the right? Is this the right target?
We have a constructive engagement with this administration, trying to balance these two aspects of innovation and affordability, and I'm positive that with this constructive engagement, we'll be able to find solutions.
Were you troubled by the news yesterday about the Moderna messenger RNA vaccines and pulling the deal that they had? Is the science back up that there's problems with messenger RNA? You use your COVID vaccine, I asked you off camera, was an adenovirus. So it's not the same thing, it's a DNA virus, right? So it's not the same thing. Are you going to do a bird flu vaccine if it's not going to be a messenger RNA?
We are not working on vaccines anymore.
Not at all?
Not at all. Our focus is to be able to advance therapies in 5 areas: cardiovascular, mental health, immunology, and oncology. And that's our focus today. Now, I believe that in the US we have a unique ecosystem that has made this country the envy of the world when it comes to medical innovation. It's a combination of factors. We have the best science, we're able to attract the best talent, we have venture capital that is willing to invest, and we have companies like Johnson & Johnson that develop these therapies with the patient in mind. So I'm convinced that the US has all the conditions to remain a leader in medical innovation into the future.
And I want to ask about China, because you've been a leader there, obviously that partnership with Legend, bringing Carvykti here, but we've seen all of your peers going to China, doing these deals. So what are you seeing there? And do you think that the US can remain competitive, or will China leapfrog us?
My lighthouse when we are looking for deals and medical innovation is how this therapy is going to improve patient care, how we are going to improve the standard of care. So we are going to look wherever we find the best science that can improve the standard of care. So that includes China, and that includes the rest of the world. Fortunately, most of the medical innovation today happens in the US. Most of our R&D investments, most of the science today is here in the US, and I think America has all the conditions to remain a leader in medical innovation. I think that's important, not only because it's an important sector of the economy, it's important because there's still a lot to do in medical innovation to alleviate suffering and save lives.
And, going back to most favored nations, the Trump administration basically asked you and other companies to voluntarily lower your prices within 30 days. So are you going to do that?
We're working with this administration constructively to find solutions that are going to address patient access, patient affordability. We commented on the middleman and intermediaries issue, but at the same time, we want to make sure that the US develops the best innovation and that patients have the ability to be able to access that innovation earlier than anywhere else. Think about oncology. 2 or 3 years can make a big difference for an oncology.
Do you expect Europe to step up? There have been some, signs maybe that, it reminds me of NATO. Now suddenly they're going to do 5% of NATO, but they've been remiss in spending the money on innovation for pharmaceuticals. Sort of, not only the United States provides, security and innovation for Europe. They need this while they, take care of, have a much broader social safety net. Do you expect that to change?
I believe they have to step up. They have to step up, and NATO is a good example. They have to step up in the amount of innovation, and also they have to step up in allowing patients to access medical innovation earlier. So Europe will have to step up if they want to remain a leader in pharmaceutical, in medical innovation.
It would be nice if you could just focus on innovation in cancer. You gotta be a politician, Joaquin, right? About 6 times you said we are talking to the administration.
You were at the White House.
Yeah, that's what
not
I mean.
Ago.
We are a company with 140 years of history, Joe.
Yeah.
We have gone through wars, crises, recessions, so we are used to this. And we are always looking for what is going to be best for the American patients, and we are always looking to constructively engage with the administration. We have worked with 24 different administrations, and by the way, we see this administration very open for an engagement. We may not agree in everything, but there's an open dialogue.
Good, and thank you, and we enjoy having an open dialogue with you here. You'll be back.
Thank you. Looking forward to that.
Good. Thank you, Joaquin. Thank you, Angelica. Squawk Box. Coming right back.
Time now for today's Aflac trivia question. What was the first company Elon Musk founded? The answer when Squawk Box returns. Fly. And now the answer to today's Aflac trivia question. What was the first company Elon Musk founded? The answer, Zip2. Musk was 24 when he founded the Maps Directory Company, which was bought by Compaq for $307 million in 1999.
We got closing arguments today in the Justice Department's case against Google, which could determine future changes at the search giant. We're going to be joined right now by Eamon Javers, who's got the latest on the case and what we may learn from the judge, perhaps even today.
Maybe today, Andrew. Look, Google's already lost the case, right? And the judge has said that the company is guilty of being a monopolist. So this phase of the trial has been all about what the remedy will be or how the government is going to punish Google for being a monopolist. Both sides have made their arguments. The Department of Justice arguing that Google should be broken up effectively, and Google largely arguing that the speed of industry transformation as a result of AI means that the company is facing plenty of significant competition already. Google says the government runs the risk of damaging the function of free markets in technology, and that caution is the key for the judge here. And they say that ChatGPT and things like Perplexity are already providing competition. Google is widely expected to appeal if the ruling that's expected in August doesn't go its way. And in the meantime, they could ask for a stay of any court decision here, meaning the ultimate resolution could be years away from us right now. The U.S. government, by contrast, arguing for a massive change at Google. What they want is for Google to stop cutting multi-billion-dollar deals with Apple and other smartphone makers to be the default search engine on the company's products. Now, the DOJ wants Google to have to tell the government before it makes any investments in AI. And potentially most significantly, the government wants to force Google to spin off the web browser Chrome. Now, what's been fascinating about this case, guys, is just the degree to which it has bipartisan support. It began in the first Trump administration, continued through all of the Biden administration, and is going to wrap up here in the second Trump term. We expect the judge's decision by August, then potentially a stay, potentially an appeal, and we see where we'll go from there.
Talking about where we go from there, what is the chance that he rules in August in some way against the company, they appeal it, do they get a stay on whatever the decision is temporarily?
Yeah.
I mean, what kind of thing, how does this play out in practice?
Yeah, I think in practice, a stay would be likely if there's an appeal going. And I think you can expect any kind of adverse ruling here at all, Google will appeal. So I think we're a long way away from practical changes being implemented at Google. But, the government, I think, is pretty confident that they made the bulk of their case here and they're going to get a lot of what they asked for, if not everything. I think in the government's mind, the question is, did we hit a triple? Did we hit a home run? Did we hit a grand slam? Where are we here? We'll see what the judge decides ultimately. Today, I think you're going to hear a recap of all the arguments that they made throughout the course of this trial on both sides, trying to get sort of that one last pitch in to the judge to make sure that they can kind of sway him as he goes back into his chambers to contemplate for a couple of months here before he writes his decision.
Okay, Eamon Javers, thank you. We'll be watching it.
They got bigger problems, right?
The bigger problems is AI, you mean?
Yeah.
Well, they have bigger problems, but they're also one of the leaders in AI. So it's sort of, we'll see.
Well, they're bread and butter.
The bread and butter is the blue link economy of search.
Right.
Right. Question is, does AI actually, is that a bigger and better business?
For them.
For them.
Coming up, did you get your rental in the Hamptons yet? Go westward. Well, if you hold out a bit longer, you may get a better deal. More on that. And Airbnb shares are lower this morning. Truist downgrading the stock to a sell. From a hold, the firm predicts a weak summer travel season in the U.S. as well as Europe. Swap costs go right down.
out and make it count.
Welcome back to Squawk Box. Summer rentals in the Hamptons apparently feeling a chill, and that could mean discounts for those who haven't booked their vacations yet. Who knows about this? There's only one person I know who knows about this better than everybody else, and that's CNBC wealth reporter Robert Frank.
You probably know more people in the Hamptons than I know.
I may know them, but I don't know about the economics of what's going on in the rental market or the buying market in the Hamptons.
That I do know a lot about. Right now, Hamptons rentals are down 30% compared to last year. Discounts and unrented beach homes are piling up by the day. There are now between 4,000 and 5,000 homes still available for monthly or seasonal rentals. Some high-end brokers, those are the folks that rent the big beachfront homes, they say their business is off between 50 and 75%. Now, brokers blame all the cold and rainy weather we've been having, or they say families are taking just longer to make their summer plans, or maybe a lot of them are just holding out for bargains in an increasingly expensive Hamptons market. They say all the renters, or at least they're hoping those renters will all come back by July when things get hotter around New York City, but some do fear that all the market volatility and all the economic headlines are causing the affluent to pull back. Now, homeowners out in the Hamptons cutting rents by 10 to 20% already. So what do you get for your money? Well, this 4-bedroom waterfront in Bridgehampton was asking $425,000 for the summer, getting a $50,000 price cut with an option of just renting for July or August. So if you're on a slightly smaller budget, this 3-bedroom in East Hampton with a pool just got reduced to $33,000 just for July. You can also rent it for 2 weeks, so renters are basically getting a lot more flexibility. For more on the whole summer rentals market and the Hamptons real estate market as a whole, you can check out the Inside Wealth newsletter at cbc.com/insidewealth, at cbc.com/insidewealth.
I think if you dropped down a lot of money on May, what a crappy month. That's the worst month in history. More rain than we've ever had.
And the brokers say that's why people in New York City just aren't thinking about summer yet, and so they're
because there hasn't been any summer.
There hasn't been a summer yet. It's just like when we get snow here, people finally go skiing in Vermont. So they're hoping that. I think that a lot of the wealthy are going to be in Europe. I mean, the people I talk to are in the south of France this year. They're in Italy.
Who the hell are you talking to? Really?
Well, everybody that you talk to. I mean,
I haven't talked to anyone who says they're in the south of France.
Really?
Maybe I'm not talking to the right people.
No, Europe is still, relative to the Hamptons, a much better value. I mean, you can get incredible places in Tuscany and Greece for less than half the price.
Well, I know.
Right. The problem is you got to get on an airplane.
You got to get on an airplane, and then you got to drive, and then you got
Seaside Heights or Sleeside Heights or whatever it's called, down to on the shore.
Oh, okay, got it.
It was Snooki.
The situation.
Yeah. Oh, from Contino. Speaking your language, Rob. All right, thank you.
Thank you, guys.
Beach Haven, LBI. Come on. That's what I was saying. Don't go east. You can't get there from here, can you?
You can. Just a lot of traffic.
It's one road. Who thought of that? Who thought of that? Who thought, huh?
You
got to do Blade or something.
Yeah, well, how are they doing?
They're doing great. I mean, they got the summer pass for $4,100, and on Fridays in the city, you see a lot of helicopters and seaplanes.
Seaplanes,
a lot of seaplanes.
A lot of them come back for tomorrow night. They all got the courtside seats.
That's true. That's true.
Coming up, the major averages finishing a very strong month with some key inflation data on the way at 8:30 a.m. Eastern Time. Squawk Box returns after this.
Fly.
Good. Welcome back to Squawk Box. Take a quick check right now on futures ahead of the PCE inflation data coming up at 8:30 Eastern Time. You're looking at the markets off right now. The Dow off about 30 points. The Nasdaq looking to open down about 22 points. The S&P 500 off about 8 points. Here to talk markets right now is Alicia Levine, head of investment strategy and equities at BNY Wealth. Good morning to you.
Good morning.
So what do you do with this whipsaw of a situation? It's not really a whipsaw anymore, or is it? I don't even know what to think.
Kind of like a mosh pit.
Mosh pit?
It's a mosh pit. Look, I mean, I think what we saw yesterday was how much the markets actually hate the tariffs in the morning, like
Right.
just hate the tariffs. But ultimately, we ended the day where we started the day, more or less, which is the market assuming...
With the tariffs back on.
With the tariffs back on.
So what does that say?
What it says is that the market's already priced in some endpoint of this, which is manageable, about 10% universal, and some others on China and some other sectoral, but manageable. And that's what the market's been telling us for the last few weeks. So, you know...
So we're not worried about tariffs anymore.
I thought the market was like me. Be careful what you wish for. When the tariffs were gone, I was like, wait, we put in a lot of time and effort negotiating with 140 countries to try and get something. If they're going to be gone completely and everyone's going to walk away from negotiations, that didn't make me happy. The markets, before they were back on yesterday, the markets had already sold off. They didn't like that the tariffs were off. The market was already negative for the Dow.
Because because two things. Because it's going to extend the negotiations. So there's no hammer on the negotiating partners here. If this is going through the courts for a couple of months and they have to do the studies. And on top of that, the $200 billion a year in revenue that is going to offset the big, beautiful bill. Because if you add, I know the CBO is not going to take the tariff revenue, but it still offsets it. We all know that. It's math.
I'm not sure the market really hates them that much because oh my God, I'm going to say at the end of the day, but I really mean, I don't like that expression, but at the end of yesterday's trading session, the market was up even though the tariffs were back on.
Right.
Right?
But because there's going to be some, we all know, whatever the courts say, the administration has levers it can pull to keep some tariffs on. But it's not a disaster, and that's what we've been hearing from markets for the last few weeks. That we're not going into recession. The U.S. economy is strong enough to power through
we'll
it.
See inflation,
and the softer data is moving up. So we had the sentiment data a couple of days ago, and the city surprise index for the U.S. is moving higher.
But then explain this. We have CEO confidence. You see some of the CEO confidence numbers down.
But consumer confidence was way up.
But then I saw on the buy now, pay later stuff. I don't know if you see the Klarna and some of these other guys. They're having more defaults. So it's like this whipsaw of, is it good, is it bad? I don't know.
But we really haven't had a horrible data point, have we?
We have not had a horrible data point. Now,
economy-wise.
I would say, where would that come from? It could come from the labor market. I think that would be the most powerful.
Next Friday?
Possibly.
Yeah.
Could. Again, not there yet. And even the 240 on the new claims data yesterday, not a disaster. I think the market had expected something worse earlier.
Have you been surprised how quiet inflation is?
Very, very surprised.
What do we see today with the PCE?
So look, I mean, it's, if it comes in as expected, we're lower by 10 basis points on core and headline, and it's in the mid-twos, right? So that's low enough. If the expectation is that the full force of tariffs is not coming for another month or two, and if you extend the negotiations, the uncertainty extends. I'll just say this: the market priced it in long ago, right? It priced the downside in long ago, and so whether we don't think you see 4,800 again.
And what do you tell me? America is still exceptional?
America is still exceptional.
That's in you have a piece in Barron's?
I do. Because the conversation about American exceptionalism being over and rest of world catching up as much better investing opportunities, it's a tactical trade. It's not structural strength. And when you're investing for the long term, where do you get return on investment? Where do you get the creation of deep capital markets and investor base? We are a country of capital providers and investors, which is simply not replicated elsewhere. That's why the best ideas come here. We create and incubate companies. And you can have a year where the rest of the world outperformed, but that is not for structural investing. You need to be fully diversified and not forget what brought the markets to where they were.
250 years next year. Don't forget that.
Don't forget.
Greatest thing ever.
I also think she's wearing a very sort of Americana blazer that's quite striking.
Kind of is, yeah.
It's just bright. It's sort of an American, right? It's a little pink, but almost red, like a red and blue. Yeah. Awesome. Thank you. Nice to see you.
Coming up, a new report says officials are investigating an effort someone did to impersonate White House Chief of Staff Susie Wiles. Where was Carlos Watson? Sorkin. Someone who was.
Where's Carlos Watson?
It may have involved artificial.
Probably working in the White House now.
I think he's out, right?
Well, no, he's out and back. Right.
That story went Squawk.
Who get it done.
Federal authorities are investigating a clandestine effort to impersonate White House Chief of Staff Susie Wiles. That's according to a Wall Street Journal report. Said someone reached out to prominent Republicans and business executives pretending to be her. The FBI and White House are trying to find out who was behind that effort and what their intentions were. The Journal says some people familiar with the matter said officials believe AI, artificial intelligence, was used to imitate Wiles' voice. Lawmakers were reportedly suspicious of the calls when the impersonator asked questions about President Trump that Wiles should have already known the answers to. And in one case, the impersonator actually asked for a cash transfer.
By the way, though, this is something, I mean, we're talking about in the context of government, which is nerve-wracking. It's happening, no, in the context of business, CEOs, CEOs, COOs, this is the new thing that everyone's got to be nervous about. You are going to start getting calls from people that you think you know, asking you to do stuff. And think about if you were running a company and you got a call from someone who supposedly your CFO saying, oh, we got to transfer, by the way, we got to do this transfer this afternoon about whatever.
Right.
And you actually think you're talking to the person who works with you.
Right.
Like, that's happening.
It could be a lot.
Everybody needs a password. Seriously. We need our own password, you and me. So that we're not,
If you get a call that, I'm in jail, I need to be...
If I get a call from you, I know it's not real to begin with.
Right, so. Exactly, that's right. Would you bail me out if I absolutely needed help to get into the show? I don't know what I'm arrested
to get into the show. That's why I'm bailing you out to get you into the show.
Yeah.
So you bailing you out to get you into.
Bail you out. Elon, we don't want to go here. Elon, hopefully nothing's going to happen. Elon Musk's official government service drawing to a close. We're going to check out what's next for Tesla stock after its 25% run up this month. Smart Parts coming right back.
Why?
Tesla shares adding roughly 25% just this month as Elon Musk wraps up his time as a special government employee. Joining us now with more on what's next for the EV maker, Colin Rush, Oppenheimer senior research analyst. It's something for everybody, Colin, in these numbers. If you look at the full year, a 1 year move, it's 103%. Stock has doubled. However, since the president took office, down about 16% at this point. Let's take a lot of this off the table now. I don't know about reputation and all that things. Let's talk about June 12th and that launch in Austin of the robo-taxi. Is that what everyone's focused on?
Without question, and that's the future of this company. The real value here is their leadership in physical AI and autonomous vehicles. And what we're expecting is a very modest launch that they'll have, a dozen or a couple dozen cars on the road, operating, as a, autonomous vehicle fleet. We do think they're going to claim victory on that, and that there's going to be, a very aggressive effort by the company to go through learning cycles with those vehicles on the road. That, at the end of the day, is going to be the future of the company. And the pace of that learning is going to really determine whether they are the leader or they're a follower here in the technology.
What do we know about just what we used to think of as the business of Tesla, just deliveries? Is it it was disappointing, I guess, recently. Does it matter anymore?
You know, I think the real benchmark for most investors is whether the company remains cash flow positive. If they're able to continue to at least run at break-even cash levels, you know, I think most of the bullish investors will look at the technology potential and look at the track record of the company of creating value for investors and remain involved. You know, if they start burning cash, that's a real canary in the coal mine for us, and I think a lot of folks on the company. At this point, though, I mean, there's some real concerns around, you know, legitimate performance with drivers out in a variety of conditions, including inclement weather, as well as some complex scenarios where the vehicle has to look around multiple variables on the road. And I think how those vehicles perform in the field here over the next 3 to 6 months will have a very big weight on how the stock performs over the next several quarters.
I mean, as time passes, and he goes back to being Elon Musk, the businessman, the innovator and entrepreneur, and not the special government employed. And is he totally separated now from that perception? Is the reputational damage he got with certain sectors, is that repairable? And will there be a time when you say, well, that was Elon Musk 6 months ago, we're not mad at him anymore? That group of those individuals that were keying Teslas and firebombing dealerships?
I think there's certainly some folks in the middle of the political spectrum that will look past that period of time, but I think there's certainly folks on the left that will no longer you know, participate in any sort of commercial activity with Tesla here going forward. I think there's some, you know, deep permanent damage with a lot of folks on the left. You know, whether that hinders the company's growth or not is not, you know, over the long term isn't quite determined yet here. You know, I think there is a big enough market for them to grow into, but I do think it limits the ultimate, you know, scope and scale of the business, where he was universally respected and loved across, you know, both sides of the aisle for a period of time, and I think that time is now permanently over.
Very good. All right, and some of the other, I don't know if they're promises, but forecasts from Elon Musk about, you know, when, I mean, we'll see what happens with Austin, but they're supposed to sell a lot of these cars next year, aren't they? And is that going to happen?
You know, I think TBD, you know, what we've seen with the new product launches is that, you know, since the Model 3 and Model Y, it's been disappointing. And so, you know, as they continue to work on cost reduction and improve performance, we do think that they have to do a pretty meaningful refresh on the underlying platform to really drive incremental sales. And I think they have it within the organization to do that, but it's a big challenge, especially as they're rolling out this autonomous vehicle platform.
Okay. Thank you, Colin. I appreciate it. Good to see you. Thanks.
Likewise.
I knew that. I knew that. Yeah, I knew that.
You knew what?
I knew the Knicks.
You know a lot.
I knew the Knicks are in Indiana, and the final game,
Yes.
the 7th game, would be here. I knew that. Someone saying that. Yeah, I do know that they're. So obviously they wouldn't be, but they'd be flying back for a 7th game if it happened. If it were to happen, but it's hard to remember. So they started and only now it's one. Now they're staggering. You know, they play
Back and forth,
two.
back and forth.
Now it's back and forth, back and forth.
But I will tell you, it didn't get as crazy last night as some of these other things.
You were there.
I was there, but I was gonna say, I don't know if you saw the images when they won before they got to the Pacers, and it looked like, you know, 34th Street had gotten taken over. There were more cops, and they really, like, they were ready for I don't know what last night. It was pretty extraordinary to see what was going on.
Get ready for
if there's a win.
51 years.
Great for New York.
51 years. It's 8 a.m. 8:02 on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kerner along with Theodore Ross Sorkin. Becky's off. Among today's top stories, the Fed's preferred inflation gauge is due out in about a half hour. Personal income and spend, that's PCE. Personal income and spending will also be released. The futures ahead of the numbers aren't doing much. Dow's down about, indicated down about 22 points. Not much movement in the other averages. Our other top story is the fight over the future of the tariffs. federal appeals court allowing the tariffs to stay in place for now. And we're going to be speaking in just a couple minutes to U.S. Trade Representative Ambassador Jamison Greer. Let's get to Mike Santoli, who's looking at the markets ahead of today's big inflation report. Our last guest has a column in Barron's. Are you familiar with that publication?
I've heard of it. Yeah, 15 years. I was my byline was in there. Still take a look at it. It's good stuff. Look, Joe, you mentioned it's quiet in terms of the equity futures. It's true. It kind of means we're holding on to Tuesday's 2% pop in the S&P 500. This has all been part of this process. Really, you go back to the beginning of last week where the market is digesting that huge recovery, 20%-ish off of the early April lows. I also like to point out, this goes back to end of September of last year, just how much time we've spent in this same zone. On November 6th, the day after Election Day, the S&P 500 went from below 5,800 to above 5,900. And we've kind of stayed in this zone for like 2 out of the last 7 months or so, at least give or take. So it's obviously sort of this broader wait and see. We've had 2 quarters of better than expected earnings over that period of time, obviously trying to assimilate what the policy mix is going to mean. More near term, more tactically, look on a month to date basis, stocks versus bonds. Obviously, big sell-off in bonds. This is the aggregate bond index right here. And therefore, people are expecting, or at least we have actually been seeing, some reallocation among pension funds and other balanced investors out of equities into stocks. It's supposed to be a big rebalancing. Maybe it's already happened. Yesterday, they sold a very strong open in equities and actually had a bid in bonds, so yields have come back a little bit. That could be supportive if it sticks. Take a look, too. We're going to get that PCE inflation number at the consumer discretionary sector. That is in blue here. That's on an equal-weighted basis, consumer discretionary, against crude oil. Look at that gap that's opened up. Obviously, that's supportive of consumer activity. It can kind of restrain headline inflation when oil is obviously making lows. And it seems as if, so far, the consumer has, in aggregate, held in there okay, at least in the market's assessment, guys.
I have a slightly different one for you, Mike, which is when you think about what this market has already done with tariffs, I still just can't get over where we were yesterday morning or where we were yesterday afternoon, given what everybody thinks, and I still don't really know what the market, I don't really understand what's baked in anymore.
Well, I think the inference is that with that recovery that we got in the stock market from early April into the middle part of this month, you priced in some significant level of de-escalation on tariffs. If you just read all of the street research, everyone is saying, okay, the 10% across the board probably sticks. Maybe the blended rate, when you consider China, is 15-ish, 18%. Well, that already assumes that we're going to be coming down from the stated rates after this 90-day pause. I do think yesterday also probably, though, reflects just all these overlapping deadlines and all of the possible workarounds and all the different levers that might get pulled. One thing that the court decision maybe decided was that we're not going to have a clean view in early July after that 90-day pause of exactly what the rules of the road are, because maybe it's still going to be evolving after that point.
Okay, Mike, thank you. Appreciate it.
Yeah.
We come back a lot more on Squawk. Why scrutiny surrounding universities has Silicon Valley worried. Kay Rooney is going to join us right after the break with that story. And then President Trump's tariffs reinstated by an appeals court. For now, U.S. Trade Representative Ambassador Jamison Greer is going to join us with the latest, a conversation you do not want to miss about what happens next.
happy with it.
All right, for the latest on the Trump administration's court ruling on tariffs and what's next, let's bring in U.S. Trade Representative Ambassador Jamieson Greer. It's great to have you on today. It was great last time. Welcome back. Thank you, Mr. Ambassador.
Great to be back. Thanks for having me.
I guess we'll start with some of your comments about the rulings yesterday and the prospects for what is likely to happen. I know there's a lot of things that are being discussed right now. Do you think if you were to get emergency relief from the Supreme Court, you think they'd come down on the president's side? Do you think you have a strong case, or will it stand the way it is right now?
Well, I think we have a very strong case. Congress clearly delegated to the president the ability to take action when there's a national emergency. We've declared a national emergency. We've taken action. We have a stay from the circuit court right now. All the other countries I'm dealing with in negotiations are treating this as just kind of a bump in the road rather than any fundamental change. So I feel pretty confident about the case, and if the case goes the other way, we have other tools as well.
Yeah, I've expressed that sentiment earlier that you don't know what you've got till it's gone. As a pure conservative and a markets type guy, tariffs I think they can be effective, but there's times when you kind of wish that we would just maybe not be doing as many. But then we've come along so far, Mr. Ambassador, that to pull the rug out from the negotiating ability by making all these countries we're negotiating with think that the tariffs might not stick, that's frustrating. But you're telling me again that none of those countries expressed any. They weren't saying, all right, we're going to pull out of these negotiations because we don't need to anymore.
It's actually the opposite. When I woke up, the morning after the initial ruling, before we had the stay, I had emails and texts from foreign officials saying, we're just going to keep negotiating with you as before. We understand that these are, this is litigation. Things go up and down. We understand the U.S. policy going forward, and we're negotiating with you as before. So that's what's happening.
I guess you've read enough about some people view the emergency, that provision as maybe not being the best way to do it. Is it possible you would use the Trade Act of 1974? You get 150 days, and then you have to actually go on an individual basis and prove that tariffs are something to be done. Is that being looked at this point?
Well, first of all, it's important to understand that the president's trade team has been thinking about these legal tools for years, right? And we have a lot of folks on TV and the internet who've been thinking about it for about 6 minutes. So of course these are things that we've been considering and talking about for a very long time. All these things are on the table. The reality is we have this enormous trade deficit. It got worse over the Biden years. And if we don't fix the global trading system, it's just going to get even worse going forward. And we have to fix it.
Right, but you think you could convince the Supreme Court that
China.
Suddenly the Rubicon was passed in terms of the trade deficit, that now it's an emergency, but it hasn't been an emergency. We've had a trade deficit for decades. And I just think, isn't it hard to make the case suddenly it's reached that level that it's now an emergency?
No, I don't think that's a problem. And in fact, the lower court that took issue with the president's action, it wasn't really on the nature of the emergency so much as their views on the implementation. The reality is the trade deficit has exploded by 40% over the past 4 years. It was $850 billion around the beginning of the Biden administration, ended at $1.2 trillion. So that's extreme by any measure. It's one thing to have a deficit or surplus that fluctuates over time, but to have it increase so substantially in such a short time and be accompanied, by also a worsening in our net international investment position, where we're at negative 26 trillion at the end of last year. I mean, this is crazy stuff where foreign firms and individuals have claims on U.S. assets in a way they've never had it before. That's a dangerous situation.
Jim, so this is what's happening in the markets is not you, as far as I can tell. There has been, President Trump just did post on Truth Social saying that, in his words, 2 weeks ago, China was in grave economic danger. The very high tariffs I set made it virtually impossible for China to trade in the United States marketplace, which is by far #1 in the world. We went, in effect, cold turkey with China, and it was devastating for them. Many factories closed, to put it mildly. There was civil unrest. I saw what was happening and didn't like it for them, not for us. I made a fast deal with China in order to save them from what I thought was going to be a very bad situation. And I didn't want to see that happen. Because of this deal, everything stabilized, got back to business as usual. Everybody was happy. That's the good news. Bad news is that China, perhaps not surprisingly, has totally violated its agreement with us. So much for being Mr. Nice Guy. Did you know about, you have a heads up about this?
I mean, this has been something we've been discussing ever since Geneva. You know, the president, you know, I speak to him nearly daily basis, as do his other advisors, and we've been very focused on monitoring Chinese compliance, or in this case, non-compliance, with the agreement. And we're very concerned with it. We moved, as the president just said, very quickly. No one can deny that. The United States did exactly what it was supposed to do, and the Chinese are slow rolling their compliance, which is completely unacceptable and has to be addressed.
Is it beneficial for this negotiation now to be effectively taking place in public? I mean, there's been some level of which this has already happened with us. We've actually been quieter, frankly, than they have to some degree, but the president's comments today, obviously, as we're watching the market, you know, this is complicating things.
Well, I mean, listen, I would say there are, you know, a lot of different ways to deal with folks. You make every effort to be diplomatic and professional and to do things behind closed doors. You know, but at some point, you know, the impact on the U.S. economy or the trade relationship becomes such that it's hard to withhold that anymore.
We might have gotten a little bit of a heads up on this from last night when the Treasury Secretary in an interview said that talks had completely stalled with China, and that it was going to take a phone call with President Trump to President Xi to get things back on track, and he expected that in the next couple of weeks. Can you say that, is that in the works?
Yes, that's accurate. And you know, the Treasury Secretary, you know, his characterization is accurate, of course. I would say that, you know, conversations and calls continue at lower levels, but ultimately the nature of the things we're talking about, it does require some leader-to-leader understandings, right? We made a huge effort in Geneva to accommodate the Chinese. And listen, it always ends up being this way, whether it's the United States or other Western countries have always sought to accommodate the Chinese. We've had open markets, etc. And time again, you know, we see the Chinese come down and not comply with their agreements, you know, slow roll compliance, you know, not open their economy like they should. Right. So unfortunately, we're seeing that trend continue.
Just, and I ask this effectively on behalf of just the folks who are watching us. Can you tell us specifically what they did or frankly didn't do in this case?
Well, remember, when the United States imposed reciprocal tariffs on the world, right? This wasn't China specific. There were other, you know, countries that had higher tariff rates than China assigned to them. China was the only country to retaliate. Remember that. And so the president was forced to retaliate to maintain the effectiveness of the tariff. Now, when the Chinese yeah, let me get to that. When the Chinese retaliated, it wasn't just with a tariff. They put in place countermeasures where they put certain U.S. companies on blacklists. They restricted the flow of rare earth magnets to us and other countries in the world. And so when they agreed in Geneva to remove their tariff and their countermeasures, they removed the tariff like we did, but some of the countermeasures they've slowed on. If you read the news, you can see that Europe, Japan, United States, elsewhere, we haven't seen the flow of some of those critical minerals as they were supposed to be doing.
We have also heard, I guess this was Kevin Hassett in this case, that there may be something forthcoming in the next week or so in terms of some of these trade deals, maybe with some of our important partners. Can you shed any light on that?
Sure. I mean, I'll say that I have almost standing calls with the Indian Trade Minister every day. You know, I have meetings next week at the OECD with the Malaysians, the Vietnamese, the EU. You know, we're in intensive talks with all of them. You know, we also want to, you know, make sure we kind of get through the stay and appeals with the current tariff situation, so our partners have a better understanding of the landing zone. But like I said before, the negotiations are on track, and we do hope to have some deals in the next couple of weeks.
What's is there a running total on how much has been garnered so far on the tariffs, James? I mean, we're now in the we haven't moved on, but we're talking a lot about the big beautiful bill, and there are some concerns about deficits, et cetera. And even though it can't be included maybe in the CBO estimates, anything would be good to add to, to try to pay our debts.
No, I think that's right. And listen, obviously the president's action is based on a national emergency getting down to deficit, but to the extent you have tariff, there is a revenue effect. And if you look at the revenue effect, I'm not the OMB guy, but it's it's hundreds of billions of dollars if the tariffs go forward as currently drafted.
When do we expect to hear about whether you need to take a different route in terms of whether you need to go to that 1974? I mean, the president, I think, the first time in his first administration, did he not use that 1974 Act for some of the tariffs with China?
That's right. That's Section 301 of the 1974 Act, and that's a very effective tool. It takes more time. Remember, we're in an emergency, so we had to address this quickly, so that's why we use the Emergency Act. Section 301, that's something we've already done, with respect to shipbuilding this term. We have some other things in the works with respect to semiconductors, and we can certainly expand the use of that as necessary.
The panel that we did have in the International Court, I think, was a Reagan appointee, an Obama appointee, and if I got that right, and a Trump appointee. Is there a reason to think, with the composition of the Supreme Court, that you would get a reversal of that, Jameson?
Oh, I think so. I mean, I do think that we're in a situation, as the president and others have expressed, that we have the judicial branch right now, feeling like they have some kind of authority over over matters that are clearly within the president's remit, not only constitutionally but as delegated by Congress. For a court to get involved and say whether or not the president is appropriately responding to a national emergency is really just beyond the pale, and I think the Supreme Court will recognize that.
Do you think at this point that the most important thing that we're talking about, I mean, Europe's one thing, the EU, even India and Japan, is it all about China, Mr. Ambassador?
Well, I would say that when it comes to the trade deficit, China's the biggest problem. But the EU is right behind them, and when it comes to non-tariff barriers, certainly we have that in China, but we also have that in the EU with respect to their standards on industrial goods and ag, where they effectively block a lot of our products. Obviously, with China, you have a geopolitical layer on top of that, where their geopolitical goals are different and at odds with ours, and so that's its own challenge. But when it comes to the pure economics, I mean, we have problems with all kinds of countries, friend or foe, and we're trying to resolve those.
The EU, that was an interesting, I mean, every day it seems like we have so much to discuss. Can you just give us some color on what you were hearing from the EU prior to that phone call over the weekend, and what are the issues that are most intractable? And now we've had a couple of days since the phone call. Where does that stand now?
Certainly. Well, just remember, there is a very long history of problems in U.S.-EU trade, where the EU has enjoyed very broad market access to the United States, and the EU on its end has somewhat higher tariffs than the U.S. They're not sky high like India or other places, but they're higher than us. And they have these non-tariff barriers that require our companies to, do double testing of their products once they might certify in the U.S. and they have to certify again in the EU under a different standard, or they block our agricultural goods because they don't like certain of the type of food or hormones that our food has in it. And these are things that have gone on for a really long time, and that's why the EU, it's one reason why the EU has a $240 billion surplus with us. It's not because they're competitive. We had this big Draghi report come out, several months ago saying how the EU is not competitive. So the fact that they, despite that, managed to have a huge surplus with the U.S. certainly shows there's a structural problem there that needs to be resolved.
Well, they're wrangling. We're wrangling cats, and this is like an intra-wrangle over there. They've got how many countries that they've got a
27. That's right.
Yeah, they've got 27.
So what is the chance that by July 9th you have a deal with the EU? And by the way, what's the chance that you have deals with, whether it's Japan or India or South Korea or some of these other countries, prior to that?
Right. So with the EU, to your point, they've got 27 members that they're wrangling, but they have had a fire lit under them. They know exactly what we want. They've known for weeks and months even. They are moving. The call between President von der Leyen and President Trump went very well. They were responsive. I won't go into detail because, again, we do these negotiations in a confidential way. But we are, reviewing possible ways forward right now. I'll be meeting in person with my counterpart early next week when I'm over there in Europe. And so we expect to, we're trying to achieve agreements in principle with these folks to get the general contours of these agreements so we can know, how we can adjust our trade policies towards each other to be more reciprocal and more balanced.
Yeah, the president in that Truth Social post that we talked about right at the top, Mr. Ambassador, seemed peeved. Do you know specifically what he's mad about, and what is he accusing China? Which violations, recent, just since the Treasury Secretary got back from Geneva? What's he talking about that they've been violating blatantly since then?
Sure. Well, I mean, you saw the president's tweet. I mean, and you can just read in the news that China continues to slow down and choke off things like critical minerals and rare earth magnets, etc. Obviously our deficit continues to be enormous with China. There was some discussion of them opening their market, something that they expressed they wanted to do. We're seeing them do export curbs. We're not seeing major changes. So, this is unfortunately par for the course.
I don't want to take a side either way, but it doesn't sound like there's been what I'm trying to understand is, given the post that we just read that the president wrote, it doesn't sound like there's some kind of new twist to this necessarily, though the post seemed to suggest maybe that there was.
Well, we have one agreement with the Chinese from Geneva. That's what we're focused on. It's fairly narrow. It's about the U.S. and China taking down tariffs and for the Chinese also their countermeasures. And some of those countermeasures, we're just not seeing them go quickly enough. Some they have, right? Some they have, and that's verifiable. And others, they're being slow. And we're trying to work through that with them.
Ambassador, I had two other quick questions. One is this U.S. Nippon Steel deal and the golden shares that the United States government has assured itself of as part of that transaction has raised questions about whether a similar kind of model could be used for TikTok and could be used for other companies in the United States that foreign countries either want to own or otherwise buy. Should we think about it that way?
So some of that's a little outside my wheelhouse. I'm not involved in the TikTok matter, and the review for the Nippon Steel deal is the details of that remain confidential relatively. I would say that the United States, the underlying principle is that the United States should have control over key critical sectors, whether it's basic manufacturing or high tech. In the event that foreign countries or foreign individuals or firms want to acquire these companies or have large investments, the U.S. has to maintain control on things that matter.
And the other question I had is, the president's been very outspoken about his views about Apple and Tim Cook specifically. And I'm curious just how you think about that in the context that at the same time the United States has taken, for example, the EU to task for trying to fine or otherwise extract fees and other things from American businesses, and whether criticizing and publicly criticizing American businesses gives other countries sort of an opening to do things similarly.
Well, I would say that the president he has the prerogative of being the president, and if he has specific views and concerns, he's going to express them. And we all know that for the past 7 or 8 years, we have been trying to get companies to reshore to the United States and have supply chains that aren't dependent on China. And the president in his first term, he tried really hard to get folks to do that. He sent very clear messages. He imposed tariffs that were incentives to reshore. The Biden team, whatever you might say about them, they kept the president's tariffs in place because they knew that was the right thing to do, and the president has doubled down on that strategy here. And so, when you see companies that after 7-8 years of this almost bipartisan approach continue to be dependent on China, that seems like a high-risk business strategy to me.
Very good. Thanks for all the time this morning, Mr. Ambassador, and we're obviously going to want to check back in with you in this fast-moving situation that we're watching play out in real time. Thank you.
Thank you. Have a great day.
All right, we're just seconds away from the Fed's preferred gauge on inflation, consumer spending, and personal income. The futures are different than they were. Not out of control, but we were basically unchanged. Now we've got triple-digit losses now in the Dow, down almost 200. It was, I think, down 200 at one point. NASDAQ taking the brunt end of things as well. I'd have a look at the at yields, see if there's been any movement. Not too much. 442 still below the 4.5. It's still below 5 on the 30. It's still below 4 on the 2-year. Rick Santelli standing by with some important numbers from the CME in Chicago. Rick, they should be hitting any second, right now, in fact.
Yes, they're hitting the wires as we speak. These are, of course, personal income and spending for the month of April. We're also getting inventories, which are hitting the wire first. Wholesale inventories unchanged. We're expecting up 0.4. Retail inventories come in as expected, down 0.1%. And personal income is up 0.8, up 0.8%. That is almost triple the expectations, and it underscores, we could talk about a lot of issues, but when you look at income for the first 4 months of the year, they're powerful numbers, Joe. Up 0.6 in January, up 0.7 in February, up 0.5% last month, up 0.8 this month. This is a great 4-month start to any year. Now, with the income shooting up, and by the way, 0.8 is the strongest income month-over-month jump since May of 21, when it was 1.9. If we look at spending, comes in exactly as expected, up 0.2. This follows an up 0.7 number, which was the best since December of last year. Now let's look at real spending adjusted for inflation. Comes in a little better at 1.10, but well below last month's up 0.7, which was the best since January of 23. If we look at the inflation numbers, and here we go, on a month-over-month basis for PCE up 0.1 as expected. On a year-over-year PCE up 2.1, that's 0.1 lighter than we were expecting. 2.1 equals SEPA 24. To find a lower one, you're back to February of 21. Now let's look at the core numbers on a month-over-month basis, up 0.1, exactly as expected. And if we look at a year-over-year perspective, 2.5 exactly as expected. A tenth lower than 2.6 last month, which then was revised to 2.7, which makes us down 0.2%. 2.5, well, the last time we were here, if I have to go back, wow, it's been a while since 2.5. I would say that you're going back to the spring of 21. Now, we talked about inventories. The last number is, of course, a very important number to this administration. This is the trade balance, which is a deficit, expecting minus 143 billion. Wow, it comes in much, much smaller, minus 87 billion. And now this follows a 163 that gets converted to 162 billion with a minus sign, the worst since record-keeping 1989. Then we cut it in half to 87.6. 87.6 would be the lightest, and I have to really go back. 87.6 would be the lightest since, wow, September of 23, SEP of 23. And this really does underscore how the movement of goods and services has really changed due to a variety of tariff-related issues. Now, after all of that, where are the markets? Well, up a little bit. We're at 441. We're now at 443 and a 10. By the way, it settled last week at 451. A 2-year is at 393. It was at 392 before the number, down 7 on the week. And I will just point out one more thing. Both maturities before the number were on pace for the lowest yield closes in 3 weeks, but we see that rates have moved up just a smidge. Joe, back to you.
And if I were the White House, Rick, I'd be, whether they can take credit for everything or not, I'd be crowing about all those numbers. Everyone, was there a single one that...
The income numbers, really, for the first 4 months of the year, they're stellar. They're really stellar. I mean, I could go back and look at the first 4 months of many different years. Really very strong numbers, and you're right. This administration is criticized for just about everything under the sun. I've never, ever in my lifetime had glimpses into the politics of an administration in the form of transparency like this one. Why don't we be, give credit where credit is due? Income really shooting up.
Rick, I also thought everybody was going to get one last order of imports that were going to be tariffed, and they were loading up on things. How the hell they already fix the trade, or not fix it, but to cut it in half? That's crazy. So there wasn't a lot of front loading of things that they needed before the tariffs hit.
Yeah, I'll tell you what, it really does call into question some of the conventional wisdoms. And, it's going to be interesting to see what happens next month when we get this number, or we see some of the other numbers like current accounts, see how they fared. Because I don't know, I've been watching these numbers a long time. I don't think I've ever seen the trade deficit cut in half in 1 month.
Crazy. You're going to hear Trump saying it's I remember Biden used to say that, it's working. He used to say that weird voice.
What?
But now
Quit whispering, I can't hear you, Joe.
It's working, right? Come on, man. Joining us now, former Trump White House National Economic Council Chief Economist Joe Livornia. He's SMBC, it's laughing, Nico Securities Chief Economist, and former Biden Treasury Department official Natasha Sharon. She is a professor at Yale, president of the Budget Lab. So I'll start with you, Joe. You could cut here. The only reason you wouldn't cut is because personal income and everything else is so strong.
Because if you look at Powell's favorite indicator, the Supercore, which is services, they're running at 3%. It's down from where it was. It's come down 100 basis points. So a Powell adjusted real funds rate hasn't moved from where it was last fall. Moreover, Joe, as you were talking about, the trade numbers are better. The tariffs revenue is upwards of $300 billion, and there's been no effect on the inflation numbers. It's all been absorbed in the margins, which is what yours truly and many others had argued could happen. And so far, it's played out great.
We talked about that earlier. You should say use the third person, say which Livornia was arguing. That's really sound. That's when you really get impressed with yourself.
Well, you were arguing with me as well when I was on.
Kernan was arguing.
Kernan was
arguing? What was that?
But I would argue that this is exactly what the administration laid out, and this is so far what is playing out in spades.
So I think the challenge with interpreting any one set of data in that way is that it's true that the inflation numbers are giving us a bit of a backward-looking indicator. We're talking about inflation in April, and in April, what was on store shelves is really stuff that was brought into the U.S. in a fundamentally different tariff regime than the one that we have today. And I think the numbers are also telling us that is precisely these trade deficit numbers that you are going to start to see some of these impacts over the course of the many weeks ahead, because the trade deficits are shrinking, presumably because the tariffs are working by whatever working precisely means for the administration. And so those impacts are going to show up down the road. That's why you're seeing Walmart tell you that they're going to have to raise prices. They know they're going to have to do that this summer because the cost of importing has gone up very significantly for them. The effective tariff rates in this country today are 21%. When Trump took office, they were 2.5%. So those are huge shifts. And by the way, they've been hugely volatile, right, Joe? They've gone up and down and up and down. Just this week, they were 7% 2 days ago, and now they're 21%.
I mean, is it a win that you said we know why it's happening? So that's what he's trying to do.
It's hard for me to understand exactly what the objective of this type of
so you don't know whether trade deficits matter. You don't know what.
Well, actually, I don't understand entirely why we have this view, and I don't think it actually is your view, Joe, that trade deficits are bad. Like, I run a trade deficit with Whole Foods because I go there and I buy groceries, and that's good for me. It's better than me having to go out and fend for food for myself. And so countries have comparative advantages. Importing is good. It allows us to exploit ours.
Right.
Exactly. And so I'm not entirely sure why looking at these trade deficit numbers and being like, oh, it's way down, is telling us something that's fundamentally good about the economy.
I want to say the market, the professional forecasters are looking for much higher inflation readings in March and April than what we got.
Right.
Because they were assuming the tariffs are going to be there. So this isn't a 1 month phenomenon. David Ricardo is great. Everybody is taught comparative advantage is wonderful. But I want to be the country, and I've said this before, that makes the computer chip, not the potato chip. And it's clear from what Secretary Besson has said and President Trump that national security and economic security are intertwined. And when we run a massive trade deficit with a peer competitor and a strategic adversary, there are serious national security and national emergency risks. And to the Biden administration's credit, they kept all the Trump tariffs and had voluntary restraints on technology. Trump and his foresight now is moving this further up the field. This should be a bipartisan issue, and unfortunately, it's just Trump bad, and nobody's giving him any credit.
Joe, I think you're making a very good argument with respect to tariffs in particular areas, right? You're telling us a lot about tariffs with respect to China. It is hard to explain why that argument extends to a 10% across the board tariff with all of our allies.
Well, okay, yeah, I hear your point. Well, clear. The thing is, the European VAT is effectively like a tariff because the exporters.
It's not a tariff.
Let me finish. It is a tariff in the sense that the exporters get a credit when they offshore elsewhere, and tariffs are designed to raise money. So if you understand the Trump policy, it's very easy. Tariffs are a revenue source, a rebalancing source, and a reindustrialization source. They all work interconnectedly. I don't understand why people have such a hard time understanding that.
Well, just one particular point, and I'm curious for your reactions and others. Tariffs aren't like a VAT, because a VAT applies to if you're in France and you have French wine, or if you're in France and you have U.S. wine. So they're fundamentally different objects. One is
the French actually tariff California wine quite significantly.
Joe, but here's the thing that I don't understand. If the president wanted to come out and say, look, we need to raise revenue. We actually want a tax. We actually need a tax to raise revenue. And I think, meaning I'm now pretending I'm the president.
You're a third person.
I'm the third person. I think that the best way to raise revenue is to do it through tariffs, because I can put some of it on the American consumer and maybe hopefully some of it on the folks that are manufacturing or distributing the stuff. And that's how I'm doing it. That's one thing. If you were to frame it that way, maybe, by the way, there's certain people who could get behind that. Say that's but some people say it's regressive. There's all sorts of things, but you could go that direction. But that's not exactly how it's being framed. And so then people are sort of taking it and twisting and this and that, right?
Yeah, but it depends who you ask, because if you look at the polling, most of which is bad. Rasmussen reported this week that the presidential's approval rating is the highest it was since he took office on January 20, and the country's moving in the right direction at its highest marker in 16 years. So I think it depends who you ask. And by the way, the people that are complaining about how the president is doing policy are the same people who never ever argued, Andrew, there was a problem. So you talk about China and free trade and comparative advantage. Right. David Order from MIT has talked about how you've had a hollowing out of U.S. manufacturing, the industrial base, which has decimated communities across the country. That's a real problem that none of the Ricardian free traders back in 2000 ever thought would happen. And a country doesn't exist if it's that bifurcated in terms of the haves and have-nots.
But maybe just one piece on revenue. I think Andrew's point is really important. We're debating a tax bill that's going to be like a $4 trillion increase in deficits. And the idea is that this tariff revenue, maybe one of the ideas is this tariff revenue is going to help us pay for that. The tariff revenue, current tariffs are going to raise something like $2.4 trillion over a decade. But the administration doesn't want tariffs to stay at this level, do they? They are saying they're doing all these deals, they're doing all this negotiating.
That I don't know, and I don't know, and I'd be curious on your work that you've done on the budget, what you're assuming. But one of the big problems I have with CBO is it assumes real GDP averaging 1.8 in the next 10 years. They have productivity averaging 1.4, which is stupidly low, and labor force participation barely growing at its slowest rate since the early 50s. If you have reasonable numbers, you are going to get a lot more revenues, and that's pure math. And I wish the CBO just had a more realistic forecast and not just a doom and gloom estimate.
They're playing us out. Kernan says we have to go.
Joe says thank you.
Yeah.
So does Natasha.
Joe, Natasha, thanks. Up next, former Kansas City Fed President Esther George. Who's going to be interviewing her, Andrew?
Welcome back to Squawk. Joining us right now, Esther George, former Kansas City Fed president. Good morning to you. Given that Jay Powell had his meeting at the White House with the president just this week, and given the numbers that we just saw, I'm curious how you think that conversation went earlier this week and would go right now if you were in that room, what you'd be telling the president.
Well, the FOMC, it sounds like, is going to continue to do what it did even when I was there, and that is you are going to focus on the incoming data. You're going to be listening to your business contacts, your community leaders, to give you a sense of how the economy is evolving. And so today's inflation report, for example, tells us that inflation is not accelerating. That is good news. It doesn't, however, tell us that we are making further progress toward the Fed's 2% inflation target. So I think the messages that have been coming out of the FOMC remain valid, even with today's report, and ones that I would support.
So you don't think the Fed is late? To the degree the president's out there and has stated it repeatedly, he believes the Fed is behind the 8 ball here and should have been lowering rates by now.
Yeah, so I don't think you see the evidence in the economy, and it's hard to argue today that the Fed is late when you're looking at a labor market that is holding up, you're looking at personal income, you're seeing the economy's capacity to generate economic activity right now, notwithstanding all the uncertainty that I think you saw in the FOMC minutes. People are anticipating future effects. And that's why, of course, when you have elevated inflation, you're not really in a position to be thinking about how do I take a risk management move right now as it relates to changing your policy stance.
In terms of this dual mandate, what do you think, let me go backwards. What do you think inflation can actually come down to by the end of the year, given what's going on right now?
I'd be surprised if inflation is going to move down much at all, Andrew. That would be my own forecast, and I'll tell you why. We focus a lot on these tariffs, and certainly they could have the potential to be an accelerant to inflation. But I look more at our fiscal situation right now, and I do not see areas where ongoing downward pressure on inflation, other than the Fed continuing to hold its policy stance, is going to make much progress toward the Fed's 2% goal. So I think, again, when you hear policymakers focused on keeping inflation expectations well anchored, which is essential in this environment, it doesn't suggest to me that in a near term or even medium term forecast, you'd be talking about cutting rates.
Yeah, but it's been happening, Esther, whether it's oil, and oil could continue to be soft, and demand and supply could both factor into that. And that filters through on everything. For some reason, the inflation numbers have been much soft or much cooler than people think. Maybe it's deregulation. Maybe some of the stuff that we hear preached about. Maybe that actually does have an effect.
Well, certainly oil prices, Joe, you know this. Oil is such an important input to how households spend. So having oil prices come down in that headline number is going to be a good thing. Remember, our housing costs are continuing to be a pressure as we go forward. And remember, there are other elements. We're looking at a workforce that is changing. So as we get more information about what does it really mean as we've seen federal workers leave the workforce, what does it mean as immigration policy begins to shift the composition of that workforce. I think there are other elements here in these policy shifts going on around us that don't tell us yet whether we should have faith that this inflation number is going to continue in the direction that we see today, or whether there will be other impulses that could take it in another direction.
Esther, we got to run, but how surprised are you, given all the conversation we had around tariffs for months on end? We had lots of experts come on and suggest that this was going to be demonstrably detrimental to our economy. Were you in that camp, and are you surprised now about how robust the economy has been?
Well, I think order of magnitude really took our breath away in some respects during some of those early announcements. But remember, businesses can be very resilient in the face of any number of shocks. It just takes a bit of time for them to work through it. The composition of goods versus services in our economy is another factor that I think as people hone in on how significant will this be. But I would say at the end of the day, time really tells you these are negotiations still in flux. And so I think the story has not yet been written on how this ends up. And so I withhold some judgment on whether it's been an overreaction, an overcorrection here. I think we'll just have to wait and see.
Okay, Esther, it's great to see you this morning. Thank you for joining us.
Thank you.
Right, up next, why scrutiny surrounding universities has Silicon Valley worried. Kate Rooney has that story after the break. We'll be right back.
www.educator.com.
Political pressure and tax changes for universities could threaten a main source of funding for Silicon Valley's tech investors. Kate Rooney has more from the West Coast this morning on that story. What's going on?
Andrew, good morning. Yeah, so universities do play a crucial role for venture capital investors. Endowments have been a main source of funding for VC firms, which in turn then go out and invest in startups. Pressure from Washington, though, could really throw a wrench in that. So the recent House bill looks to take what was a 1.4% tax on investment income. That would go up to 21%, at least for universities with endowments over $2 million per student. So that tends to target elite private universities. Think, Harvard and Yale, for example. Historically, these endowments have plowed billions into venture capital and private equity, for that matter. So Harvard's $53 billion fund allocates almost half to venture. You got Yale, just below that Stanford, which of course has deep roots in tech, puts roughly 59% into venture. And then for University of California's $179 billion fund, about a third is going to venture at this point. Texas has a $64 billion endowment, a quarter of that goes to venture. This is all according to PitchBook. And on top of the new tax liabilities for school, there are also some threats. Got the threat to pull tax-exempt status and federal funding as well. So tech investors do worry that all of the new financial pressure on endowments really is going to change their risk appetite and what they are willing to allocate to some of the higher risk, less liquid private investments, guys.
So here's a question. Where might endowments effectively go if they were to decide to ditch the venture capital universe, do you actually think?
So anything that's easier to sell, Andrew, these tend to have a 10-year lockup period when you're investing in a venture fund. So folks I'm talking to say, passive public equities, things that are a little bit more boring, maybe even municipal bonds. There is this thought from investors I'm talking to who say, it's not going to go away. They're not going to completely pull out of venture, but the bar is higher and the pie is just a lot smaller. So there's thousands of venture firms out there. One effect could be, money's just going to the top venture firms, and there's sort of, the pie gets smaller. You got to just go to the top performing funds.
Okay. Kate Rooney, great to see you this morning. Thank you for bringing us that story. Joseph, it's been a week.
It has.
It's been quite a week.
We'll be back Monday.
We will.
We'll know whether there's a seventh game.
And we will know whether there's a seventh game. Have a great weekend, everybody. See you on Monday. Squawk on the Street starts now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. We close out the month of May with more tariff whiplash. The president on China says, quote, no more Mr. Nice Guy, as the Treasury Secretary says talks have stalled. Meantime, core PCE 2.25 year on year. That's the lowest in 4 years. Our roadmap begins with the president saying China has violated its deal with the U.S. on tariffs, as Trump's tariffs are reinstated by a federal appeals court for now.
And as Carl just said, last trading day in May, S&P and NASDAQ are on track for what would be the best month they've had since November of 2023, despite all of this macro uncertainty. We're going to discuss if those gains can keep coming. And the biggest tech antitrust case in more than 2 decades is wrapping up today. This is Google awaiting its fate from a judge's ruling. We won't get the ruling today. We're getting the final arguments today.
Let's begin with the markets navigating these developments surrounding tariffs. About an hour ago, the president out with a lengthy post on Truth Social, which ends with him stating that China has totally violated its agreement with the U.S. on tariffs. Actually happened just as Jameson Greer, Jim, was on Squawk. Greer tried to elaborate and argue that the countermeasures have not come off the way the U.S. understood they would.
Yeah, I felt bad for him because this happened at the same time, and I wasn't sure whether he had the full brunt of what the president was saying. I mean, to me, the president, if he were not so mercurial, what you would say is, okay, well, whatever state of execution he gave China, that's about over. But David, when I contrast this with Bessent, Secretary of Treasury Bessent's more calm voice, I come out with something which just says, is this the prelude to a call to sheep?
I don't know. And I'm not sure anybody knows. We can all sit here and guess. I think the one conclusion would simply be what we also stated yesterday, which is this continues to create an environment of some uncertainty, and you wonder what is it going, what is as a result of that will not get done, or will be paused in some way. It's unclear. Activity remains higher perhaps than many had thought, given what has been an uncertain environment for so long. But yesterday, for example, we get a ruling from a court that says, no, these tariffs are not legal under the definition you're using in terms of that emergency power, because that doesn't seem to be proper. And then it gets stayed. That's one day. And then today we have China, a potential reversal. So that's the environment you've got to deal with as an investor, as a CEO, as an allocator of capital, as all those things.
Well, I know we're going to go to Gap Inc. later on, Richard Dixon on the show, but the notion of these tariffs, such a fluid situation, that he didn't know whether he should take his numbers down or hint that it could be 250 million, it might be nothing. Then you get Costco, and Costco just says, okay, listen, we're going to do whatever we can to mitigate, and they are not going to raise price. But all that I hear from every company is we're doing everything we can to make it so that we don't raise price. I don't get the sense that the president understands the turmoil that our retailers are experiencing this very
much. Retailers are one thing. There's Gap, of course. Their guidance doesn't include tariffs, but they try to quantify what the profit headwind would be. Big piece in the Journal, Jim, about Deere, which has already raised prices of equipment for years. And with farmers under pressure, how much can they still raise versus renegotiating supply contracts?
Yeah, they've really taken they've raised prices to Europe that you think that, listen, maybe Europe doesn't, are they tariffing us? We're tariffing ourselves over there. David, I look at this and I say, pure chaos. But you started the show by saying something that's the most important thing. Pure chaos, but the stock market is up.
The stock market is up, and activity continues perhaps at a higher level than some had anticipated, given the fact that we still have a lot of uncertainty that we had 3 weeks ago, that we had a month ago, and that we continue to have.
How about the income numbers this morning? Terrific.
Solid. 8/10, man. Highest since 2021. Spending in line, Jim. We mentioned the year-on-year core PCE. We're not seeing the tariff impact on pricing yet, although the saving rate did go to 4.9.
Right, but I mean, look at Costco, and I regard Costco's barometers, 143 million people, okay, and they had a +6 comp, which is rather remarkable. That means people are going there, they're saving money, but the fact is they're spending money. And I just find that there's this contrast between what the president is saying and the people. And the only thing I can say is that it's employment. Employment is trumping. Employment is mitigating what we're seeing.
Even when it comes to things like mergers and acquisitions, again, we haven't seen a lot of announcements. But what I continue to hear from during the course of the week, and speaking of bankers and lawyers who make their living advising on these things, is more dialogue than they might have anticipated. It doesn't mean it will end up with a slew of announcements. The only big deal we got this week, and I'm not sure you could even call it big, is the Informatica announcement, at least from a public equity market perspective. But I think they're somewhat surprised, given again this environment where you get reversals like this from the president, and you're sort of trying to figure it out every moment. What does it mean that there is even that level of dialogue that companies are willing to have at this point? Maybe they're somehow shutting out the noise and just making an assumption about what the landscape's going to look like 6 months from now, period.
How do you do a present value analysis?
I don't know.
I mean, the first thing when you go to Goldman, first you get an HP12C, I did. But you try to figure out the cash flows. And how do you know the cash flows of a Gap? They have taken themselves almost entirely out of China, and it doesn't seem to matter. By the way, the people from the administration, are they like on any conference calls? Because if they did, they would know that this mad dash away from China is unmitigated. I mean, I know the president talked about a total shutdown in China, but our companies are being so great about moving out of China, and it would be terrific to see them hailed as great. I often find that our companies are under fire when they are doing so much, and I'm not just talking about just Apple going to India, but Gap moved a lot to Vietnam. I thought that was good. It was good. Right. And then we know it's not so good. I mean, the president is creating hurdles everywhere. I mean, he has turned the Belmont Stakes into a steeplechase.
Yes. Well, the weaker dollar does not help, Jim. If you're thinking of reshoring, a big chart in B of A's note this morning about why that is, why manufacturing jobs are a record low 8% now?
And it's why I like Procter, and it's why I like Coca-Cola in that group, and I'm not crazy about that group, but the weaker, they've been fighting a strong dollar for so long. It's been this ridiculous thing. By the way, we had Joaquin, we had J&J on this morning.
Yep.
He did not mention that, but they are a huge beneficiary of the weaker dollar. So we got to keep that in mind when we're doing conference calls. The conference calls are a thing of beauty if you do a lot of overseas business.
I don't think that's. I think the administration welcomes a weaker dollar.
You don't think so?
I think they do.
Yeah, they're watering the dollar down in a way I've never seen. But you know what Bob Rubin said?
Yes.
When he was Secretary of Treasury?
Yeah.
Like I once interviewed him, and he said, I want to start by saying, if you say that I favor a weaker dollar, I'm going to disavow any knowledge of you. It's like Mission Impossible, what? What are we up to, 12? Am I 12?
It's Dead Reckoning. It's the last one, man. You got to go see it. It's Tom Cruise.
Look, I'm totally.
You have a duty as an American. You go see Tom Cruise.
I like our Reacher
movie star. Okay. As for
what does that have to do?
What does that have to do with Bob Rubin?
What does that have to do with
I don't know. Bob Rubin's still kicking around out there too.
Yeah.
That's one of the last great Treasury secretaries. I'm kidding.
Cole's going up on that mention.
And he wouldn't talk about the dollar. You're right. What I was going to get to is rates, of course, because Trump and Powell met, and Powell basically he pulls a Rubin on him when Rubin is a dollar, Powell is to rates.
He seemed happier at the Princeton period than he did at the.
Nothing really seemed to have come out of it other than the president reiterating the fact that he'd like lower rates, and the Federal Reserve chair staying mute.
Yeah. Well, Friday we have an employment report.
A week from today.
I'm predicting right now, the president's going to suggest that whatever the number is, it's time to cut. Right? It's time to cut. That's kind of a continued loop if you're in the White House. It's time to cut. It's time to cut. Have you guys been checking Truth Social during the day?
No.
May I suggest that you do it?
Really? You don't think the wires will pick it up?
Yeah, I feel like I get it on X, so
you got it wrong.
The wires very quickly.
You got it wrong. I'm saying because the days are so hard, you need some comic relief. I mean, did you see the one where he said he was God?
Yes.
Well, last night it was attacking Leonard Leo in the Federalist Society.
Oh, but what did you say about that? I loved it. I mean, like Leonard Leo is like one of the foremost conservatives.
Leonard Leo's responsible for the.
There were jokes about which way does Justice Thomas go.
You call him an idiot or a moron? What was his choice of word?
I have to say that I'm not familiar with this
loser
post from the president.
I want the president to sit right there, and we could just have. I'm not kidding. At the top of the show, right there.
He does plenty of press, Jim.
He does.
Press he's going to do press today.
You cannot say the man does not answer questions.
No, but
he doesn't like them. He says they're nasty and whatever.
Brett Barry goes on.
He takes them.
What does it Brett Barry have to do with the price to earnings ratio of J&J? Nothing. Let's go back on.
Brett Barry, I think, was at the game last night.
Really?
Yeah. After interviewing Besson. Yeah, that was an important interview, what Besson said. Meantime, Jim, Japan, net buying and foreign money into Japan, 8 straight weeks. Big piece by Dudley on the tape this morning. Selling U.S. debt is becoming a harder sell. We mentioned the dollar. We're trying to avoid a 5th consecutive negative month for the dollar.
On fact, today was Dom show, 5 Club, okay? And it starts out, and it's got sea of green, and it's all Europe. And it's these countries that you've never seen green before, except for now all you do is see green. And then, of course, you go to us, and it's red.
That's right. You wrote this morning, you long for the days where it was Europe in the red and U.S. stocks were green.
Germany would be down big, and Italy would be like...
You can make money somewhere. There's somewhere.
There's always a bull market somewhere.
Yeah, you're right.
Italy, I mean, Germany's just up every day, even when it's bad.
This will be an all-time closing high this month.
Now, as soon as I say Spain,
oh, you know what we're thinking. Anna Boutine. Yes. Santander, greatest. Hey, lover, best.
Carl, do you know that?
Watch that Santander. Carl, do you know about Anna Boutine? Have you ever heard of her?
Because we live this show every day.
Okay,
she's amazing.
All right, then what do you know about her golf game?
Can I have a chart of Santander, please? I don't know anything about Anna Boutine's golf game. Not a thing.
Her late brother-in-law is Ballesteros. Told her everything. She regularly beats, I understand, blind fund.
That's a great piece of information. I'm sure our
viewers. She's
our viewers are.
I'm going to create a green jacket for her. Wow. Have her sit there too.
What you should talk about is the fact that you were right. You were actually right.
I know. We got to look at that. Look at that. He makes fun of me. Look at that.
You were right.
See that?
It happens.
You just talk about no deals. Look at this. Yeah. Deal. No deal.
You've been consistent in saying you love Ana Butin and Banco Santander.
Not well.
And anybody who bought it would be very happy with that.
Yesterday-
So well done, Jim Cramer.
Yesterday, there were some people who didn't like the fact that he made fun of me that 1,000 Coles could be in trouble. Not the Coles in Newcastle. I'm talking about like Coles.
KSS.
Oh, Coles, because I got someone who went from $8 to $9 in price target for Coles.
Can we not spend more time talking about Coles?
Okay, how about Netflix, where there were two?
Thank you. Sure.
Netflix, by the way, is
two huge price target increases on Netflix.
Is that because of Counterattack?
Was that in your show? What's the show?
Counterattack. Go read the. Did you read the conference call?
No.
Counterattack is the most popular thing ever come out of Mexico.
Can we just keep saying that? Counterattack.
I thought you were going to go with the B of A cat discount.
Oh my gosh. Okay, so Jim Appleby leaves. Jim Appleby was like the greatest CEO ever of CAT. Nobody says a thing. There's not a plaque. There's nothing for Jim Appleby. And yet that's what he says, is it's undervalued. I think that Jim Appleby created value and the stock was momentarily down because we were supposed to be going into a recession.
You can see. Look at that letter A at the bottom. That's the month of April.
I know. Well, this was this was another stock that got crushed when we were liberated. When we were liberated, David.
Meanwhile, their China business is de minimis.
They have no China. They have like nothing. Jim Appleby decided, well, not only are we not going to be held in China, but they bought back stock the whole way. Hey, did you see Michael Dell's buyback?
I did, actually.
What did you think? That was a hand over fist, huh?
They bought a lot of stock.
And yet the stock's down. What is that about?
$4 billion? Is that the number?
Is the stock down because of the PCs and not the
I don't know.
AI?
The commentary out of Dell was very positive.
No one
right
cares.
in front of my face, and now I can't find it.
No one cares.
I mean, Dell's been a margin story for a while, and margins missed.
Right.
Yeah.
The second. Well, margins for AI were really good. Second half may not be as strong. I'm telling you,
$12.1 billion in AI orders. Entirety of all shipments in fiscal year 25. They have a $14.4 billion backlog.
How about 22?
But yeah.
Do you see how many shares he bought back at 90?
Well, they bought $2.4 billion worth of stock back. I was right about that. That's repurchases and dividends.
When you look at his Class C and how much, geez, he could take this thing private.
He already has.
Well, why not do it again?
What? Yeah.
We have to.
Silver Lake and Michael are going to get together and take a private.
I'm here. I mean, the guy bought so much stock back. Why not just do it again? Who needs this?
Who needs what? What's this?
Public. Yeah. Kame had a great quarter in the stock.
Disrespected by the stock market.
I'm here. Yes, that's exactly what I mean.
Who needs this?
Who needs this? We didn't even talk about Bell.
We're going to get to more Bell.
We still got time in the show. We've got 45 minutes.
So the show's over.
No, it's not over yet.
Microchip, AEO, Ulta.
You know, Pippa Stevens talking about the nukes. Every one of those down. And by the way, quantum stocks are down. What is that? Meme.
We'll get to that.
Guys having a bad last day of the month.
That's right, yes. Get to Zscaler and more. Take a look at the pre-market here. As we got most of the data out of the way, we'll get to you, Mitch, a little bit later on this morning. Don't go away.
I'm here. I'm here. Oh, I didn't have the microphone up there. I heard it this morning. Good morning to you. SBET. I want to short this baby. I really do. And I just might. It's a beautiful morning. Not a cloud in the sky. I can't believe it. I don't think I've seen that in months of ages. We've had one heck of a winter. It's still, I don't trust it. So what, 7 months of pure winter? Ten inches of rain last week, 14 in April, total of 12 in May. You feel like you're living in the fucking Amazon. And the ice storms and the snow and the frickin' hail and the tornadoes and the sleet. Joe Biden put a real good fix on our country, that's for sure, when it comes to Mother Nature.
We've already mitigated over half of the anticipated impact of tariffs. We've done it through adjustments in sourcing, manufacturing, assortments, and we remain absolutely committed to achieving additional mitigation over time. We diversified our sourcing footprint. I mean, the last time we chatted, Jim, I told you, China was less than 10% of our sourcing.
Oh, good.
Today, I'm telling you, it's less than 3%.
Oh.
That's Cap's Richard
China.
Nixon on Mad Money last night talking about the retailer's tariff mitigation strategy.
Well,
Stock's taking a bit of a hit this morning.
10 cents
Costco's lower in the pre-market
off on the support
The
today
company says it's pulling forward some summer orders.
for the SPY. I'm mitigating something right now. Looks to me like we got a hammer. Was this on the 5-minute? Oh, see, we're already run up to resistance. I'm gonna go. We got 10 more minutes left. I hope everybody had a pleasant night's sleep. Okay, Chicago PMI report out at 9:45. The reaction, up, up, and away. We have a lot of mixed feelings on the vote this morning. Lily. So good morning, Angel. Good morning, E. Good morning, Link. Good morning, Goose. Good morning, Magnificent. Good morning, RTP. And good morning, Franchise. Blood pressure was fine this morning. What am I doing here? I'm gonna go get my tea. Jim Cramer. Jim Cramer's been mitigating. Little pin snitch just exposed the Biden plot. I tell you what, if it was that stupid Elizabeth Warren, I don't know how people can trust Democrats anymore. I really don't. I don't see how you could be one and be able to sleep at night. Peacefully. Unless you're a scoundrel. Yikes! 6 more minutes to go. Where's my tea glass? Okay. Make sure I'm clocked in here. Sometimes I don't get to, my platform's up. Miss Peppolini's up this morning early. We have 2 minutes left. Tesla might bounce a little bit. And Apple's still under $200 as of yesterday. And some of these stocks I still think are overpriced.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the best way.
But Carl's Way is the best way.
It is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move. No can do.
No can do. A traffic jam.
Yes.
My favorite commercial.
Watch too much TV.
Alrighty. There's Funk. Good morning.
What's up, Jim?
Oh, I'm getting ready to make some money.
CRWV looks like it's about to pop off the start. It's got a huge EMA cloud on it.
Uh-oh.
I think somebody was looking for a pop so they could short it.
Slash ES broke out a little bit.
Aklo is running like hard. God almighty, Aklo.
Watch the SPY first thing this morning. Today's the 30th. 590 strikes on the SPY. Or what? On watch.
Aklo jumped up $2 in one candle. CRWV up $2 in one candle.
SPX knife. $59.40s. Let it open here. 59.40s at 390. My first trade of the day here. This is just a fast in and out trade. $390 to $440. And SPY CRWD pulled back to support here. Oklo's still holding up.
Yeah, Aqua's running.
Yep, that's a big fat candle right there. Then we got SBET we got to keep an eye on. Okay. SPY back just under VWAP at support. Could go a little bit lower. Yeah. We'll see if it holds this here 587.52. AMD at 111. Had a dollar pop and pulled back on NVIDIA. Now I should have grabbed that calls on SPY right there and scalped that real fast. There we go, back down again. I'll just wait, see if it hits my support here. There it is. Right there. 98 cents.
CRWV is at support.
.95. Might be some risks to this one here too.
Gotta look at that bounce on CWRV that I just called.
Yep. Oakland just had a big one too.
Yeah, but Oklo's RSI is absolutely screaming right now. It's about to pull back.
It's two big old candles on the 5 minute CRWV.
Yeah, I had those calls loaded up and I swapped back to SPX.
I'm in the SPY right now, 95, and we're at 104. I'm going to put a tight stop on this if it doesn't hold.
Contracts aren't moving good.
Today's big loser is Baidu with 2.8%. Intel's back under 20. Coin still seems high. Today's green, APDN, cost, PLTR, there's 108 for the SPY. I missed it. Can't break the VWAP yet. We got tweezer top on Oklo on the 5-minute. Come on, break out. And there we go. We're above the VWAP now here on the SPY. So 106. Well, it didn't last, so it's not fully developed yet. Unless that body stays above that VWAP. Well, so far we held the support line for 6 minutes and we got higher lows. Nothing yet. Oklo pulled back a little bit from the tweezer top. Baba new lows. JPDD has a double bottom, triple bottom on JD, and new low on KWeb. At AMD, that's right at my support level.
Good lord, dude. The puts on SPX are 3 times what the freaking calls are.
Hmm.
The 5850s are $6. The 5900s are, well, no, the 5950s are $2. So 50 points up is 50 points down is 3 times more expensive than 50 points up.
Yeah.
That's telling you something right there.
Yeah, they're still in these, but I'm watching it close here. Just $106, there we go. 110. So I'm going to go ahead and take a little off the table here on my calls. 95 to 110. Bingo. 2 trades out of the way. So you want to get out on the breakout past that VWAP. See how fast they go back down. That's a master plan right there. Good morning, Parge, Mannequin, Robert, Martin Brax, and S on YouTube. So we're still holding support. If we break below support, I might get puts. IWM's had double bottom support right now, triple bottom. I'm gonna clean this SPX up, start rechart it. Okay, the SPX is at 255. Now that's a little bit too far out of the money now, so I'm going to move them up to 59.20. 59.50's got 5,000 contracts on them. And the SPX. Now we created an orb here, so I'm going to jump in these right about now. Grab one, 59.20. Right about here. $5.60. There it is, $5.50. Now this is kind of risky. What about now? Let me see. We went below it. 5.20 right now. Nope, didn't hold. But I still want to get in them. Two engulfing candles. Let's give it a shot. Now this might be a little risky. Ooh, a lot risky. $4.80 and $4.40. Three black crows. Let me see where them spies are. Move the spies up to 589. You were right about them puts, weren't you?
Mm-hmm.
I want to see what this candle gives me right here. Could have grabbed more at $4. Two more. $4. $4.30 average. Let's do it. We're at 460. 3 black crows with a hammer. Hammer, hammer, hammer. One hammer. There's 470 right there. So $160. 480. There we go. Now, you're hitting the 9, so it'd be a good idea to get out of the trade for a good scout. 490. $5. Thank you very much. Number 3's done. There it is, $5. $70 contract. Do you understand how I did that, YouTube? So I grabbed 2 of them right in here off that second engulfing candle. Then on the third, I grabbed 2 more with that hammer. So that's called 3 black crows. With that hammer, it's kind of a, I'm not saying it's a good idea, but then we had a tweezer bottom on the body of that hammer. So I had 2 confirmations, 3 actually, 3 black crows to keep it on watch. And then a tweezer bottom with a hammer, then run it back up to the orb and get out of the trade at $5.
Watch the RWV here. It's testing the bottom of the orb.
What am I doing? Oop. Loot. What the hell? Damn, Jim. Now, if we
Hell yeah. Hell yeah.
yeah, if we break the orb on the SPX, we'll definitely start to move higher. Damn, we're at 530 now. 540.
CRWB calls went from 95 to 127 in one candle. Keeps testing the bottom of that orb and then shooting up. That's why I caught it.
Yep.
Now I'm watching Aqua because on the 2 minute, the 263 are stacked dead on top of each other. Bottom of your support zone right here on ES. So, God, what a candle. As soon as I said it. Didn't even get a chance to push the button.
We had the knife on SBET. That just looks to me like too much.
Did something just happen with coin?
No, it was up. I don't know what it was.
MSTR is flying along with the ES. God, what a candle on master. Holy shit.
Michael Saylor says Bitcoin is engineered to outperform, going to go faster than gold. That means GME might be moving too. They're getting a lot of hype. Oh, what? I heard something. What Trump did. Ah, there's dang calls are at 680 now on SPX. 750. Damn it. Oh man, look at that. I just left quite a bit of. I just left $1,000 on the table. On SPX. Okay, we hit the 63. Well. I'd be up $1,500, or I'd be up almost $2,000 now if I'd have held on to them SPXs.
Yeah, but there wasn't any way to figure out that was about to pop. Like all the technicals said it was a put day.
Yeah. Yeah. I mean, I was up
on ES on the 5 minute. I still don't see anything that says getting calls yet. Like you ran up to the 63, but then rejected it.
Well, if we break the 63 now, we're definitely going to double top. Go back to the top of the orb.
Mm-hmm. Yeah.
Yeah, I couldn't tell until after we broke with that engulfing candle. After we broke the orb, that would have been the time. But
something had to have happened with coin because I have master pulled up on CRWV. I have Oclo. None of them. The only one that ever ran with ES was freaking master, and they had almost the same candles.
Yeah, and I don't think you could have told if we were going to break out unless you were looking at the 1 minute on that one. On the S/ES, we're at the 200 right now, so we're at a resistance. And I'm not, I think, but what's your cloud tell you on ES?
I mean, your EMA cloud, you just had the first candle of the day open above it, so that's good. You're running past the 63 now. You got the 200. You got the top of the orb. You got a lot of resistance coming up. But
yeah.
You finally had a candle open above the EMA cloud on the 5 minute.
That S-bet bounced up $10 right here on that bottom. God darn it! There it goes again.
Master is up freaking $74 in 6 minutes.
We're at the top of the Kettner Chandler cloud. I wonder if I can change that color on that cloud. Nope. Okay, I'll just leave it alone. We're definitely hit resistance. We hit the 200 EMA on the SPX here.
So studio, if you're watching my stream, so I only have 2 moving averages. The white dotted is the 200 simple, and the reddish one is the 63 EMA.
I got the 9 on there, Funky, just to tell me if we're staying bullish or not.
Well, I mean, I have my cloud, which is the 9 and 21, but the only 2 that I have outside the cloud are the 63 and the 200.
Okay, very, very good. We're so close to that double top, too, opening.
Well, you just tapped the 200 on the 5 minute on ES. What's up, Rob?
Today for lunch, Jimmy will be having a hamburger patty and broccoli. I gotta start working out, get my six-pack back for the beach. I'm seeing if we get a pullback here. I'm trying to figure out where support is, and it's got to be somewhere up in here somewhere, right under the 63. Or right at it. For the first one.
Master just pulled back to the 63.
I'm going to set an alert above the 63 on the SPY. Well, actually, it could be right in here. I don't know. We're pretty tight right now. God, it just went up $10 grand. Shoot. We got a 1, 2, 3 on that 5-minute on /ES.
Master is sitting on the 200.
3 white soldiers. GME pulled back from where it was from yesterday and then broke out today again. And Tesla pulled back. Ooh, what? No, it's AMD. Yeah, Tesla's got a new high. He's getting his farewell meeting today with Trump. Elon is. That'd have been $2,000 if I'd held SPX trade. Profit. Okay. Kind of what sitting here like it did before. I'd like to get a put. They're kind of expensive. I'm gonna go to the gym and work out a little bit. There it goes. Shoot. New high. Very good. Very, very good there. S. This has got the right recipe. Get in, get your trade done and be done with it. Don't get stuck like I do here. Last 20 years, sit here for 8 hours a freaking day.
Yeah.
There's benefits to it, but then there's not. I got too involved in social media is what I did. I started watching the market back in 2004 when I was in Hawaii. Before that, but I actually got into it then. I should have stuck it out and stayed out there. But you don't have no regrets. I mean, Everybody's taking a profit on those big runners.
Looking at master 370 calls. $1.75.
Double bottom on Mister right here.
Yeah, I just got in them. So I'm in the 370s at $1.70.
Oh, it dropped a little bit there.
Yeah, it did.
I have 363.10. I think that if that doesn't hold, I'd kind of. Today, not third. I'm going to go out next week. Ooh, they're kind of high. Yeah, they're a little high. $370s. SPX is flirting with the resistance right now, real tough right here. Okay, 125 for Mister. Be a fast scout. Come on, you idiot. 125 to 135 right there.
Yep, 145.
$150. Bingo.
155. Shit, I might get out of here. Holy shit.
There we go. 1.58. I'll take it. Thank you there. Right to almost to the orb. There it is. The orb's right there. That's kind of a resistant that, plus the orb and that wick. We could go up a little higher and break the orb. 366. Another buck. I'll show you how I come up with that. Right there, see it? 1, 2, 3, triple bottom, then dropped. But it's got to break the 9. There's $100 there on the 130 on the SPX.
Okay. I'm back to break even on it. Give some profit. There you go.
175.
Almost screwed me.
Yep.
Yeah, I'm up on it. I'm up $10 to contract. Alright. As long as I didn't lose money. I was really expecting that 365.43 zone to hold.
Yep.
I don't even have anything at where it turned. That's 363 mark.
Let me see how I found it. Okay, it was the top of that support level that so it had to go back. Yeah, go back to the 90-day. 90-day 1 hour, about, oh hell, 4 weeks ago. We had a pullback right there.
See RWB's journey.
know I put water in there. Boom! Yeah.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
comes to investing, you'll love Carl's way.
Carl's way is the only way, and mine is the second best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Did you get
Let's
that?
move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Carl's is the best way. Watch this. Watch this. Watch what?
Yes, it's pissing the top door.
Damn. Watch this, you son of a...
If it hit the orb, I think it'll go back up to the 59, 58 level. That was the pre-market high. But I want to get an orb touch.
Well, it was close enough. But we did touch it once before here.
Yeah, but this is setting up to be a perfect break retest.
Yeah.
That's it, right. Shit, that's what it's not. There it is.
Dropped right below it. Now you're at the 63, so on the SPX. Right here. $7.20. Come on. There it is. 720. Well, we'll see if we hold here. Right now it's getting close to my lunch period. We just now hit the 50. We're mungled up between the 50, the 200 EMA and SMA at 680. Nope, didn't hold it. Dang. It's all right. We're looking at the 59.20s.
Where's your bottom?
I'm going to go ahead and grab one. Right about here. There's your tweezer. That's perfect right there. Nope. A little risky, I think, but I'm going to go for it. Set 630. What do you think about that, Rob?
Nice. Nice call on Tweezer Bottom.
Yep.
As soon as I saw it, I jumped in. Those things hardly ever fail me.
And right now you're at the orb, so you're at a resistance low for scalping here. See, we don't mess around here.
We do not mess around.
7 point. Whoa. Da 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 da. No, I don't want to duplicate. I want to manipulate. Let's remove one of them. Some bitch. It's time to go flip my burger. I'll be right back. We're back to a double bottom, double bottom, double bottom, double bottom. Always clean. Double bottom with a hammer. I'm going to prepare my lunch. I'm not going to trade right now. Okay, they're starting in on me already. I'm gonna have to get brutal. FBI, may I help you?
Hello?
Yeah, this is the FBI. May I help you? Hey, you sleazebag. Okay, they're at 590 with another tweezer bottom here. I'm not a sleazebag. I'm just trying to make a living. I don't know if I'm doing the right thing on this one here. I think I'm pushing my luck. 580, the 5920s. After a bit, you realize maybe I'm pushing my luck here because we broke below support. This is a triple bottom, so we got to break that triple bottom.
You're holding the 200 on the 1 minute on the S.
Okay.
Matter of fact, you bounced at the 200.
Well, we got to break 58.99.40.
Yeah, but you're also making higher lows.
Okay.
You just passed the 60.
Boom.
So.
There it is. Yeehaw!
You're at the top of the orb now.
6 to 710. Thank you very much.
And it looks strong.
Yeah.
You're past all the resistances now.
Well, I got out.
Oh, did you?
Yeah. Dude, I'm going to eat and work out. I don't want to be tied to this thing. We had just hit the orb. Oh, God. Janet, always clean. May I help you?
Hello?
Yeah, what's going on, baby?
Good morning. My name is Grace. The new Trump administration has changed the Medicare policies for your state of Missouri. Let's find out what benefits you can get.
You know what I think?
You currently have
Bullshit.
both Medicare Part A and B, right?
Nope, baby, I don't, man. How old do you think I am?
I'm not asking for any confidential information.
You better not.
I just need some basic details. I just want to help you access these new benefits.
You know how long it's been since I've been
Would you
laid?
be interested in sharing this information with our licensed agent?
Do you know how long it's been since I've been laid?
No worries at all. You can still qualify for us as these plans are free of cost and available for everyone.
I can't even get it up
Currently
anymore.
enrolled for Part A and B of Medicare, right?
I can't even get it up anymore.
We offer a wide range of plans as a leading Medicare aggregator, and I'm confident we can find one that fits your needs. So, may I know how old you are?
No, that's personal.
Let us talk about this some other time. Thanks.
Too much information? I'm getting mad at him. James. Okay, I'm gonna go flip my burger. Does anybody recognize what we got? Megaphone.
Affirmative.
It's a megaphone pattern. Okay. We'll call back some other day when you're in a better mood. I'm getting senile, honey. Oh. I think we'll stay within this megaphone for a bit. We could get newer lows, but right now we're at a, I don't know. I don't want to get involved too much. I've had a good day already, and I'm going to eat, and go work out on weights a little bit. Right now we're back to 580. Let's see if we get a newer low. We could get a 1, 2, 3. That didn't upset you, did I, Funk? Oh, their laptop went missing. Shit, that's not good. It's not good at all. I wonder if Michelle would eat that. Today's lunch. Hamburger patties seasoned with garlic powder and onion powder with some taco seasoning with seasoned broccoli. We got triple bottom right here. Boom, baby. $5.80 to $7.
We do always have to look under the hood, especially if we're looking at the U.S. Central.
Under the hood?
So there are two right now that are at least underperforming.
How do you look under the hood?
Concern. One would be transportation. And as we know, while the consumer obviously is a big part of the GDP, we have to watch the trends of how things are moving in terms of freight and planes, the planes, trains, and automobile trade. I that. And we're not seeing it really doing what we would expect it to do if there was this sort of optimism about lower inflation and economic growth. The second, of course, would be the regional banks.
Get ready.
And I like the regional banks as a pulse more than the actual big banks, because that's where you really see what the center of the U.S. is doing, the more rural communities, the smaller cities. They may not necessarily go to a Bank of America, they'll go to a more local bank. And that's also under some stress right here. Not alarming, but at least something to pay attention to.
5520s.
This sector in particular.
Just hit my alert.
Like in March 2023,
Boom.
when we had that debacle with the commercial banks. If real estate,
Three back throws,
has any
$5.30.
in the future, you'll see it there. So that's to pay attention. But that's the glass half empty. If we go to the other side,
darn, all these terminologies, glass half empty.
And beauty, and also tech.
Yeah, Mish, I want to get into that actually because I know.
Don't you think she talks too much?
Something I thought, look, our conversation about Ulta was a natural segue into chatting with you. You talk about the vanity trade, and you've mentioned that that's waking up and potentially becoming a mega trend. So, what are you seeing, and what's your expectation here?
Well, I know that we heard a lot from Jenny, and she was absolutely right about the lipstick trade sort of recession.
Lipstick?
People are going to
What
go
the
buy
heck?
makeup. It's still relatively cheap depending on the lines. And also interesting, Michael Burry put all his money into Estee Lauder, which I thought was incredible. But I'm also
This
looking at it
girl's
from a
cool.
different way, and we talked about this a while ago. And
No, we
that
didn't.
is the domino effect of the diet drugs, and I don't think
The
that's
domino effect.
underestimated. Here's a perfect example. I actually just subscribed.
She
to
just
the
doesn't
show
stop.
I wanted to watch, but I did it with the ads, right? Every other ad is about diet.
How about the
drugs and losing
Bertha
weight.
butt trade?
And what they're depicting in this is some men but mainly women out there all of a sudden feeling better about themselves. So they're wearing more makeup, they're taking care of their hair, they're buying nicer clothes, they're going
Boom,
out more.
620.
And that's where you have to look. So Ulta, Elf. I mean, Elf is like, that also did really well. And they're all about diversity.
Are any of you guys feeling better about yourself today? Angel, are you feeling better about yourself today? This woman's full of crap. We're back to 560 again. I'm just having so much fun today. You know what's going on? I'm going to get complacent. And I'm going to get burned. Am I right? So YouTubers, this is what I'm having for lunch if I haven't showed you already. Hangers with broccoli. You get your protein and you get your little bit of broccoli there. And I love broccoli with hamburger. No, I didn't make my own burger buns today. Okay, here we go again. Get ready to do it again. $59.20s. It would be nice if we come back down and hit the bottom of this here megaphone. That's actually a good meal. Come on, one more big fat candle. I know what I'll chase this down with. A glass of hot chocolate, a glass of chocolate milk. Come on, one more red candle. Tweezer bottom, Funky. .5 on that /ES. We're at the 63 on the 3-minute. Very good. That's a bummer you lost your laptop. Oh, Rick's up. Affirm.
You can see our moving averages that we follow. Yellow 21-day, orange 63-day, purple 252-day. All are moving together. They're clustered. They're basically just flat and sideways. So that speaks to a lack of trend directionality here. We did have a bit of a down surge during our tariff news inflow there, but we've retreated back to this range between about 47 and 52.50 for the most part here. 52.50 because it was low point, breakdown point,
52.55, man. Come on,
That's
Rick.
about where we're topping out once again here. So, but you could also take a look at this trend line. You could draw a trend line starting with 82.53, our highs, connecting here. That's about where we're at right now. So either way you look at it, depending on either of these two metrics, they're in confluence with each other right at this level, 52.50, very close to what Charles was describing here. So we can also see RSI has been trending downward. We're above the 50 midline.
He's off.
But the bulls would want to see a nice strong break above this resistance level and our trend line, and for RSI to reassert itself and start making new highs along with price. So when we look at our standard deviation channels and volume profile studies, the volume profile point of control is down here, just below our 47 level. That's our green line of
I
our
got
range.
55.
The point of control comes in at 43.50 or so. That's our heavy trading area. That could be a further supportive point if we were to move higher. The linear regression line.
I got 46.
Comes in at 62. That's an idea of fair value. We're a good bit below that point right now, so that could be an area to watch going forward.
Okay, so that could be an area to watch. Charles, any final thoughts on a firm before we move on to your next trade?
Yeah, again, if this market continues to perform the way...
Man, I'm loving this day today.
This is also one of those names that are still trying to play catch up with a lot of other stocks that have been really explosive to the upside. So again, I always draw back to retail names. I always draw back to names that have interest. And, you know, certainly once they get going, that's when I start looking for that momentum breakout play.
Okay, let's talk about the next one on your list. You've got United Health on your list. Look, that stock is down about 40% year to date. It's had significant pressure. Some say it's oversold despite all of the challenges around it. What's your view here?
It's certainly risky in both directions, quite honestly.
Tweezer bottom bounced up to the 63 for an exit.
On the stock. More importantly, again, when we talk about it from a retail standpoint, you know, this is a name that's drawing a lot more interest, especially towards the latter portion of the week when people are chasing cheap premiums on, you know, 1 DT or 0 DT days to expiry contracts. So this is why, for example, in my opinion, it's been a bit frothy today from a short-term standpoint, and there's a lot of buyers drawing in interest. So for me, the price level to watch, especially from the retail side, is 290. That has to be the floor near term. And if it can maintain above this level, the question is, can this stock really break this 305 price? I feel that if it does, it's a pretty quick spot run to like 325.33. But if it could really sustain this momentum, there's really good upside that it could achieve in a short period of time, right around 380. And, you know, I have some strong reservations about the ability of recovering back to that price. But, you know, being down as much as it is, all they're going to really need is any sort of positive catalyst. And I believe that then all of a sudden that brings it into the picture. And that's pretty good returns considering the stock is trading right around 300 at this moment.
Okay, all right. So, Rick, let's talk about this chart. I mean, it looks very troubled so far this year, even on a year-over-year basis. What are you noticing?
We are focusing on many of the same price regions here, speaking broadly. So to start off with, you know, we had our significant decline on earnings and things went from bad to worse here, bottomed out near 248.88. So now the levels that Charles was describing, 290 is about these lows that we had after our
$5 to $6.20
here. 307, that was a low point before our gap down. That's about where we keep topping out more recently here. Now you can also see that, much like our last chart, we have a downward sloping trend line connecting these highs. It's looking like we're about at that point right now, but perhaps in this case, we are maybe pushing beyond that trend line. We haven't really made a push above that 307 level that represents further resistance though. So a stock that could be on a potential tipping point, you know, even during bear markets, there can be ferocious rallies to the upside. If you're not, you know, keeping nimble with your trading, it can be quite an unpleasant shock here. Nevertheless, RSI still favoring the bears here. We have seen deeply oversold levels here, approaching almost the 10 level at one point during those lows. RSI only goes as low as 0. So a reading of 10 is extremely, extremely low. But now we have backed off above that 30 threshold once again. So that is a rather mild bullish signal at this point, though. To consider our volume profile study, we can see that we're right at the point of control, the heavy trading area. We're also right at the -2 standard deviation channel, which suggests this has been a pretty extreme move in a short time. So if there were a place to look for a supportive area on this chart right now, it would be right about where price is currently. A quick glance at a long-term chart too, a 10-year weekly chart really illustrates how severe this decline has been. But now you can see we are in a longer-term volume
top
mode.
of the orb.
We dipped into a even longer area. The 250 region represents kind of this range-bound area all the way back here. So we did hold at a longer-term supportive area. Perhaps now there could be some recovery.
Okay, and then I want to go back to you, Charles, especially given that point that Rick pointed out with regard to RSI favoring the bears here. Any final thoughts on United Health?
Yeah, so you know what really stood out to me was that when it hit its absolute lows, which is the 52-week lows, it correlated really close with the 5-year lows. the volume had spiked to 121 million shares traded that day. The previous high was around 52 million. And, you know, when you take the 30-day average, it was only at 19 million. So, you know, seeing the bounce on that day really pointed out two things to me. That big money was cashing out and taking profits, and big money was buying in to chase after value. And we haven't even sniffed those lows since we've actually traded on that day. And this is what's really making me, you know, take a more of a bullish thesis, because we've been holding off of this low. We're seeing more buyers coming in. The upside value is incredible. We're in a bullish environment. Yes, there's been news articles. There's been extreme controversy around this stock. But again, any positive catalyst, that upside return is going to be really, really good with very limited downside risk, in my opinion.
Okay, all right, so let's talk about your final trade on your list. You got First Solar. It feels like there's this kind of push-pull for First Solar, and you had a big spike a couple weeks ago. What's your view on where it goes from here, Charles?
Yeah, you know, that big spike told me that a lot of the shorts have gotten squeezed out. Now, it looks like they've repositioned a bit. You know, this is a pretty tricky play because there's certainly news and sentiment, and it's really, you know, it's a name that was more popular years ago as opposed to in recent times. But, you know, there's been this a bit of consolidation, coiling after this big pullback off of those highs. And usually that signals that buyers are trying to buy in off of this pullback and rip it higher. The only issue is that this has always been a heavily shorted stock. This is a heavily shorted sector. Some names like Sunrun, RUN, and SEDG have short floats of around 30%. So think about 30% of their entire, you know, shares available in the marketplace being shorted. It's pretty clear the sentiment, you know, I guess residually over the entire sector. But that also makes this a prime opportunity for a short-term play. Again, we just talked about that explosive run from 130 to nearly 200. That had to have been manufactured by, you know, short-term demand and shorts getting squeezed out. We could see this possibly take place at right around this 160 price, where there could be a, you know, maybe not as significant of a pop, but enough fuel to bring it up to around 173 to 180. And I think that's really our short-term target on this 160 breakout. I'm looking at 152 as the floor. If that floor breaks, then I'm actually looking for the shorts to take over and drive the stock down as low as 142 to 140.
Okay. All right. So, Rick, take us through what you're noticing when it comes to the chart for First Solar.
Okay, well,
one that seems more precarious relative to some other sectors you could choose here, but an interesting chart, very, very definitely here, because the reason I say this is we have a long-term trend line starting here near 306,
Rick,
and these highs here, and then all the way back down here. That was a high point before we had our gap
pull
up,
back,
and it's also a supportive point
yep,
that we held recently.
Exactly.
Notice as well that we repeatedly held a floor near the 120 level. We had a big gap up. Now we had a pullback. So to kind of give the other perspective then, I would say we filled the gap and we moved a little bit below it here. We're holding on near 153 for right now, but we are also holding on near our yellow 21-day EMA volume, or excuse me, RSI is still above the 50 midline, holding on to its green line there here, but we're not really making too terribly much progress during the past week or so. That 180 level, right about here, that represents where we had our gap open up and then a breakdown once again, also fairly close to the highs from this old range back there, and then the lows previously there. So you can see how
pull up the weekly, Rick,
kind of come back into prominence over and over again sometimes. So we can also see here
another knife
control down here near our heavy trading area, our range 130. We can also see that where we topped out matches up with another node near the 200 level or so, 195, 200. So this area would be the point to beat that 201 level.
All right, that's the point to be right now. Shares First Solar higher by 2%. Thank you, Rick. That's our very own Rick Ducat and Charles Moon of Prosper Trading Academy. Rick Ducat, lead market technician here on Schwab Network. Coming up next, we're going to spotlight the rules and mechanics of the equities market, why it should matter to investors. We're talking about the plumbing and how all of this works. We'll be right back.
Do 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 do.
traders, the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends.
Get ready, double bottom.
But actually, well, this is Wash at Wash Stock Talk. But actually, today I'm Charlie Sheen. Breakdowns on stocks.
What's my dog?
Man, this looks like a good one, guys. I'm really a winner here. This is looking good for me, man. The tiger in me. Oh boy, come on, go up, go. Oh no, don't go down. Don't go down. No, please, it's going down. I gotta sell. I'm almost broke. Come on, I'm gonna sell. I'm freaking out, man. My tiger blood's gone. I can't take it. Oh, I feel much better. Come on, go back up. Stock's going up. Oh, no, it's going back down. Oh no, it's going back down. Panic. Freaking out, man. Where's my dog? Here. I'm freaking out. Oh, help me, Lord. It's going back down. Oh, it's coming back up. I'm a winner. People's gotta love me. I know I can do it. Oh, the Charlie Sheen incident that got to me. This is Wash at Wash Stock Talk. Don't ever get in a stock that you can't get out of.
Crowd's going wild here at the sports arena. We got two hammers and a triple bottom on the 1 minute. Let's do it. I think I'm going to do it. We're waiting. Come on. You can do it. $4.50. $4.30. Are we going to touch the bottom of the orb and the megaphone? That's the question. We have no support right now. We could jump in small and grab one, and then grab two if it pulls back. So $4.30 for the first one. China. 2 weeks ago, China was in a grave economic danger.
Count to 3 and trade with me, but count to 4 to make much more.
Yes. Come on, baby. I had a great burger today with broccoli. We would love to see you bounce up, sir. Don't be mistaken, 'cause I ain't faking. I never fake it when I make love to you, honey. You know what's best, because I'm from the West. Let's do it. We're about to hit the orb. Let's hold it tight. I'm down right now. Give me my rights. I've got to add on right here. At 360, my dear. Come on. There it is. $3.60. This is exactly what I said to do. So I've got 3 contracts, one at 430 and 2 at 360. 360 will give you a good view. Just walk around too. We got a dragonfly. Some might call it a small hammer. I don't want to spend no time in the slammer. Let's break out of the snake. For heaven's sake, let's bounce up to the 9. I promise I won't walk the line. We'll make it to 21 EMA. I went in small, and I added at the orb. I'm up and I'm green right now. can take some profit once you hit the 9. But I'm holding this sucker to walk the line. 59.20s. I've got a good average. Let's break this 9 to 21. Woo! The Trader's Waltz. Come on, baby. Don't let me down, you clown. Well, I don't want to stop out. As long as we're above this orb. If we go below it, I'll probably get out of the trade because I don't want to lose money on it. Oh. Come on, man, do it. We're at 410 again. I want to win. We're at 420. Time for some baloney. Break the 21, please. We're at resistance again. There's 440. They give me about $6 on this baby. We just broke the 21. Just in time for a live concert. We just broke the 21. We are at it. Why'd you hang up? We're at 460. Three white soldiers in a row. Let's go. Go, go. How we broke the 21. We're just starting to have fun. We broke the 21. Let's run it up to the 63. Let's make it there before I pee. Don't go back, I might have a heart attack. Don't go back, I might have a heart attack. Funky leave. Jesse, you're having bad times? We're at 460 now. Take profit here if you want. But I want to see if we can break these next moving averages. I might be pushing my luck.
You're pushing your luck, little man.
Yep. Come on, baby. I could get out of here at 4:30 and be okay, but I should have took 360, 460. I'm gonna hold on. There's 450. We're at 450. Yeah. $460. There we go again. Let's go. Break it. Oh, 470. Come on. Anybody take his trade with me? Took some profit in my calls today, heading over to the LFA. Wanted to put my feet in the sand, give me some, what do you call it, pina colada in my hand. I bring an instrument with me to the beach on this holiday? Bavaro Beach in Punta Cana. Jimmy doesn't want to overtrade. So far today he's made it in the shade. Just took $130 off the table when I was able. Catching the bottom of the orb. Get ready again.
Count to 3 and trade with me, but count to 4 to make much more.
We're getting ready. $3.20. Let's go. $3.20. Let's go. 59.20s at $3.20. Snake, breakout, pull back, boom. Snake, breakout, pull back, boom. Okay, are you getting sick and tired of me? Someone say yes. Richard likes it. So what do you think about that, Magnificent? $370. $370. $420. From 620 to $100 a contract. 420 from 320 is $100 a contract. We just hit the 63. Oh my, oh me, oh me. Okay, I think I've had enough of it too. God darn 440. Retail traders, may I help you?
Hello?
Yeah, what's up?
Good morning. This is Jody from House Marketplace on a recorded line. Elizabeth, I am calling because I see here you did not receive the subsidy through the Affordable Care Act. You're still in misery, correct?
Yes, ma'am. And you are also on a recorded line.
And do you have Medicare, Medicaid, VA benefit,
No.
employer coverage?
No.
That is great because you might be qualified for a health insurance subsidy. Elizabeth, I have here the licensed agent standing by to review those new available options in your area that you may qualify for. Let me connect you now, okay?
Well, I'm busy right now. You're on a recorded line live on YouTube.
Okay.
You could go to Retail Traders. Oh, you hung up. How dare you? Snake breakout pullback boom. $470. Damn, I'm making money today. And here we go again.
.5% for Q2. Everybody and their mother is going to say, look how great the economy is. And that's going to be a little bit of a problem. So I feel like you just have to still say,
oh, come on, Green.
If it's a true all-in moment. But I do believe that like left tail risk or basically downside risk is probably being really underpriced and probably cheap in order to hedge that type of that risk over the next 2 months or so.
So
I'm
with
gonna
that
go
in
get me a
mind,
cup
then,
of
it sounds
chocolate.
like tactical positioning is sort of where you're at in terms of being nimble, but also I would argue probably risk-defined, maybe a little bit smaller exposure than at other times if you are looking at it more from a trading perspective. Investing, I think the best argument to stay invested is what we've just seen over the last 2 months. A lot of noise, but in the end, on balance, not a lot of movement from the beginning of the year now. So it does make the argument for just kind of weathering that noise. What I would say, and I want to get your final thoughts on this before we take our first break, Kevin, is you talked about are we going to have a 2022 style move? And perhaps we just move so quickly in the first quarter that you don't need to have those multiple legs lower to the same extent that we did in 22. But I would argue that, hey, yeah, we had extended valuations, but they can correct through time as well. Is it possible that your underperformance is more prolonged, and that's how we see this correction, as opposed to a rapid repricing that sees, dramatic valuation shift and then people step in, kind of like we saw in April? Maybe you have sort of this slow grind sideways for who knows how long, and then earnings kind of catch up, and that's how you get this repriced valuation.
That could be the case. What I've seen, we usually don't consolidate for too long. Either we consolidate, break higher, or we consolidate, break lower. It doesn't seem like the market's really willing to keep dollars at work if we're going to have a trading range. And let's call the trading range 150, 200 points in the S&P 500. I think that's a pretty decent range that we could probably trade within for, let's say, a month or so. But I think at some point you're going to have individuals and traders saying, okay, this is stalled out. Is it stalled out because the bears can't knock us down and let's add more dollars and move higher? Or is this a time?
Okay, get ready again.
We get above and we hit that all-time high and we crack above that all-time high. You're also going to see a flood of dollars being put to the market here, which will create a little bit of a squeeze to the upside as well. Once again, I just look at downside. I look at risk that's out there. I think downside risk is still prevalent. And if you kind of look at the performance, the stocks in the sectors that have been able to perform since the lows have been, the communication services and technology, but some of the other underloved ones as well. Industrial's doing pretty well. If you look at even staples pulling up pretty well. So there's probably some value areas in the market where you have lower beta but still have outperformance compared to the broader equity market. And I think that's going to be the key trade here moving forward. But I'm not sure if we're going to, if we stall out for like a 2 or 3 month period, I feel like that's actually more of a risk to the downside than an upside.
Hey, Kevin Green, we're at the top of the orb. Prepare ye in the name of the Lord. Where is today's Bible verse? $2.80, if you can get it. Learn. Grow in knowledge and understanding. Matthew 11:29. Esther, Jewish cousin of Mordecai, who became queen of Persia, Isaiah 2:7, using her position and great courage, she saved her Jewish people from destruction. I'm going to clean this up. We've got a support here at 58.80. Let's look at the SPX. There's nothing. Oh, here we go. The 2 minute on /ES. Right at support right now. Okay, we're at a double bottom here. Come on, just cut that stuff out. Where the heck are you? I hate that sound. Where's my little round thing at? Where's that? Can't find my little speaker thing. God, shut up. Where's that? Huh. No. I bet you it fell off the table. So I don't see it anywhere. I'll look for it later. I can't deal with it right now. Come on. It's annoying me bad. There it is. That stopped. Now we're at 185. Jeez. Big knife on the SPX here. I'm stuck in this one at 220. And we broke below support. This don't look too good. Let's see what they got to say here on CM. CNBC probably not even talking about the market.
Sitting in the room. What are you seeing in terms of the
No,
IPO pipeline and
they're
what it
not.
takes to go public? Are public
And skills in the biz.
Actually,
It's like they have a blind eye.
Yeah, Schwab.
Well, I'm going to add on to this a lot. Kind of jumped way out of the money right now. Okay. Jesus. We're at 1:15. I got to use the restroom real fast. I want to be here watching this rebound. That's a pretty nasty sell-off. YouTube, anybody see what happened here? We'll be right back. No. Okay, we've got the first sign of a reversal. Come on now, break it. $275 and $130.
I know that, it's expanding into 5 different European countries, so there is still a growth potential for Lulu, and it certainly can continue to expand its presence there. But
I think this girl would be fun to work with too.
See this kind of flatness and lack of newness, at least in the excitement levels among the U.S. shoppers and U.S. spenders, especially ahead of this earnings report. The bar is considerably low, I would say, and so a lot of times we like to look for divergence opportunities here, where we've got a low bar and maybe
let's talk about the SPX.
Expectations can beat on a good but not great report.
Come on.
I don't necessarily think that this is the
my odds, I'm up right now.
So if you had that earnings score, then Megan, real quick, is it in the negative, I'm guessing?
It is in the negative. We're not officially bearish, just because, like I mentioned, that score or the expectations, the bar is pretty low. But I think that our data, if you were to take a bet, it definitely leans more to the bearish side, which is a bit odd for us because this was a name that consumers really loved. It had one of the highest sentiment scores in our data as a whole, and now is somewhat normalizing. So just something to watch out moving forward. Another area we haven't really hit on are those min sales, and we're seeing a little bit of a sign of weakness among interest there, and that has also been a growth driver of late. So a couple of red flags popping up in our Lulu data.
Unprecedented in many ways for a company like Lulu. Megan Brantley, VP of Research, LikeFlow.com. Really appreciate it. You have a great weekend, and thanks for the setup. Lulu, of course, earnings next week. Kevin, now you get the fun job. What's the example trade look like in this name? And that has certainly been known to make some big moves in both directions around these events.
Yeah, just given the fact that, a couple of things. One, the technical setup looks like it is going to potentially break to the downside. There's a gap to the downside as well, and I think Megan is absolutely right. They do have some headwinds, especially when it comes to the competition. The only thing that's a good thing for Lulu is that their exposure to tariffs is actually fairly low, and I think that's another reason why maybe you saw some buyers kind of getting into this name first when we had a lot of the uncertainty. But looking at the trade setup here, I'm actually looking at a bearish put spread, buying the 310 put, selling the 290 put, expiring on June 20th here, doing this for a debit of $8, so that max loss potential up to $800, with a max profit potential up to $1,200, and that's if the stock's below $290 at the time of expiration, with a break-even point of $302. Now, obviously, you're going to need to see a move when it comes to the stock in order for this to really try to be profitable. But once again, if you look at the technical setup here, there is a gap sitting there right around that $300 level, and if it does not hold, then you can see maybe a little bit of a vortex kind of opening up when it comes to the downside pressure. And that could also be provided if earnings come in a little bit light.
Well, I'm looking at the trends on an earnings basis. 6 of the last 6 times it's reported earnings, it's been lower the next day. Now, varying degrees. The biggest move lower being nearly 20%. And then 2 quarters ago, it was basically unchanged. It was down 20 basis points. So a big spread in the performance, but all of them a negative number in terms of the next day's performance for Lulu. The average move over the years is around 6%. So well inside your break even, or outside your break even if it does break to the downside, and just move what it's averaged to move over the years around earnings. So risk-defined bearish strategy in Lululemon on the heels of some disappointing data from the team from Likefolio. We're going to take a short break. We get back, we're going to talk one of the newer players within this space, footwear company by the name of On. We'll look at the parent On Holdings, stock ticker On right after this.
These things are going to be worthless. What's Mr. doing?
The hell did I miss?
Looks like the whole market went down. I'll back at
Trading
support
at
again.
Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated.
Tesla went back to support.
You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market. Alex Coffey joined by Kevin Green. Kevin, S&P's trying to stage a bit of a rally, but kind of working their way back here, sitting around 58.50 in the S&P 500, trading a little bit below that, kind of bounced. What do you make of this headline? What do you make of this move? Just kind of classic intraday breakdown?
Yeah, we are seeing a breakdown. Obviously, the news headlines is not really what you want to see, especially when it comes to China here. So you did see the market
So it's China.
try to rebound, but I would just be kind of cautious here. It could be a little bit of a counter trend, maybe some short sellers buying back here, and then maybe we do see the market continuing to accelerate. So it's unfortunate news. It's month end, so anything can happen. You kind of talked about that at the top of the hour. You know, one thing to note, this morning did see flows going into the 58.15, called that out on Morning Trade Live. So if this does get a little bit more aggressive to the downside, 58.15 on the S&P 500 is the area to kind of focus on here.
Makes sense, I guess, too. The NASDAQ be the underperforming segment here. NVIDIA all but giving back and then some the gains post earnings. So you can see the tech sector as the area feeling this the most, and I guess that makes sense. Unless you got any other thoughts here on the macro front, we want to go back to the retail. I'll give you one last chance. Anything else to add?
Yeah, no, you don't like the trade setup actually for NVIDIA if it closes here. You're looking at an evening star pattern from a technical standpoint, which actually identifies a potential reversal. So you'd like to see a recovery here for the S&P 500, maybe some of those mega cap tech names. But if this is the type of news actually we're going to get over the weekend, or maybe the market perceives that, I think there's still some risk here that maybe some traders take some risk off the table because of this headline potential that we have over Saturday and Sunday.
This is the interesting type of risk-off headline too, because this is the one that is potentially that sort of stagflationary headline, at least initially, where it's like there isn't the alternative supply chain for some of these things, but it does have that sort of net negative growth impact too if it kind of goes down this path. And so you don't see the Treasury risk-off rally subsequently with the risk-off move in equity. So something to watch, and we'll see how it develops. Let's talk on. You heard, obviously, Megan's assessment of some of these more established players, the Nikes and the Lulus, struggling relatively in this sort of backdrop of a little bit more of a choosy consumer. Where do you fit in a company like On that has just totally went, I don't know, just completely nuclear to the upside here since the lows back in April?
Yeah, I was going to say parabolic, but you did see the pullback too, right? This is a very volatile name. I think the market, especially when you're looking at last year, really valued the fact that obviously they're kind of a newer player within the space. Direct to consumer for them was just taking off. Margins were improving there. And so right now,
you busy?
Have that same type of enthusiasm that's leading up to this level of around $60 or so. I'm not sure as far as the tariff risk for this company or the
your buddies, you mean?
Company, but the DTC, the DCC method for them has been very fruitful, and this goes back to even the Nike side. On was actually able to
yeah,
show
we got a
that
rule around here. Don't call after 8
for that. So they've done a phenomenal job here, looking a little bit
at
at
night.
These current price levels, but fundamentally, it seems like they've been able to right the ship after maybe a couple of quarters of weakness and concerns around consumer demand.
Yeah, we're posting
China news,
here,
I guess, is what's bringing this market down.
Up you see just in the last few weeks with the pretty monster reaction. When you look at this company, though, Kevin, knowing
I got stuck in the SPX
on the calendar for some time, we're sort of left to react then to other players within the space, perhaps analyst
I saw one of them.
Perhaps macro moves. when you start thinking about, trading a name like On, knowing that it's maybe a little bit catalyst light and it isn't
snake breakout pullback.
That's going to be
the 1 minute and the 2 minute
flowed indices. Is that a recipe for more volatility and sort of a vacuum of information, or less?
That's actually a really good question. I think it kind of depends on the macroeconomic environment. For this type of company here,
I'm gonna make a little cup of coffee.
It does pretty well to the upside here. So I think you just have to really follow what the technicals are really telling you.
We'll see if this thing bounces back up. I had it on.
Data for this company, especially when you're looking at the United States. If you start seeing
drop below my add-on here,
inching a little bit higher. I mean, even though that might be a little bit of a cause for concern,
might not be a good idea.
It's actually really beneficial for retail.
Could have got out.
Companies as well.
With a pretty good profit.
Consumer sentiment starting to rebound to the upside.
We hit 190.
Once again, a tailwind for a company like this. So I think you have to pick and choose.
We stayed around 170, and it's still green.
Proprietary data coming from MasterCard and Visa could be a very big driver. But I think this trades more on the technical
for a little bit,
and maybe macro.
About 3 minutes.
Some fundamental valuation type strategies out there, because it's not a name that's really been around for a very long time. It's still trying to find its footing as to the right multiple, not only when it comes to price to earnings, but also price to sales.
Yeah, perhaps running into some overhead resistance, some overhead supply too, back near the highs, of course, now post earnings. It's not a coincidence that it's sort of started to go sideways. They got back into that upper area of the 60s here. It's been sideways almost exactly for the last week. It's pretty sideways today. And when you look at this company, volatility levels relatively now post earnings, if you look at something like, IV percentile on the Thinkorswim platform, relatively low on several time frames, whether that's over the last 3 years, 1 year.
Once I started stop singing, the market went
which I know
bad.
But maybe one that's buying premium, or perhaps bearish in buying premium.
I was on a roll there for a bit.
Kevin, you're not buying expensive.
Yeah, never stopped.
Yeah, so for this trade, setup here, Alex, I think you laid it out really perfectly, especially when you're looking at the overhead supply. I mean, it's pretty much textbook if you bring a candle chart up for this name here. So I'm actually looking at a bear put spread. Buying a bear put spread.
Okay, I'll be right back. I'm gonna get my coffee started.
Doing this for the July 18th expectations. A bit of time for this to really try to develop. Doing this for a debit of $2.95. So that'll be your max loss, $295. Max profit up to $705. So you're talking about maybe 2.5 to 1 risk reward here, with a break-even point of $57.05. Now you will need to move in the right direction, obviously, to the downside in order for this to be profitable. And maybe it doesn't even hit that $50 level. The reason why I picked the $50 strike, though, Alex, is because of the IV spike. And so there's still a relatively decent amount of premium there, even though that might not be the price target that I'm looking at as far as the technicals. Trying to get the move in the right direction. This seems like a trade that you can actually take off before the time of expiration in the event that it does go in your favor. You'll just have to highlight or identify what that take profit level is going to be, as well as potentially a max loss if you do not want to face the $295 potential risk if this goes against you.
Yeah, break even near 57, a little bit of positive risk reward in terms of you can make a little bit more than you can lose, but you need to be right for that to happen. A little bit more duration as well relative to the other examples that you brought to us, Kevin. I think a couple things to consider for that is we went through earnings already, so you don't have to contend with that as you extend time. But with this, especially if you do think, hey, maybe this rally's a little long in the tooth, it's due for a little bit of a retracement, even within perhaps what's a more bullish trend longer term, this could be tactical. This could be something that you're doing around maybe a longer term stock position as well. Kevin, talk to me a little bit about that. I mean, this can of course exist in its own, but these type of strategies can be complementary to longer term positions as well.
Yeah, I would agree, especially if you're kind of looking at, let's say you're holding 100 shares of stock, you can leverage put spreads in order to be able to hedge that position. Now, one thing to note, you are paying for that protection. It's kind of like insurance. You pay it, and if you don't use it, unfortunately, you're going to lose those premiums. You're not going to receive the premiums back. If you do see a breakdown in the stock price, and it does go in the right direction, yes, you lose money on the long stock position, but you're able to offset some of those losses because of this put spread. And the reason why we say some of those losses, you will be capped below $50 for this trade. So if it goes, let's say, to $30 for whatever reason, you will still have some risk exposure for any type of long stock that you do hold. But put spreads are another way for you to be able to get some hedging exposure here, but you got to pick the strikes at the right points that you're comfortable with in order to do so. And so, once again, it only eats into your I won't say your cost basis, but it eats into your break even for your long stock. There's trade-offs when it comes to that type of thing.
When you're looking at, as we kind of transition here, I think that's well put, as we kind of close things down for the hour. Market is near its lows. I won't say it's at them, but right around this 58.50 level, KG. Is this a significant level, whether it's a strike level, flow level, technical level for SPX?
Yeah, this is well from an option standpoint. This is going to be a decent level, not only for 0DTE but just across the board when you're looking at the open interest. So yes, this is going to be something that we contend with. But I find very interesting though. If you look at the price action, it's not very erratic down at these levels, Alex. So that's something to just be mindful of. Usually, once we get to these levels, you'd like to see a quick spike back to the upside like we saw the first bounce. We're just not seeing that right now. So let's see if it's going to be able to hold. If it does fail, once again, looking at 58.15 to the downside as your next major area of support for the S&P 500, and hopefully we're able to maintain some of these gains through.
Yeah, really going to challenge that recent trend of lower mornings, mid-afternoon, final trading days that lead to rallies. This one might have a little bit bigger test, but we'll see where it happens. Kevin, thank you so much for spending the hour with me here on Fast Market. Don't go anywhere. As Next Gen Investing with myself and Jenny Horn is coming up next. Thanks as always, and have a great weekend.
Ooh, Jenny Horn.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Man, oh man, we got some pullbacks.
Yep. Mistered all of them.
No politics,
you know,
no
that,
noise.
that quantum stock that's so hot, that RTTI.
Yeah.
It's down almost 11% today. If it hits $11, I'm buying it. I've already got that level marked out.
RG what again?
RTTI. That Rigetti.
Yep.
That one and the QBTS are the two that always run on the quantum news.
We had news they sold down on an agreement to sell up to 350 million shares of stock.
Oh, they're diluting? Is that
Yep.
what this is?
Yep.
Got it. Hey, hell, even at $11 is still probably a steal.
Yeah, they probably need the money.
It was at 15.5 on Tuesday. What is that? 25% pullback?
It could pull back to 11. Yeah, it could pull back to 11.
Yep, that's what I got the alert set at, is 11.
Yep. That's a good spot.
Yeah, Archer, that ACHR, that other one that is always in the news, those flying cars. So it was at 14.5 last Friday. It's at 9.90 right now.
Thought I had one on my watch list here.
alert set for 9.
QSI.
I'm gonna buy it there.
Yep. Probably just helping you out, getting you in some bargains.
Mm-hmm. Soundhound is at a level right now.
I'll go get my coffee in the water now. I'll be right back.
Next Gen Investing, and of course, happy Friday. I am Jenny Horn alongside Alex Coffey.
Jenny Horny.
Actually, some significant pressure today on the back of what was a good PCE number. I mean, that was where I started my day. So weakness today. S&P is still tracking actually to close the week up about 0.8%, but more notable than that, at least, as this marks the end of the month of May, which has been a wild one at that, up 5% in S&Ps for the month. So that in itself is I think more of the incredible move outside of course, this week.
Yeah, and we've seen these final trading days and final trading weeks of each month and quarter be increasingly volatile. Like, so many of the final trading days have seen weakness earlier in the day. And then whether it's, big passive pension funds or, whatever it may be, that sort of, systematically purchase things, and they do it maybe at time intervals, at particular times of the day, seem to steamroll the market at the end of the day, and then really weekdays turn into green.
Now that's something
that's going to happen today, but I'm certainly going to be
If I remember Jesus saying something about that.
Trade headlines still...
About the pensions. She's a good trader. I mean, I put her in the top of my women's list.
So IWM looks like it's curling. It's in a support zone right now. I'll double check me on it, but it looks like maybe a good candidate. Maybe some IWM calls.
Who wants an A+? Oh, he does. Give Sue an A+.
Shit. Literally just caught him. Don't run yet. Let me get into it.
Shakalaka!
Maybe 5 of them.
Boom shakalaka!
Okay.
I'm in the IWM 205 calls at 23.
Yay!
Out at 28. I think $5 a contract, just like that.
Whoa.
On IWM. Was that 20% in a minute?
Yep. Just need a good little rebound here on mine. I got a real good average. I mean,
You better be glad you can DCA. Dang it, man. The 5860 puts went from $4 to $12.70.
I'll be right back.
I told you this morning when the market opened that puts were way more expensive than calls.
Well, the word thongs is in the Bible, Thongs, and it's not men underwear. They're called straps, Straps. Thongs. Tarry, Tarry, wait, stay behind, prolong, delay, Hebrew 2:3, 1037. Man died of tick/borne, BORNE virus after his brain had blown up.
Oh my God.
I've never heard of that. We got ticks all over this country.
I ain't never heard no shit like that. Brain blowing up.
Mm-hmm. Well, probably an aneurysm, but I don't know. I should read it and see what it...
Oh God.
There we go. I'm getting it back. Come on. IWM bounced up.
That's the calls I got into a while ago.
We had 3 white soldiers on the SPX. I got 12 contracts.
Well, with what?
12 of the 5920s. 3 at 275 and 9 at 130. But it ain't helping.
She needed to hit what, 250?
Who, me? No, better than that. $166. What I gotta get, unless I buy more. I was even, and I was up. Mm. Oh. Yeah.
Grass pollen.
I need mercy.
I'll be back at Power Hour. I'm gonna start teaching myself not to trade, except for maybe the first hour and a half and the last hour and a half.
Well,
This is going.
it is part of the day that gets a little bit harder to trade.
Volume slow, like everything.
It changes though after time. But right now, yeah, you're right. So I guess Dolly Parton's husband died. I don't know when, but yeah, I know when to cut down. Usually I'm going to start cutting down also my trading during that until Power Hour around 1 to 3 Eastern Time. Just at least know it's more risk. Might switch my lunch period around. Dun dun dun. Nope.
A blowout chart. It's up like over 2,000% from those lows here near 584.
2,000%.
Plus 3 standard deviation channel move on our weekly chart. So really quite a sharp, fast move, a V-shaped recovery, very extreme volatility.
extreme volatility. Unfortunately, it's looked a whole lot of like volatility to the upside. So great look at the big picture of Palantir here. And now we look to trade this name for, of course, example purposes, Alex. Palantir is a fun one because, I mean, it's somewhat of an unstoppable force in light of everything else that feels a bit more sluggish and a bit more steady. Palantir is just still like shorting higher every day.
Yeah,
Yep.
and one of the things that makes it fun is that it moves around. Now, the downside to that is when markets move tremendously from when we send the example trade in before the show till after, things can move around in Palantir as well. So I looked at this before the fast market program today. So the strikes may be a little bit stale, but the idea still remains the same. So if you were looking at something similar, perhaps you'd adjust your strikes, perhaps you'd adjust the pricing if you kept the strikes the same. But the idea was to buy a strike that was in the money at the time and sell a strike that was out of the money at the time in the June 13th expiration on the call side. So creating a call debit spread in which the trader would risk half the width of the strike, so they would create this one-to-one risk reward. Now at the time, that was the 127, 133, trying to get that break even near the current share price. Now at the time, Palantir was trading around 129 or so, so it was a little bit above that. And the idea was risk 300 to make 300, break even near the share price, and a stock that moves around as much as Palantir, 130 when it was like 129 was pretty close to it. And so the idea here remains intact, but you may need to shift the whole trade down if you wanted to do something similar in real time. Just a bullish example though, Jenny, the idea being this is a stock that moves around. It has all these big things working that might continue the upside. But because it moves around, some traders would like to create circumstances that they know the worst case and they know the best case, so they can weather that volatility with a little bit more of an understanding of what that might be.
Yeah, and of course a range that you can, it's fairly customizable, so like you can obviously, like strike selection is important, but it gives you a bit more of that range to be mindful of, and also of course controlled risk, which is important when a name is as volatile as Palantir is. Now to shift gears and look at CrowdStrike ahead of its earnings on Tuesday of next week. Another unstoppable force. I mean, again, I think we were all plagued by the day of the death of the blue screen or whatever we were calling
Plagued.
it. CrowdStrike. I mean, actually looking a lot like Palantir, not the same performer on the year, but having a phenomenal month and also a pretty strong week, also modestly here about 0.7%.
Yes, so like Alex and you said, I mean, really a remarkable recovery here. Just speaks to how quickly fortunes can turn in the stock market. And we can see here that for now, this is kind of maybe what the Palantir bulls would have wanted to see more. And what I mean by that is we had an old high here.
Come on, baby.
55. And in this case, we did break above it. Now we're retesting this level. And the hope would be for the bullish crowd that this supportive area would hold and the rally would continue to.
Well, we got a break. I hope we don't pull back.
Intraday high around that area there. We can see our short-term white trend line is still in play here. We are also still above our yellow 21-day exponential moving average here. We've tested it a couple times here. Didn't quite come close the third time there, but we have so far remained above it. The moving averages still appear to be diverging farther apart from each other, which suggests the uptrend is still continuing without too much interruption here. RSI also is keeping in line with its green trend line, for the most part, making new relative highs along with price in the shorter term here. So we'll have to see if these gains can hold on, if this supportive foothold like we were looking for in Palantir, in this case, can hold for CrowdStrike.
Okay, yeah, I mean, I think that the earnings will be, of course, a huge test, but so far it's been a bit of a mixed picture for these cybersecurity post-earnings moves. That being said, though, big picture again here when we zoom out, I mean, another name that has just amazingly so been
Put back to the orb.
Even in spite of like the worst
POTR
day it felt like in quite some time. So what else are you watching?
So right about now, we're near our +1 standard deviation channel. That's one standard deviation up from our linear regression line. So by one measure, the move is already fairly extreme here. If we were to keep moving higher, one idea to consider would be the +2 standard deviation channel. Quite far away at this point, really. It would be a moving target as price continues to progress. Something you could keep an eye on. At this point, though, it comes in near like 528 or so. so. But if we were to move lower, if we were to break through our trend line and fail to hold this 455 supportive area, our yellow 21-day EMA is fairly close to this volume node. So once we start getting below 440 to 430 around that area, that would be another supportive area to consider. And a look at our 5-year chart as well here shows that we have held on to a longer term potential trend line you could have drawn here based on these lows. We are still continuing to cruise upward here. The heavy volume on our weekly chart comes in here near like 375. So once again, a rather wide range of areas to consider, especially given the big swings we've seen in this game.
Yeah, another day that has, again, seen some volatility. It hasn't always been just a straight shot to the upside, but improving here in real time on the session. Thank you so much, as always, Rick, our chart master. And now we look to trade this name for example purposes, again, ahead of earnings, which there's not a whole lot of earnings. I know that next week, we do still have like major names like Broadcom, CrowdStrike, but it's definitely completely. It is. Thank you. I was just trying to find the word winding down. But all of that being said, I do think there'll be even more importance on CrowdStrike because of the fact that it's just one of few names reporting.
Well, I also think it's going to be an interesting one because what has one of the trends been, Jenny? One of the trends has been tightening of budgets and maybe not spending quite as much on software. But what is one area of software that we just made the argument it's probably not getting its budget cut? Cybersecurity. And the fact that they didn't see a bunch of cancellations, the penalties that they've had to pay because of their outage, kind of understood now. Perhaps some of that uncertainty, now certainty leads the way for maybe a good quarter for CrowdStrike. I don't know yet, but we'll see. What I looked at here was an example trade that is bullish though, and one that is risk defined so that if you don't get the upside move, it's okay. You're risk defined, you know that risk going in. But Rick talked like 520 to the upside, talked about this rally being extendable. What if earnings gives it that kind of, added, gas on the fire to the upside here, that added accelerant to continue the party? Look at a 500 call counter, selling next Friday, buying the following Friday, 250 debit. So you're risking $250 in this trade, mountaintop risk profile. So you need it to move towards 500 because this is a little bit, I guess, larger per share stock. You need it in that area. I'm not going to provide you a range, but let's say in the 500 zone is where this one will do better. What does that really mean, Jenny? You need the stock to go higher post earnings for this one to have a good chance to work out.
Yeah, so obviously taking on a more bullish conviction here, and we'll have to see where they'll be able to fare. I mean, because Zscaler are having a really nice session, again, to mention. But we'll leave it there for Chartmaster. Now coming up next, we will discuss the latest with Alphabet as the antitrust case against it does come to a close today. We'll discuss some of the takeaways and really what that means next for a name like Alphabet.
Do-do-do.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Let's go.
Trade brilliantly with Schwab.
105. Break it.
Each and every angle, the whole picture, everything comes full circle.
See, I'm pretty good out of the money, so I'm wondering.
Right here at the New York Stock Exchange on Trading 360.
Just go ahead and take the loss.
Only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the
They got much more longer to move.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage.
Drink coffee and I start to yawn.
Team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
UNH just broke the...
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Investing, it's now time to discuss Alphabet, and right now the latest in the antitrust trial, as we do see that right now be a bit of an overhang on shares today, although tech is broadly lower. So joining us is Diane King Hall, the host of Morning Movers. So Diane, we did get some positive developments on the trust, or the judge hopefully easing some of these issues on Alphabet, but not really reflected in share price today.
No, look, because this is still a headwind. This is the day where you're hearing closing arguments in this antitrust trial that the Justice Department has brought against Google. And several months ago, about 9 months ago, you had gotten that ruling where this judge had said that, yes, he does see Google's search platform as a monopoly and that it abused its dominant position there. But he's asking questions today that may kind of reframe or reshape how this case is processed. He asked whether artificial intelligence should be seen as a new form of search or is it a competing technology. That's a key consideration that could essentially reshape this case against Google and, you know, could create this potential shift in how the competitive landscape is happening or is viewed. So if, for instance, you have AI platforms like a ChatGPT or Perplexity, if they're viewed as new competitors, it could actually kind of undercut the argument of the Justice Department that Google has this monopoly. So their position, the Justice Department's position, has been that, you know, they abuse their position in traditional search, and their remedies are trying to prevent Google from essentially what they see as blocking AI-based rivals before they can gain traction. Although one would argue that they already have some traction. Some people are using, many people I'm sure are using ChatGPT more than, say, Google's Gemini. Now, Google's defense, they've contended that the competition is happening organically, that it's already happening through AI. And we've seen some documentation of that. We'd heard from Apple before that they're seeing more of a shift from search to AI. And so they think that the remedies that the DOJ is seeking, like selling off Chrome, sharing search data, and ending default payment deals, they think those are extreme, and they argue that those are unnecessary. So now what it appears now from the way that the arguments are occurring in the closing arguments is that there's a push for the judge to shift how he's seeing this, and it seems that he's actually considering that.
Yeah, this particular company, we read the headlines, you think about the history. I think many probably are sympathetic to the antitrust claims, but you know, a lot of that's water under the bridge at this point. I look at how analysts are positioned. I look at how big this company's gotten. You know, a member of the Magnificent Seven, huge percentage on a relative basis of these major stock indexes that get so many passive, you know, investment dollars. It doesn't seem like investors are fleeing Alphabet. It doesn't seem like analysts are fleeing Alphabet, despite this overhang, and it's nothing new. What's the sense you get? Is it the positives still totally overshadow this potential negative, or is this a bigger concern that analysts are leading on?
No, I think in my conversations that there is still an overhang, and you see that in terms of capping, even the recovery when you think about Alphabet, Google, compared to other members of
Jimmy's clipping nails.
Some recovery, certainly, since the
I figured you couldn't tell. Is that professional? Or is that unprofessional? They did get a little long here. No what? It's not professional? Ladies, will you please clip my nails for me? My ex-trader friend, she didn't like it when I clipped my nails live.
House.
What's that? Funky doesn't mind.
Did your calls, Jimmy?
Oh, they're moving. Let's go. I did a good job. $120. Come on, baby. Now we're running into another wall.
ES 5890 is your resistance.
Yep. God darn, look at RGC. What a... Well, it didn't last. We've had a pretty good little bounce so far, and it ain't moved that much. We need a boom.
Boom shakalaka!
I fine-tuned the thumbnail. Get it? Thumbnail. Oh. Pull back. Oh. Getting a little too far out of the money again. Step out for a second and I'll be right back. Oak. Well, it'd be nice to have a big breakout. Back to a buck. Almost could have loaded another 12 at 80 cents, and that would really help me out. 1.66 plus 0.80. Oh yeah, I should have probably done that. That'd give me 24 contracts at 123. But we'd have to break the orb, or at least hit the orb. And we got a pretty good wall right here. I think might have to do some sniper trading. What's Mister doing? And RGC had a big bounce. We're at 110. Mister bounced up from the bottom. Today's losers, Gap. Gap down big. And Tall's China. China down pretty big too. And Tiger. I don't think the market's happy with China. Joby. There's RGTI. Percentage gainers. BBAI, today's volume leader. Hims. And let's see if there's any hammers. Upstart. Oh, what's it? CRM. KBH. I think that's housing. Yeah. Toll Brothers. Well, let's see here. On the daily. I think as they're at the daily. No. I got this orb on here at it. We're at $1.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends, so neither do we.
Back at 80
gives you
again.
round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning
Technical
Movers,
analysis. Being in the now.
And tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Welcome to the watch list. I'm Nicole Pedalides.
In generations, and you know the kinds of things that he's found and his people have found. He's brought a group of very smart people in, and they found things that are pretty unbelievable. I have to say that the numbers that we're talking about are substantial, but they're going to be very much more substantial with time, because many of the things that we're working on right now, we're going to have to remember Elon as we find them, but the numbers could double and triple because many things, we don't want to go out with them until we're sure, but we've found things that are unbelievably stupid and unbelievably bad. With the Department of Government Efficiency, Elon's delivered a colossal change in the old ways of doing business in Washington. Doge has installed geniuses with an engineering mindset and unbelievably talented people in computers. I actually asked Elon one time, what's their primary thing? And they have a lot of primary things, all having to do with being smart. But he said the thing that they're really the best at is working with computers, so that they can't be outsmarted by somebody that's not so honest, that happens to also be good with computers, but not as good as these people. But the mindset in the senior ranks of every federal department, and it's really changed. And with Elon's guidance, they're helping to detect fraud/waste and modernize broken and outdated systems. So as you know, we're talking about various systems and changing systems. And, sadly, it takes a long time to do that. You'll change, let's say, a system at IRS and computerize it properly where the job can be done in 1/10 the time, but it takes sometimes years to rebuild those systems. But we've started, in many cases, I will say that this has less to do with Elon, but the air traffic control systems, we're bidding out to the best companies in the world, those systems right now. They were horrible. What the previous administration was horrible what they did. They spent billions and billions of dollars, and in the end, it didn't even come close to working. They tried to hook up wire to copper, and it can't be done. And they just spent billions of dollars and just wasted money. Actually made the system much worse. So we're going to get a brand new modern system. Congress is working with us on that, and we're going to get it done as quickly as we can. But it's in the works, and once it's done, it'll be good for 30 years. But we have a system
30
that's
years?
28 years old and would have a modern computer hooked into a very outdated computer, and they don't hook up. I mean, they didn't hook up. So after spending billions of dollars, they turned on the system, and in never any cases, from local to countrywide, they never worked. More than 75,000 bureaucrats have voluntarily left their taxpayer-funded jobs to come out and really do the job. Countless wasteful and unnecessary contracts have been terminated, and you know that we have terminated many contracts, and many contracts, Elon, are right now being looked at, and it may be 6 months, it may be almost a year in some cases. We're going through procedures, we're going through courts, and we'll remember you as we announce billions of dollars of extra waste, fraud, and abuse. Just as an example, DOGE canceled $101 million for DEI contracts at the Department of Education, $101 million, and that was just a small section of
Jimmy's up 110.
$59 million for illegal alien hotel rooms in New York City.
SPX.
And the landlord never made the kind of money that he made in the last short period of time. $59 million to a hotel.
We're at resistance again.
$45 million for diversity, equity, and inclusion scholarships in
I need
Burma.
$1.23.
Does anyone know about Burma? $42 million
I know about it.
for social and behavioral change in Uganda. $40 million to improve the social and economic inclusion of sedentary migrants. I can say it's $2 billion to Stacey Abrams and her environmental movement. There was $100 in the account, and all of a sudden they found $2 billion in the account. And I assume that's being
I
looked
wonder
at.
how that happened.
I'm not sure, but I assume that's being looked at. Think of that, $2 billion. And then Lee will tell you there's another one over there for $20 billion being spent on another environmental crisis. $20 billion, not 20 million, a lot, not 200,000, which is a lot. So think of it, in her case, you have $100, and now all of a sudden she gets hit with an infusion of $2 billion just before I take office. $20 million for Arab Sesame Street in the Middle East. Nobody knows what that's all about. Nobody's been able to find it. $8 million.
Well, everybody knows about Sesame Street, Donald.
For making mice transgender. So they spent $8 million on making mice
I had a transgender mouse one time. I woke up one day and he was humping on my shoulders.
transgender. And those are better than many of the others. I could sit here all day and read things just like that, but we have a...
Don't you see a need for transgender mice, people? Huh? We're at 150. I'm green. Time to exit the 200. I support the transmitter Jice. Mice 235. Hell yeah. I'm out. Two, 4, 6, 8. Who do we appreciate? God, I thought I'd know if I was going to get out of that alive. I can't believe that. Jimmy was in the panic mode. That was good. I said a couple times thinking I'm going to take a loss. I'm going to take a loss. I just know it. It feels so good to be green. Okay. It's time for a victory song. Funky, did you get that? Oh. So what am I going to play? Trump, thank you for lightening up the market there. Trump made the market green. So I'm going to do a Trump song.
Let's go for a walk. Let's go for a ride. Whether you're shaping up a small yard.
Faster, running way by. Taco trade. Ooh. Rich man is back. Friday by noon. Trump's taco trade.
Still looking for a new job?
Just found out my dad's sister's husband is golfing buddies with the CEO of a great company. So basically, I got a job.
Sounds promising.
Indeed helps you match based on what you know, not who you know.
Oh, thank goodness. I don't even know if he exists, to be honest.
Are you looking to buy a great car, but have not so
$5?
Fresh start from Jim Butler. Look, I know I'm just another talking head, but Jim Butler's 6, 12, 18 credit repair plan is really something to talk about. It's like a roadmap to help you build your credit with a reliable, affordable car. And eventually, bigger and better things. But don't take it.
I can't believe this. Unbelievable. $5 frickin' dollars. What were you saying again, Magnificent?
Boom shakalaka.
Woo! I think I hit a gold mine. $5. Are you kidding me? Richard? I'm happy. I don't know what to say. I can't believe it. I can't believe it. I'm ready to buy my house in Hawaii now. Oh my gosh. Hello. Is this Brendan?
Hello.
Is this Brendan? Are you wanting my 10%?
I'm sorry, I did not get that. Can you please say that again?
You want my 10%? I'll meet you at the hotel. I'll give you 20% of the cut. Is this Franco? Hey, Franco. So will you repeat that again? I'm gonna end up I'm gonna be hearing, this is the FBI. You're under arrest. Unbelievable. That's the way it's been. I just don't know what to say. I'm kind of in shock. You ever get stuck in a trade and just all of a sudden it's at $5 and you're going, what? With an average of 123 with 24 contracts. Ocean El Faro in Punta Cana. But yet you don't learn from it? That's what you are. Well, well. I just don't know what to say. I'm really mind blown right now. I'm here, Jake Paul. I'm here. You just missed a hell of a trade, Randy. I can't stop but keep looking at Trump. I don't know what happened there. I could have been memorized for the last half hour. I mean, damn, look at that knife. All because of China. Snake, breakout, pullback, boom! Funky, remember? Funky says, I'm not going to trade between such and such until power hour comes back. And then, boom. This could have been one of your biggest days. I'm in stock shock. Glory, hallelujah. Glory, glory, hallelujah. Okay, I'm back to normal now. I guess I could have had the radio on. I've just been in shock.
Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Pedalides. We welcome in Dan Jensen.
Genter, President, CEO, Chief Investment Officer, Genter Capital Management. Dan, I'm glad you're here. How are you feeling about this overall market? I'm getting people on here who are giving me targets above 6,000, 60. I had one guest even say 6,600.
Believe him, Nicole.
Are people starting to feel a little bit more optimistic after the V-shaped recovery? Are you?
Yeah, Nicole, I think everybody is,
See, what gets me is when I called the rebound, the reversal, none of these guys, none of them, we were going to go down a lot more, they said. We were going into stagflation, recession. It was going to get real bad. And I said, no, it's not. Now you're calling out a V recovery. Why are you calling it out now when I called it out at the bottom? The bottom. Do you understand?
More than we were at the beginning of the year. Earnings, though they've been, again, downgraded slightly, they're still going to be up 7-8%. And so if you sit in an environment where, say, PEs are fairly valued at basically a 450 10-year.
And I'm not talking about today.
Yet we track earnings from here on at 7-8%, and we pick up about 2% in dividends. I mean, so this is a 10% type environment if you're passive, and if you're active, there's going to be plenty of inefficiencies to add value.
So you're talking about obviously some times that you can get in there and there is opportunity. And so, I mean, you'll talk about some of the catalysts some more. But when I look at a name like Phillips 66, why is that one on your radar?
Well, look, Phillips 66, for a little bit reasons that are hard to explain, just got a little beat up a little more as the energy came back. Energy had a great year last year. It was one of the best performing sectors. Probably got a little ahead of itself, thinking that it was going to be drill, baby, drill, and it was all going to come overnight, and demand was going to pick up. And so as the energy sector has turned down this year, it's actually one of the 3 worst performing sectors this year, that Phillips, which is a little harder to value because it's basically it's in the midstream, came down a little bit harder. But we look at it, it's one of the most vertically diversified companies that are there. They're literally involved from gas stations all the way to chemical refining. They look at having, basically an EBITDA, which is about 14 billion as they go into the end of 26 and into 27. And even at a very discounted PE of 10x. I mean, that's a $150 stock. So that's up, 30% from where it is now at 114. And you collect 4.25% while you wait. That's only getting taxed at 20%. So you're getting money market, really preferred tax rates on a money market cash flow on a stock that's up, has 30% of potential in a sector that's not going away. So, to us, that's it's a good anchor position in your portfolio for energy.
Yeah, you talked about Elliott Management having a hand in there. It's certainly a target of that activist investor. Also, you said the price action could see upside to the 140, 170 level. And noting the yield, all of your picks today have a nice yield. This one, you wrote 4.2%, right?
Yeah, exactly. I mean, I think when you're looking at a market that on an overall basis, if you look at the headwind or the tailwind or the crosswind of the general market, as I mentioned earlier, it's about an 8% market. And so if you can be in a position where you're getting 4% from dividends, I mean, you're starting on the 50-yard line, with regards to what your probable total return is going to be. And as I mentioned earlier, it's taxed at a preferential rate that's almost half of what you're going to get in the 10-year Treasury. So, you're matching 10-year Treasury rates more or less while you wait. You have preferential tax treatment, and you've already locked up half your target return that's reasonable for this year in a company that has possibly 30-40% of upside.
And then Capital One goes in there. That yield is 1.3%, but why Capital One now?
It's just cheap. I mean, everyone is really worried about the consumer. They're very concerned, with regards to consumer confidence and the effects that would have on spending, possible increases in unemployment. We're not really seeing that come to fruition, or at least it's turning, based upon the recent consumer confidence numbers. And consumption is actually staying fairly high. So the credit utilization is, the increase of credit is slowing, but the quality of that credit is improving. There's less defaults. There's going to be less of inefficiencies in that area and write-offs, and that's all good basically for those companies. So when you look at that, they're just cheap. They're trading, at about 1.8 of tangible book value. Normally that would be 2.5 to 3. The anchor that they had basically was the Discovery deal, but now that's behind them. And so they really should be able to move up more in line with a tangible book value that's going to be more commensurate with where they are historically and the industry. And that, that takes us from in the 190s to 250 and maybe up to 300 at even an industry ratio.
Yeah, and last but not least, you have Microchip that yield 3.2%, and you're really seeing some good valuation opportunities in these names too, right?
Yeah, absolutely.
Just kind of sitting here right now.
Is that Microchip is everything that's not AI. And even though we're all focused on AI and it's not getting an AI premium, everything else that happens in the world that's not AI still needs chips. And basically they dominate the landscape. They're the largest manufacturer in that, basic processing area. They were already down 40% prior to the tariff situation. And now it's starting to turn. I mean, they had a big inventory. They clearly have to clean that up. They're getting that under control. They've got a book-to-bill ratio that's now, over 1% again. So the cycle's going in their favor. And we look at it to say, look, if they can make $3.50 to $4 in the next 24 months, this is a $75 to $80 stock. And as you pointed out, you're getting 3.25% while you wait.
Yeah. All right. Well, Tangenter, any final quick thought about next week even?
Well, I think at this point, people should be buying into weakness. There's just no reason to hold cash in this environment. So whether you're going to buy stocks, whether you're going to look at advantageous yields in municipal bonds or corporate bonds, we're in a flat to gently rising environment, and sitting on the sidelines in cash, the train's leaving the station.
Why are you sitting on the sidelines?
President, CEO, Chief Investment Officer, Genter Capital Management. Thank you, Dan.
You missed a ride, buddy.
Still ahead, our panel is ready. We're looking at some of the recent economic data, particularly the PCE print today. That's the Fed's preferred gauge on inflation, showing inflation is intact, right? We know that they're still shooting for 2%. Let's discuss that and more with our panel next.
Why are you sitting on sidelines? That's a dangerous place to be sitting right now.
It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
watch list. We bring in our panel to talk about the recent PCE data, the inflation print that we got in today, really showing some good news. Inflation's been heading in the right direction, but there's still more work to be done, and you have the wild card of how tariffs may affect inflation going forward. Jeffrey Cleveland, Principal Chief Economist at Payton & Regal, and Arthur Laffer, President of Laffer Tangler Investments. It's Friday. Thank you both for being with us. So, you guys bring it, all right? Because this is a topic. We know that we saw the inflation print today and really showing some nice numbers, right? The Fed doesn't need to balk at this print today. In fact, it was down in April and coming to a level more like March 2021, not quite at the 2% that they're shooting for. Art, your thoughts?
Yeah, it was a good print. The back up to the numbers was really good. I like the components. It's reinforcing what we're seeing in core and CPI. So you're seeing a lot of numbers heading towards that 2%,
Okay.
but it seems like they're kind of stalling out at 2%.
We have 9 minutes to power hour.
To come down to kind of really
Bug should start. Bug.
Much lower. We haven't seen that yet, but these are good numbers.
Oh God.
Salaries, I saw. That was something that salaries have still been pretty decent. Jeff, your thoughts?
Yeah, 2.5% year over year on core PCE. So that is the news cycle low, if you will. So we continue to see disinflation. If we get a little more help, I think, from housing, that has been really the stickiest component. And we think over the course of the year, housing within the PCE will continue to cool and inflation could cool off. So, Nicole, if we didn't have this whole tariff threat and the potential for some uncertainty there with prices, I think the Fed would be very happy with the progress that we're seeing so far this year on core inflation. Separately in the report, wages and salaries look great.
Yeah, and that's the whole thing. And we did have Jay Powell and Trump meet this week. They talked about the economy, they talked about rates, they didn't necessarily talk about monetary policy, but they acknowledged what's going on here. I mean, what needs to change, what kind of policy changes? You can't just get rid of the tariffs unless the courts really tell Trump to do that. But for right now, it looks like they're in, and you do still have people with jobs and salaries that are decent. A quick thought, Jeffrey, on that.
Well, we're anticipating some upward pressure on goods prices over the summer, but we think that will be short-lived, and then inflation will resume its moderating trend. So that's good news. That could open up, a possibility of a Fed rate hike later this year. And I think, the other big thing in the report this morning is just that wages and salaries component. The consumer is seeing income growth. And we think that underlies consumer spending, and that'll help the economy continue to grow over the balance of the year. So a lot of short-term noise, but kind of zoom out and keep that in mind.
The big, beautiful bill, this is going through, obviously, Washington, and within it are those tax cuts that were implemented in Trump 1.0. Biden's administration kept those tax cuts in place, and that's something you're concerned about, Art Laffer. Tell me more.
Yeah, so I'm in Nashville, so I call it the Obama bill. And we have to get the Jobs Act, 2017 Jobs Act, made permanent, because obviously if those expire at the end of, I think, next year, that would be a huge tax increase that would definitely take the bloom off this economy. Now, I know that's next year, but the way Congress moves, they got to get acting on it now. And if there's anything that's in the Obama bill that they've got to pass, that's it. It's the making permanent the 2017 Jobs Act.
And also, Jeffrey, as you talk about consumer spending, GDP. We've gotten in so many prints. You mentioned housing. Tell me some of the prints that stood out to you recently. Maybe some of the stats that we can walk away with that stood out to you, Jeffrey.
Well, I think yesterday in the weekly initial claims report, so people that are filing initial claims for unemployment insurance, that layoff proxy is still quite low historically. But one thing to keep your eye on is the folks filing continuing claims. That has crept up slowly to a cycle high. Usually, Nicole, that's a precursor for a rise in the unemployment rate. So we're keeping a close eye on that. It's not significant deterioration, but it's worth keeping an eye on that. I think maybe at the moment people are too fixated on inflation and maybe too fixated on the budget stuff and not keeping an eye on the underlying health of the labor market, which I think is the linchpin for the global or in the U.S. economy, really.
Yeah, and some of those claims had to do with end of the school year. Those get factored in. The GDP print, which was negative, had to do with the imports, people rushing to beat the tariffs. So that GDP print, which was negative for the quarter, again, slightly better, but still negative. Jeffrey, what did you think of that?
Well, I think Q1 GDP was negative. Everyone knows that. But it's possible, Nicole, Q2 could be a fantastic bounce back. So right now we're anticipating, based on the data, all this data that we've talked about, it's possible GDP will grow 3 to 4% in the second quarter. So you'll get a nice bounce back, a boost from trade. The consumer holds up, that will help. So that's something for people to keep in mind.
All right, Art Laffer, Jeffrey Cleveland. Thank you both so much. Great to see you both. Thank you. Have a great weekend, gentlemen. And thank you, friends, for being with me here on Schwab Network on the watch list. I'm Nicole Petalides. Glad you're able to join me every single day live at the New York Stock Exchange. You can get our Schwab Network app. It's available in the Apple App Store. 24/7, schwabnetwork.com. Thanks for watching. Have a safe, great weekend, but keep it here.
Go back to the poll there, Magnificent.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Unbelievable. That's what you are.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
Hey, Sue. Whoa. Whoa. Do you have glaucoma? Oh, yeah.
Only on Schwab.
She says no, sir. Okay. Hey, Sue does get an A. But I don't know if it's an A+. Jimmy gets the A+. But it's true. She'll get the A+. It is now Power Hour. Da-ba-da-da-ba. So who's Captain Ron? It's a movie? Captain Ron, that's what you are. SPX about ready to hit the top of the orb. Funky. We're going to find out shortly. Boom! $6.80. I just feel like I'm done trading. I'll be right back. Oak. Oh, low blow. The crowd's going wild here at the sports arena. That's what you want. Oh. Ah, there we go. Now you're winning. Now you're a winner. Oh, Funky. Look at Funky go. Now we want some funk. Gotta have some funk. Yeah. La-ti-da. That's what you are.
Coming up in the next several weeks, so always news flow with this name, but it's also so actively traded and it's always got such interesting technical setups too. Walk us through what you're paying attention to with the big time stock here in Tesla.
Yeah, so with Tesla, it came just underneath the key 380 level. And again, that's a pivot point from when we were back in December of 2024 before it broke down substantially, right? So we're watching for this kind of level. Do we break above 380? If we break above 380, you're looking at a market on Tesla that could retest the highs at around 480. So again, very big level. You guys have a beautiful wedge that you're showing there. And again, as of now, I would fade this move looking at the big rally up off of his kind of doge backing off. And again, per the chart, we can see again into resistance here. So likely a good fade. First major support should come in around 292. I would consider being a buyer around 292.
Yeah, and it's sort of just classic risk-reward setup, right? Like you're looking at this saying, hey, we're close to some overhead supply. If you're willing to step in and play both sides of the market, a lot closer to resistance than support. If it does tag that resistance, turn around. You got to level quite a bit below here before maybe running into support. Let's talk NVIDIA. We made it through earnings. Initial reaction, despite a really cloudy and noisy quarter and guidance, was higher. Now, some of the macro stuff's weighed on it, but all in all, kind of an unchanged move. And I think regardless if you're bearish or bullish, unless you're super long premium one way or another, a win for all sides just to get through that event without a huge volatility event.
Yeah, and I agree with you on that. I think the market breathed a sigh of relief. It allows for the bulls.
Oh, that's the guy that talks with that one voice.
Even in spite of some
Feds can't do everything.
NVIDIA was generally positive. What was interesting, or what the chart is telling me, is that when we gapped up on earnings, we spiked right into a down-sloping trend line, and it stopped NVIDIA right in its path. And since then, we've seen it pull back.
And the Feds can't do everything.
Also pulling back today again. And what's interesting about NVIDIA today is that if we look at the price action, the stock market sold off.
Oh, you're
NVIDIA
full of
sold off.
shit.
The stock market is basically unchanged now. NVIDIA is still down about 3%. That tells me there's relative weakness there.
Oh, you're full of hogwash. You know how far I can throw you? That's how far I can believe you. You fat lard.
Are comparable.
What are you doing on Schwab? Go back to CNBC, please, where you belong. Who asked this guy to come on here?
A little bit more favorable than the other.
It's an interesting one because, I mean, with Tesla, it's
Yeah,
very
the fans, they can't do everything.
Elon Musk driven versus with NVIDIA, it's much more, with how many chips are being
Keep
bought,
the
what's
liberals.
revenue.
Do me a favor. Keep us liberal on CNBC, please.
Of two totally separate entities. It's not like they're both stocks and you can trade them the same way. In many ways, you have to be more careful on Tesla, in my opinion.
No, you
because
don't,
of the
you
Elon
jackass.
Musk uncertainty factor.
Yeah, and when you look at an NVIDIA, many might say, hey, this is a company that,
Would you miss the trail? Did you miss the ride, buddy? Is that what you're saying?
or hedge the position. This might not be one with all the fundamental strength driving this and this growth AI boom that, some might say, hey, long only in many ways for NVIDIA. And speaking of perhaps long only,
calm down, Jim. Don't hurt him.
Dell this week would have been interesting as this company made a quite the move. What'd you make of this move in Dell, and how's that changed the picture?
Yeah, so Dell's had this monstrous move from about $70 per share all the way back up to going into earnings about $115. And we saw today it kind of spiking up, but running.
Always clean janitorial. May I help you?
Line that you guys have on the screen that marks that high on a downslope. If you extend that back, it goes right back to that high pivot, going back to kind of April of last year or so. So amazing trend line of resistance right there, and that to me tells me that there's likely to see downside here in the near term. It's probably a little too extended on Dell per the technicals.
Don't follow this guy. I don't want to listen to him anymore. Hello, this is Washboardjim with a sneaky snake trading strategy. How may I help you?
Into April, we're kind of riding near the market all-time highs, right? And then all of a sudden the bottom fell out, and they were kind of left being like, holy cow. And so now that these stocks are all coming back to those levels, you are getting new buyers, but there's also people that are saying, oh my goodness, I was down 20% on my portfolio. Now I'm back to break even. Let me take half off just to protect myself, because that was such a shock when I saw the downside. And that's why these overhead support or resistance levels, I should say, work so well, is because you have these people psychologically thinking to themselves, let me protect myself a little bit. I got surprised by such a big down move. I don't want to get surprised again.
This point is such a good one. I always say you find out how big a small position is in times of volatility like April, and it's so funny how often you're comfortable getting put that stock below until it happens. So very, very fascinating conversation, as a lot of these technical setups are setting up for what might be short-term, to Gareth's point, maybe bearish setups. So appreciate it. You have a great weekend. Always a pleasure to catch up. Gareth Soloway, Verified Investing. Coming up next, we're going to look at Costco post-earnings and where everything sits within big box retail. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Market on Close. I'm Alex Coffey. S&Ps were just green for a moment there. We'll see if they can continue their recovery. But for now, our focus on Costco as we welcome in our next guest. And that is a managing partner of Runnymede Capital Management, Andrew Wong. Andrew, happy Friday. Thanks for joining us here at the end of May and post-Costco earnings. What did you make of the quarter? I know we get monthly numbers, so sometimes there's not a lot of volatility around their quarter, but did we learn anything new, and what do you make of kind of the position Costco's put itself in?
Hey, Alex, great to be here. I think Costco delivered another impressive quarter that reinforces its reputation as one of the most resilient and well-run retailers. The company posted 7.9% comp growth. That's a deceleration of 8.6 last quarter, but membership income.
That's what you are.
The key here, since we see tariff headlines on a daily basis, is that Costco isn't just managing through tariffs, it's leveraging them to widen its value advantage. So Costco missed on revenue, but beat on earnings by 4 cents, proving that matters more than pure top-line volume right now. In contrast to Walmart, which announced that it will likely increase prices due to tariffs, and Target, which held prices but slashed guidance. Costco
$9.30
only as a last resort. So I think we got some insights in this earnings report that we saw strategic inventory timing was key this quarter. Costco's earnings,
them things were at 75.
Especially in non-foods, gave it a pricing edge ahead of tariff implementation.
I said I wish I'd have got them at 80 cents when it pulled back, and then it pulled back again, and I sat there for a minute and thought about it. I said, should I take the risk? It's $800 more. Should I take the risk? And it brought my cost down to $1.23. So I'd be up right now. I'd be up almost $18,000 if I held them.
Strategy like that, or is it also sourcing? Are they able to kind of manage this tariff stuff a little bit more because they're
16,000
domestically more so than other companies?
It's all of the above. First, let me address the SKU count. Costco has been leveraging their
24 times
count,
9,
which is
$850.
4,000 items.
$850.
Costco to swap out impacted products more easily. If you contrast that,
I'd be up 20 grand.
140,000 SKUs at Walmart.
Oh, they hit 11.
SKUs at Target. Most supermarkets carry around 30,000 items.
Woo!
It can effectively manage its inventory in the face of tariffs. I guess just to give a little more context into the tariff situation, approximately 1/3 of U.S. sales are imported products at Costco. Of these imports, less than half originate from China, Mexico, and Canada. Goods from China account for about 8% of Costco's U.S. sales. Costco did note in their earnings call that they did see low single-digit inflation in non-food products, and that was the return of inflation that they have not seen in a number of quarters, basically driven by tariffs on imported products. So while Costco does have exposure to tariffs, particularly on goods from China, the overall impact is
$13.50
due to its diversified sourcing strategy. And as you mentioned, the company has proactively mitigated tariff risk by doing some of those things. They have diverted products away from tariff-affected countries. They've boosted procurement from U.S. manufacturers.
My
we saw
gosh.
that in items like mattresses and pillows. And they are working with suppliers to absorb tariff costs rather than passing them on to consumers.
considering all of this, considering the fact that it seems their margins are relatively stable, whether that's due to kind of the growth they're seeing both on e-commerce, traffic, but also just truly from new warehouses that are popping up kind of methodically around the country and the world. When you look at this company, are they also in a position to keep their prices relatively stable, as they talked about, simply because they're growing still and they're able to?
Let's just
kind
say
of weather that a little bit more than maybe
$13.
A company that's
$1,300
Yeah, I think
times
Costco has
24 equals 31 grand.
Stores globally, and they are continuing to expand. It's not a rapid expansion. You know, they're adding like 10 stores here, and that's kind of like for the quarter.
31 grand.
I think one of the key differentiators here is that with predictable.
I need to change the boom and put it right here.
And the rising digital tailwinds.
Boom!
Remains one of the steadiest hands in retail. So looking at memberships, that remains a rock solid anchor in the third quarter. Membership fee income.
That's what you are.
About 4.6%.
Well,
from
heck.
recent fee increases. Paid memberships grew 6.8%, and their executive members now account for 73% of sales, and that's the highest margin, highest loyalty segment. Even adjusting for the fee hike, membership fee income growth remains strong, proof of Costco's pricing power and the stickiness of its customer base, especially among higher income households.
As we continue to look ahead and we see the strategy and it seems to be working, is the place to focus now when it comes to Costco as they continue, I would say, to compete with the likes of Walmart largely and broadly? Is it e-commerce? Is that really where this company needs to? I know they're growing there, but does that experience need to continue to improve? It seems like that was the moment Walmart really separated itself from the likes of Target and became a formidable, true competitor to Amazon, was when they really doubled down on e-commerce and all the things in that space.
Yeah, e-commerce is going to be interesting. I think Costco historically has been conservative when it comes to adopting technology and really leaning into the digital side, but e-commerce comps rose 15.7%. In Costco logistics, their deliveries surged 31% year over year, continuing a multi-quarter streak of outperformance in big ticket categories. They've done particularly well in appliances and delivering furniture and appliances, those big items. So I think e-commerce growth is slightly decelerating right now, but Costco is gaining share, especially in those big, bulky, margin accretive items. And Costco logistics now delivers around 85% of those big ticket online purchases, which is a huge efficiency driver and enables them to really deliver a good experience to their customers.
They're trading at quite the premium relative to recent years' valuation. Some of that's to the growth. Some of that's because, you know, they're one of those retailers that's doing well still. I think many think, hey, maybe limited downside in a company like this, absent some sort of a recession or something of the likes. But how do you see the upside potential? Is it also a little extended, perhaps, and it's going to take a little bit to grow into this valuation?
Yeah, I think that this situation that Costco stock currently finds itself in is a little bit different than in years past. I mean, in the past, many investors looked at Costco as not only a great growth story, but a company that tends to be somewhat recession resistant. I think that one of the risks here is that Costco right now, the biggest risk isn't operations, it's expectation fatigue. Given strong execution, the valuation is not inexpensive. Costco's trading at over 55 times forward earnings, well above its historical range of 30 to 44 times, and the broader retail sector. Several sell-side analysts have raised their price targets to over $1,000, but still rate the stock equal weight, explicitly citing valuation and high investor sentiment. So I think that there is a risk there. If Costco can continue to deliver strong quarters with comp growth and margin upside, it may not move the stock price significantly when the price is it's priced for perfection here.
Having a nice day today. The point well understood and well taken. 4% jump in Costco. Andrew Wong, appreciate you taking the time. Happy Friday and have a great weekend. Runnymede Capital Management. Coming up, it's Options Corner. Kevin Green scrambling to find some new levels to look into the close as things have changed dramatically in the last
Oh, yeah. I'm in shock again. That's Jim on the kazoo. Not sure what I was thinking, but I know I'd had 31 grand in my pocket. And I didn't sell all of them at 5 either. Okay.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with
We have 34 minutes left.
podcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
It's Options Corner time. Kevin Green's joining us, Senior Markets Correspondent for the Schwab Network. And KG, I don't want to mush this rally, but it's become an end-of-the-month tradition to watch this thing turn green from the depths of pretty serious sell-offs. It seems like this is deja vu to me. You make some sense for me using your levels wherever you want to go, but am I watching this movie over and over? Am I going crazy?
Look, Alex, I'm cool with it if this is going to be the trend on every month end. I can tell you that. Let's all put it on our calendars. Yeah, we usually have seen this over the last couple of months here. We have a flush to the downside. Today we had a catalyst, obviously, when it came to the trade talks and some other updates coming from the White House. We saw this flush to the downside. Now, early this morning during Morning Trade Live, we kind of talked about the levels like we do every single day. But that 58.50 level is a key area that we highlighted here. And that's exactly where the market bounced off of. We started to kind of consolidate. You and I were actually discussing that pretty much in real time on NextGen, and then we started seeing some buyers stepping in. But the reason why this is actually very important, we've had this kind of flagging pattern taking place since Wednesday, and today we actually did see that breakout. And what happened with that breakout? We saw some other buyers really aggressively getting into this market, really pushing this price higher. So it's not only the fact that it's month end, but you also have a technical structure that has taken place where we have broken out of, and now the market's trying to obviously push higher. Now, what what could actually happen going into the close here? Could we go back to 5,900? That could be the case. Could we come back and really try to test that upper channel, that white line there? That could be the case as well. Even if we do come back, test it, you'd like to see some buyers stepping in over the next couple of days and continuing to push this market higher here. But on an intraday basis, what could be the possibility for today? I think that's the question that a lot of people like to ask, especially when we have such a aggressive reversal and month end. 5930 is actually an area where we do see some confluence with options positioning on the call side. But I will say 5940 is not outside of the realm of possibility. And the reason why I bring this up, we only have around 25 minutes left to go in the close. And if you look at the 5940 calls right now, they're still going for around $6, $7, which is actually really expensive going into the close with only 20 minutes left or so. That is really kind of signifying the fact that obviously we have excessive call buying activity taking place, but there are some buyers at that level as well. And as we see more buyers
Double top.
attracted to a particular strike, premiums will then go up. We also have this kind of lifting of the market taking place as well. So if we are going to squeeze 5930, first area I'm focusing on, but 5940 is actually a very interesting strike going into the close here. Overall big risk, what do you have? You have month end, you got a lot of trading taking place, a lot of rebalancing for institutional portfolios, for certain indexes as well. So you can see this kind of churn taking place. You get concerned if you do see, obviously, the buyers of those calls selling out and we get this flush into the close here. But this has been a pretty decent rally. I like this trend. I've been marking this on my calendar. I know that you've been talking about it as well the last couple of trading sessions. It seems like the tradition of us failing and then really trying to exceed and making intraday highs on these month ends continues to stay into effect.
KG, I was going to say, and I had no way of quantifying it, and so you just drew attention to me into these zero DTE options that are still priced quite expensive. I was going to say, you reasonably can make the case that we could be 25 points higher or lower from here in the next 20 minutes. And the market's almost priced that way. I mean, if you look at kind of where the 25 delta options are, that's the 59.10 put, and it's the 59.50 call, actually a little bit higher, the 59.55 call now. So a little bit of call skew into the close, maybe reflective of that trend that we're talking about. But that reflects a good 45-point range where the math says 50% chance you could touch one of those levels either way. So, I mean, where are you looking? Are those sort of the roadmaps as to where this could end up? 59.50, 5,900 maybe to the downside?
Yeah, 59. I would say 59.40. I like to be a little bit cautious. 59.50, definitely a round number there, but that's where you could probably see a little bit of a fade. 59.40 seems like.
Oh, I'm looking at ES. So yeah, this would check out.
Yeah, exactly. Yeah, because there's a 10-point, 12-point difference right now just based on that time value skew. So if you're looking at 59.40 for the S&P 500, I would agree with you here. 5,900, we have to be mindful. Once again, there is a pen risk there. You just don't want to see a fade, and a fade can accelerate pretty aggressively. Once one person sells out, everybody starts to see that action, and then you have this domino effect to the downside. What you want to also keep your eye out on is going to be the advance to declining stocks. I utilize the $ADD or the NYSE advanced decline difference here, and we have seen a meaningful difference, especially for today. The correlation is very strong. It usually is strong, but today it's very strong. And the reason being, it's actually market breadth that's carrying us higher. It's not the mega cap names. So as that line or that advancing line continues to move higher, the S&P 500 is doing the same. So where are you looking for other catalysts? What if you do see some buyers actually stepping into the NVIDIAs, which I believe is still down about 2% on the session, if I'm not mistaken, probably a little bit close from there. Looking for other stocks like those mega cap names really catching a bid. That'll really give us a little bit more of a thrust. But if you see that advanced decline line and that white line start to aggressively move lower, that's when you know that we probably will be losing some steam. Also looking at total volume for the S&P 500 total composite volume here, we're probably going to have the largest volume probably for the week. We're on track for that right now. Kind of makes sense given the month-end dynamics. That's also a good sign for the most part going into the close. Hopefully that's going to be on the positive side rather than the negative side here, Alex. And then the last thing I wanted to highlight here before we jet, there was another reason why we needed to recover here today, and that's because of this upward trend line that we've had from the lows, basically those April lows from the Liberation Day lows here. And we were actually violating that upward trend line when we hit the lows here today. And that's not something that you wanted to see going into the weekend. A violation of those trend lines in the past. We have seen some rollovers and some failures. And you can say that we have been in a little bit of a consolidation phase. So as long as we are able to hold for the E-mini S&P futures, 58.35, 58.40, let's say 58.65, my apologies, going into this weekend, I think that's going to be a win for us. It seems like we're going to do that right now, but as we kind of talked about, anything's possible on a day like today. This looks like a pretty decent setup for today's session. You'd like to see those buyers really try to step in.
KG, we're going to catch up at the closing bell. You'll be on the panel. We'll wrap things up. We'll set up next week, but I think it's a good place to leave it until the close, and we'll find out. Do the Bears win this tug of war to the Bulls? As we're basically unchanged right now as this market is chopping around. Coming up next, we're going to look at commodity markets with Phil Striebel. Stick around, you won't want to miss it.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Nice.
Binge watch the market with the Schwab Network.
Here we go. $59.25s at 5.30 cents. $59.25 at 5.30.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back. We're all anxiously awaiting this month-end close for the stock market, but there's plenty of other markets on our minds. And joining us now is Phil Striebel, Chief Market Strategist for Blue Line Futures, and he's got his eyes on some of these other products. Phil, happy Friday. Thanks for taking the time to join us this afternoon. Let's talk Bitcoin, because although the equity market's got a bit of a bid here today, intraday, Bitcoin's been eerily quiet. What do you make of Bitcoin?
Yeah, what do you make of
A
it?
little bit lower. It ran into that old resistance when you
Man, the pen can't carry everything.
January, that double top that we saw just over the 110,000 mark. The market was channeling upwards higher, broke out through that resistance.
We don't want to hear about your stupid Bitcoin right now, okay, mister? We want to break out. Let's stay between here. That's an, oh, no. Okay. Okay. Jimmy's not going to get it right now. 440, 430, so we got to hold here. Okay. Uh-oh. Three black crows. $370. Come on now, I need you. Right now I'm practically even. Let's have a little breakout. We're at $5. I don't think we're going to get it. Give it a few more seconds. Break. There's 510, 520, 540. Yay! Little late reaction on toss. There's 540 right there. I'm going to take it. There it is. 540. There's 560. I'll be right back. Been holding this urination for about 20 minutes.
Where prices could recover. So we
Surprised.
still have a lot of
I
energy
punctured
exposure
something.
here coming into the weekend. One note that I did see is that with the traditional 60-40 portfolio, a lot of people have and underperformed this year and over the last couple of years. Adding other components and small components like gold, copper, silver, crude oil have really dramatically improved those results, and it's something that people really want to, consider doing. And I'm just saying in a small way, not with the future way and thinking of that.
What's a reasonable level if you do get a break lower? Is it this 55 level that we kind of bottomed out in early April? Looks like we tested it again early this month. Is that a reasonable place to say, hey, they get a little bit of a flush for buyers to maybe step in crude?
I definitely think that people are eyeing that level. That was the big washout low, and the market clearly rejected that because once you get down to a certain level and you press so low, producers are going to go, hey, we can't produce at these levels, and then you'll naturally see supply start to dry up. Plus, we've seen recession risk fade. U.S. equities are just not getting only a few percent.
No!
So it just makes sense that
there it goes.
Here, the demand structure should start to come back and bring itself, and I think that's where oil prices go up. The only problem is, the gorilla in the room where the administration is going to come out and criticize any kind of, higher price in the oil market. So it's going to be a little bit of whack-a-mole if we do start to poke up anywhere in the 70s or even above there.
Yeah, super explicit in that space, but I'd almost argue that's kind of the scenario in every market right now. It's like nice performance, kind of gives the leeway for there to be a little bit more hawkish rhetoric. And then as things get a little bit more sour, the dovish stuff comes out. And so it kind of goes across the board. Great setup in the closing of the month here. Phil Striebel, Blue Line Futures. Always a pleasure. Have a great weekend.
There's the big
Coming
drop.
up, it's time for the big picture. The team from Schwab is going to help us close out the month. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
It's time for the big picture. Welcome back to Market on Close. I'm Alex Coffin. I'm now joined by the Chief Fixed Income Strategist for the Schwab Center for Financial Research, Kathy Jones. Kathy, thanks for taking the time on this Friday afternoon to close out the month with us. You know, Treasury markets felt like they had a big test this week. Do you feel like they passed, given all the data we got, all the trade headlines, the fact that we were able to see some stability in this marketplace?
Yeah, I do think it was good news that we had some decent auctions, very well bid Treasury auctions, even a 7-year, which is normally kind of an orphan issue. So I think to that extent it was a positive week. And just ending up without a big move one way or another was probably at least a Pyrrhic victory, because there's been so much news buffeting the markets. Being able to hang in there is a sign perhaps that investors are getting used to some of this volatility.
And getting used to the volatility, which is probably a good thing. It seems that the swings in reaction to the trade headlines are getting smaller and smaller. And not to say that they aren't still swinging and that the headlines aren't driving the ship still here, Kathy, but the fact that we are starting to get a little bit smaller realized volatility, is that a positive step to kind of getting past this tariff stuff and looking at other things to drive these marketplaces?
Yeah, I would like to think so. The problem is we have a lot of other issues also on the agenda that we have to consider. One is the budget bill and the prospect for higher deficits going forward. So that's an issue that the market has to deal with. And then we have, getting to a point where the Fed is comfortable cutting rates. We haven't actually gotten to that point yet either. So there's still some hurdles to go, but incrementally, I think the market's getting accustomed to the volatility.
When we look at everything going into next week, we got through on the equity side NVIDIA earnings. We got through this GDP revision now. We've gotten through incomes and outlays. We've weathered some tariff headlines. As we go into next week, what are you watching in terms of things on the calendar that we can see? Because the Fed, even though when they're on the calendar, they're just not making headlines right now.
Yeah, I mean, next week is going to be all about the jobs numbers. So we'll get the JOLTS report, the job openings and labor turnover survey. You know, what we've seen there is the job openings trend go down. So that's a little bit of a negative sign, but we haven't seen it translate into much higher unemployment yet. So that's something we'll be keeping an eye on. And then, of course, on Friday, we'll get the unemployment report. And the key there really is, does the unemployment rate start to go up, and does job growth moderate pretty significantly? Because that would be a trigger for the Fed to start to consider taking action. Right now, they don't need to take action because the unemployment rate is hovering about 4.2%. Job growth is still reasonably healthy. Yeah, there's some signs of slowdown. There's some troubling signs in weekly claims and continuing claims. So we're seeing it around the edges, but we're not seeing it materialize where it really counts in terms of setting policy. So next week is going to be all about the labor markets and seeing if they're holding up amid all of this turmoil that we're seeing on the policy side. And I do think that there's a risk that we get a negative surprise, because we've had the federal layoffs, which really haven't completely worked their way through the system. And now we're getting some of this cutbacks at the local level as well, and a slowdown in hiring. So the signs are things are slowing down, but we haven't really seen it work its way through the numbers yet.
What would you say would be a substantial enough surprise to be that tripwire that sort of cascades some of these events of, hey, we start to hear a different tone. We maybe get a little bit more of a risk-off reaction in some of these products, whether it's treasuries or equities. What is that number? Is it got to be 4.5%? Are you comfortable putting a number on that?
Well, I don't think it's one number. I think it's a series of numbers. So if we get an increase in the unemployment rate of 0.3% for a couple of months in a row, or even 0.2% for a couple of months in a row, you're starting to edge up towards 5% unemployment. Still relatively low by history, but certainly a big move up from where we've been. And if that is coupled with a slowdown in hiring and real weakness in hiring, particularly trade-related hiring, then what we'd probably see is then the response from the Fed would be, our dual mandate is kicking in. We've got some good inflation numbers coming.
We got 2 minutes
and
left.
The unemployment rate is starting to rise. That builds the case for a rate cut in the fall.
Kathy Jones, Chief Fixed Income Strategist for the Schwab Center for Financial Research.
Not a bad day.
Thank you so much. Have a great weekend. Coming up, it's time to close
Not
down
one
the
red
market.
trade.
Looks like, I don't want to jinx it just yet, we might be trying to close this thing green. We'll see where things shape up in a couple minutes right after this.
Don't worry about it, buddy. We're green. We just now closed. Ding, ding, ding. So, well, not a bad day. I wish every day was like this. It was even a rough day, and it still turned out to be a great day. And the one trade I did get stuck in.
That's really nice. Thank you.
Yeah, thank you very much. Donald Trump in China. So I'm going to get out of here and relax and keep watching resorts. I'm trying to find the perfect resort. I don't know. I'm not going to be in the mood to party, so it's going to be a massage and relax and good food and meditate and think. So I like to go to the party resorts, but not when you're with someone. So we're going to take it easy. I hope you learned something today, YouTube, by watching me. And we'll catch you all later.